Wow, wow, wow. Welcome to day 2 of the Benzinga Small Cap Conference for May. I am Neil Hamilton. I will be hosting track 1, which is focusing on disruptive innovation. And I'm going to make my pitch for these stocks and why this space is perfect to start doing your research on right now. But I want to let you know that there is a second track focusing on the new economy and new opportunities there. So make sure that throughout the day, you are doing yourself a favor. Bounce between the tracks. That's how you're going to get the most out of this event. Don't just stick on one and get complacent. Get what you need, pay attention to the agenda, and go back and forth so you can get the absolute most out of this event. My promise to you during this event, to the retail traders, is that you will remember this event. You will look back on this thing and say, I learned something from that made me money. That's my promise to you. Whether it's listening to a company and learning about their industry, their space, or the company itself and finding a new investment opportunity, or learning about technical and fundamental analysis from our educators. We've got a great lineup of real, no BS, real traders here to teach you how to trade small cap stocks. You will walk away with golden McDonald's chicken nuggets that you can snack on years down the road, and you will come back and you say, I'm so glad I got that 10-pack of chicken nuggets from Benzinga at the small cap conference in May. So that's my promise to you. Another thing that I want to point out is that throughout the day, there will be opportunities to win stuff like a lifetime subscription to Benzinga Pro, which is the best damn due diligence tool on the planet. It's Benzinga's software platform. Online, you log in, it's got your news feed, real-time news, it's got your charting tools, all your technical analysis, it's got your scanner, your screener, all the things that you need to discover opportunities every single day for day trading, scalping, for swing trading, and even for longer term investment. I use it for swing trading and longer term investment. And when I want to know what's going on, and when I see a bunch of people tweeting about tickers and I'm getting FOMO, I check in there and I understand exactly what's going on. It's got a chat room. It's fantastic. So stay tuned because we will be hosting a contest so you can win a lifetime subscription for free to Benzinga Pro. All right, guys, we've got a lot lined up for you here today. Just a reminder, I am here to represent you. All right, the retail traders and also my institutional traders that are watching this right now. Pop open a little tin of caviar. Get your little spoon out. All right, we got plenty for you. There's going to be plenty of information here for you. You're going to hear on the ground floor from leadership so you can get a feel for the cut of their jib and see if you like them as early investment opportunities. And here's my pitch for this track and why this is the best track out of all of them. I do want you to check in on track 2. But I mean, let's face it. This is the superior track. That's why it's number 1. That's why I'm here representing you guys. We are at a time where growth stocks are declining. Let's face it. That's the reality. The market has cycles. The Qs are down. NASDAQ is down. Tech is down. The companies are still fantastic, but the stocks are going down. Now is the time where you find the next big company of tomorrow. Now is the time where you should be looking at small cap stocks, understanding their value and how they fit into the economy of tomorrow, and adding them to your watch list and looking at them like serious portfolio opportunities or investment opportunities. All right. This is the type of thing where folks got laughed at for investing in Amazon when it was just a few bucks. Okay. And those people are laughing all the way to the bank today. So now is the time when we're developing a new low in the market, a broad base, and we're discovering the big Amazons of tomorrow. All right. The internet's going to change. The internet as we know it, advertising methods, all of the revenue models are completely being disrupted right now. So it's very important that we locate these new opportunities, and that's what this track is about. So that's why I'm very excited to be here with you today. So guys, if you're watching in chat, do me a favor. Make sure you hit the like button on this video so that more folks can get in here and learn about it by discovering it on the YouTube algorithm. And if you haven't already, go ahead and subscribe to our YouTube channel. We are bringing this free content to you, empowering investors and retail traders every single day at Benzinga. So make sure you do that. And we got some great guests today. I mean, I got my personal favorite options trader, Brad Weber from Trading Grounds Live, is going to be here today. So if you guys have any questions, no like highfalutin stuff like you've got to learn about like gamma, delta, beta, alpha, and omega. Not the complex stuff. He's not going to waste your time with that. He's going to say, this is how I trade options every single day, and this is how I make money. That's it. All right. So we're going to give you actual actionable education, and then you're going to hear from leadership at awesome companies so you can understand their industry, their space, and why we at Benzinga have curated these companies and think that they are the big disruptors and the big mid and large cap companies of tomorrow. So I'm really, really excited to be here and having all of you guys here with me. Let me do a quick little survey from folks in the chat. Give me a 1 in chat if you already hit the like button to support this stream so that we can keep bringing this content for you for free. Just give me a 1 to let me know. And give me a 2 if you haven't. And then that way I'll send you a DM and we can have a stern talking. We can have a stern conversation. All right. We got a 1 from Pat. Melanie. Okay, yeah, I'll stop clicking them. We have a producer behind me actually who's helping me out today. So I'm gonna take my hands off, hands above the table, and producer Rohan is helping out. So thank you guys for hitting the like. Thank you for supporting the free content coming from Benzinga. It really, really helps. But remember my guarantee: you are gonna walk away with a 10-piece chicken nugget meal of snackable information that will help you make money later on. So stick around for the whole event. And you know what? Not only are you guys going to be learning, but we're going to make it worth your while. All right. I'm going to do some quizzing. We're going to do our little quiz thing. If you guys have already attended an event from Benzinga, Mike L., you and I are going to talk later. If you guys have attended an event from Benzinga like this in the past, you know that we like to do quizzes through the day, test your technical and fundamental trading and investing knowledge. And whoever wins those polls, it is also based on participation. We are giving out lifetime subscriptions to Benzinga Pro, the best damn due diligence tool on the planet. So make sure you're sticking around so you can participate in those polls through the day. Because if you don't, you can't enter to win. So make sure you stick around. All right, first time here. Good to have you. Good to have you. All right, I'm going to stop playing with that. Let Rohan do the little thing. I'm very excited because we've got someone from CoinFund here. And no, it's not just anybody. It's the founder and CEO of CoinFund. We're going to bring him on in just about how much time do we have here? I feel like I'm bloviating like the Razman here. But I guess that's what happens when you give me a camera and a microphone. So in just a few seconds, we are going to bring on Jake Brukhman, the founder and CEO of CoinFund. So guys, please hit the like button. Please let your friends know, share on social, and let them know that now is the time to get on the ground floor to learn about these companies that are going to be the next big, mid, and large cap companies of tomorrow. Investment opportunities and education abound. Producer Rowan, can you please bring on founder and CEO of CoinFund, Jake Brukhman?
Hey there. Hi, Neil.
Hey, how's it going, man?
It's going well. How are you today?
I am doing wonderfully, splendidly. So could you tell us a little bit about CoinFund and yourself?
Absolutely. So I'm the founder and CEO of CoinFund. CoinFund is a blockchain-focused investment firm. Our hometown is New York. We've been in this space for a long time, looking at blockchain technology, cryptocurrency, and just crypto in general. I'm a technologist. I had about a 10-year career in financial technology. I worked as a quant trader early on, and I worked at Amazon as a technical product manager and engineer. And then I was the CTO of a fintech alternative data company where we studied a lot of pre-IPO, technology companies. I learned about Bitcoin in 2011 and went down the rabbit hole. And around 2015, that's when I started CoinFund. So we've now been around for about 6 years. We're a multi-strategy firm. we're a very technical firm. We understand the depths of this technology and the trends that are happening around it. And we like to think that we are great partners to early stage teams in the space.
I love it. I'm really looking forward to hear what you have, especially now. Like, now is such a good time for you to get out and talk about what you guys are doing. So, Jake, if you have a presentation, I would love to allow you to have the space to do that now.
Awesome. I do have one. I'm just gonna sort of talk through it. But are people allowed to ask questions as well?
They are, absolutely. So, do you have chat visible to you right now?
I do.
Yep. So you are welcome, if you see a question, to go ahead and just address it. Otherwise, if I see something and you are in the heat of battle of your presentation, I'll interrupt you and make sure that we answer questions that are pertinent to the conversation.
Okay, fantastic. So maybe I'll just kind of hop right into it.
Yeah.
And first, maybe I want to talk a little bit about sort of CoinFund and how we look at the space. We are, as I said, we're a multi-strategy firm. That means that we have strategies that look at liquid assets. So this would be like high cap, Bitcoin and Ether and other crypto assets. And we also have a VC strategy, and that means we're investing in the early stage companies that are creating some of these blockchain technologies, that are also creating some of the companies that will gain incredible competitive advantages later by using those technologies, underneath. And what is our mission? Our mission is to watch this, innovation curve that's been happening here for about 10 years, and looks like it's just about to start getting some early mainstream adoption. So I want to say, back in 2015, we were looking at Bitcoin and saying, what is there beyond Bitcoin? Are there other cryptocurrencies? Are there other networks? Are there other applications of the technology? And then around 2017, we saw the ICO boom. We saw a lot of companies fundraising through digital assets, proposing all kinds of different schemes and technologies, but really without early traction of any kind in the world. And we were asking, can we find some fundamental value? What does the world beyond ICOs look like? And interestingly, just in the summer of 2020, we finally started to see this really interesting phenomenon. We call it in the space DeFi summer. So this means, DeFi means decentralized finance. That's a movement where a bunch of blockchain technologies are offering financial services to people and starting to compete with the traditional providers of financial services out there, which are banks. They're offering services like exchange of digital assets on chain, lending, borrowing, derivatives, all of the things that we normally think of when we think of financial services, like on Wall Street, but in a manner that is really decentralized, really open, really global. And here's the really important part: publicly owned. One of the really interesting aspects of this from an investor's perspective is that by being a token holder in many of these networks, you're partially an owner. You're able to vote on what this network does. And so now with this third fund, CoinFund is looking at basically early adoption of blockchain technologies. And interestingly, everyone always thought it would come from the adoption of blockchain technology. NFTs can be applied to all kinds of digital content, to in-game assets, to collectibles, to stock photos, to 3D models, to fonts, to icons, and I can go on and on. And that space of digitizing digital content of all kinds is actually really big. And by putting them on blockchains, we're basically making them liquid in this enormous IPO. So I want to, those are some of the exciting things that have happened in the space, and CoinFund has been along, that journey. And I think that journey will now continue into sort of even more broad adoption of blockchain technology. But a lot of people are focused on prices. A lot of people are focused on the liquid markets. What I'd like to point out is that some of the most interesting innovation here are kind of things that most people aren't thinking about. And I want to tell you where I see this innovation really happening. And I think it's in three core areas. I think blockchain will be incredibly disruptive to finance, as we just talked about with, with DeFi, to digital services, and I want to explain a little bit more what that means, and to marketplaces. And all three of those are like incredibly broad categories that capture a lot of companies, a lot of commerce, and a lot of addressable market. So let's think about digital services. When I say digital services, what I mean is, things like putting your data in the cloud, or using a network of computers to perform a computation. These are fundamental services that like all of the startups that consumers use run on. And what blockchain can do is it can disintermediate the traditional providers of these services. And the way that it does that is it opens up these networks, opens up the supply side of these networks, where people can come in and, for example, put their own disk space or put their own computational power on this network and offer it to customers on the other side. And what's the result here? The result is that you have created a marketplace which is facilitated by blockchain technology. It can grow bigger than Apple and Google combined, because onto this network you can put all of the supply side space, or all of the supply side computational power in the world, and all these devices that are out there. And here's the really interesting part: you can make them cheaper in many ways than Amazon. And so I want to kind of give like a very specific example of one network that I really like. And that network is called LivePeer, LivePeer.org. LivePeer is a decentralized network for video transcoding. And what that means is that, when you think of applications like Twitch, when you think of applications like the one that we're currently on, these applications need to go and basically transcode video for all of these different devices of the people watching. And that service is a computational service, and it's usually provided by some big cloud provider like AWS, and it's usually really, really expensive. And what LivePeer does is it opens up that network so that anyone who is willing to put in the time and effort and cost to run a GPU can actually provide this service. And it's totally open. It's based on a token called LPT, LivePeer token. Okay. That token is a governance token of the network. So by owning this token, not only do you have the right to be on the supply side, but you also get the right to vote and and have a say in what this network does in the future. And on the demand side, meaning as customers, what do we get from LivePeer? Well, we get this incredible open API that anyone can use. And it's 10 times cheaper, potentially, than Amazon. So there's this really clear value proposition here. Like, we can offer services, cheaper than sort of incumbents. By the way, the ingenious way that LivePeer is able to do that is because it can use the same GPU cycles that are transcoding video to mine cryptocurrency. And so that creates this subsidy that potentially is really competitive with the incumbent networks. And the other value proposition of this network is it's just totally open. It's global. It passes on some of the censorship resistance properties of blockchain networks, to the users. It's robust. It has better, lack of downtime than systems that are managed by, smaller or centralized companies. And there are all these like advantages that you could get from that. So that's an example of digital services, and an example of like one particular network operating.
So Jake, I dropped the link to that so folks can check it out and try to understand or get a better understanding of the platform and the idea. Would you say this is what is hands down the most exciting thing that you see happening? Is it LivePeer? What, just give us the goods right off the giddy.
Well, I would say, it's the assets that are not speculative assets. So when I think of Bitcoin, when I think of Dogecoin, absolutely, they're in the news. Elon is trading them and everything like that. But to me, as as an early stage investor looking for long-term fundamental value, and trying to find like where these companies will be, most impactful, I'm looking for networks and assets that are capturing value. And so what are those networks to me? Well, I think it's the DeFi networks. It's things like Balancer, which is a decentralized exchange where you can become, you can go trade on it, or you can become a liquidity provider by depositing your assets and getting some of the value, some of the trading fees essentially of the network. And by owning the token, you get exposure to that, right? This is, we're talking like $4 billion today of daily volume going through DEXs, and that being just 1% or so, 1 to 2% of the daily volume of crypto in general. So, what I always say is like, I like to find the tokens with fundamental value. You have decentralized exchange, you have lending protocols like Aave, like Compound, I suppose. I'm super excited about NFTs. We're pre-seed funders of Rarible.com, which is one of the biggest NFT marketplaces. And if you own Rarecoin, you're taking part in a community-owned, marketplace where you can also participate in building this value and collecting those transaction fees. So those are the kinds of tokens that I think are very disruptive.
That's fantastic, and you know what? It's just plain out fun. So you can see why there's a lot of consumer demand and why this would start to work in a broad consumer base. So very, very fascinating stuff. Jake, so that's what you find to be the most fascinating thing right now. Is there anything else that people need to know about CoinFund that you would like to get across today?
Absolutely. I mean, we're a growing team. We're one of the biggest funds in the industry. We're definitely hiring for our investment team. We're hiring for our operations team. We're hiring for our team. So everything in crypto is growing, and so are we. The other thing is, if you're an institutional investor, I think different strategies could be interesting to you in this space. I think we're finally reaching a point of understanding and maturity with institutional investors about why blockchain technology is so important. And of course, if you're a startup, if you're an entrepreneur, and of course, if you're building in the blockchain space, come chat with us. We'd love to learn about your project and potentially invest in it.
Fantastic. Jake Brukhman, thank you so much for being here. I bookmarked every site that you mentioned. I'm so interested in CoinFund and the stuff that you guys are looking at. So thank you for being here with us at the Small Cap Conference, sir.
Okay, thanks so much for having me.
Have a wonderful day. All right, guys, that was Mr. Brukhman, founder and CEO over at CoinFund. Check them out. Very cool operation at the center of a lot of the innovation that is happening right now, leveraging blockchain technology to create the platforms of the future. So what time zone is it in? We are in Eastern time. So if you're looking at the agenda to keep track of when stuff's going to happen, it is Eastern New York / Detroit time. So there you go. Investors, also keep in mind, CoinFund is hiring. So go ahead and check out their website. Now it is my great pleasure to quiz you on your trading and investing knowledge. So what I'm going to do right now is a little screen share. Get your phones out. So I'll give you the pre-warning. Get your phones out. We're going to scan a QR code so you can open up this quiz. So let me get the darn thing going. And then next up, we will have the president and CEO of Oblong here to talk about what they're doing. So just be patient. Boom, there it is. Okay. All right, guys. Blank. Are you guys already answering these questions? How did you get this? Did someone drop the link in chat? All right. Well, you can click the link to get in. I'm showing the results, but using the honor system. Listen to your heart. Don't be a follower. Get your phone out. Look at the QR code. Answer the question, or complete the statement rather. Blank is a method of measuring a security's intrinsic value by examining related economic and financial factors. Not sure if this is really English major kicking in. Not sure if this is really a complete sentence, but I think you should get the idea. And this is just a reminder, taking the quiz enters you to win a lifetime subscription to Benzinga Pro, the best darn tootin' due diligence, news feed, stock market research, technical analysis, fundamental analysis tool on the darn tootin' planet. Trust me, you'll want it. It's worth it. Price valued at, if you were to get an annual subscription, that's $1,404 a year, and people love it. So highly recommend participating and going for the gold on this one. Are you guys sure it's not chart? Are you sure chart is not a method of measuring a security's intrinsic value? I don't have any charts in chat. Ruth asks with a period at the end, what small caps to invest in? I just joined. Well, we have nothing but small caps that are going to give you their business model, show you what their leadership is like, tell you their vision, their mission for the tech world of tomorrow. So I think you're in the right place if you want to find something to invest in. All right, guys. I think you might have gotten the answer. Where do I gotta click to show it? Hey, you guys did good. You guys did good. Let's see if we can get one more question in before we bring on our next speaker. What is a 50 DMA? This is one is a little tricky because we abbreviated it on you. Let me know if you need a hint on what DMA stands for. DMA. I feel like this one is a little bit mean. Morgan in marketing she's being tough on you guys. It's daily moving average, but I think most of you already knew that. Maybe. Yeah. Oh, now I see. I wasn't actually looking at the answers. I guess that totally discounts B and C. All right. Good job to everyone that's participating. And remember, by participating in these polls throughout the day, yes, Kylie, you got it right. 50 daily moving average or 50-day moving average. Brock got it too. Remember, by participating, you are entering to win a lifetime subscription to Benzinga Pro, which is that's over $1 bazillion in value. So make sure that you are participating. All right, guys, just to show the correct answer, it is the average closing price of a security over the past 50 days. That's enough of that. Now it is my extreme pleasure to bring on our next guest from Oblong, President and CEO, Peter Holst.
Good morning, Neil. Thanks for having me this morning.
Hey, it's my pleasure. How are you, Pete?
Appreciate it. Doing real well, thanks.
Great to hear.
Following your polling and chat sessions, pretty hilarious.
Well, we try to keep it engaging. Yeah, we keep it light. Yeah,
engaging. That's a pretty good segue into our business model, actually. So nice job.
Yeah. Ooh, okay. So tell me a little bit about your business and what you're doing there.
Sure. Yeah, and we have a slide deck here. I'm not sure if you want me to start with the slide deck or give you a little preamble. Either way.
Let's do preamble, slide deck.
Sure. So Oblong is in the business of user engagement, right? Maximizing user engagement in virtual meeting environments. And so today, especially today, we all live in this very peculiar world, right? That is, we're all at home, at least until the CDC guidelines changed last night. Mm-hmm. And we've all been Zoomified or WebExed or Microsoft to death in virtual meetings. And as you know, a lot of people, when they get in those sessions, they go on mute and then they click off their video, and then you systematically lose engagement. So unless you have somebody like yourself who is focused on optimizing user engagement because they're an engaging person, most meetings are generally kind of boring, right? And a lot of people check out. What Oblong does is it takes those virtual experiences and breaks them into individual streams. And so Zoom would be a stream, and then you could add Benzinga as a content stream, and then maybe a whole bunch of other live streams. And we allow people to change your computer or your dashboard or your large screens into one giant virtual screen where you can have a lot of data running simultaneously across your entire landscape. Mm-hmm. And what it does is it allows everyone to participate in a session, as opposed to having one person tell everyone about a specific piece of information. And then we can all collaborate, make decisions faster, and create outcomes faster.
Peter, I think I get it, but I want to see it. So I'm hoping to get a preview of that in your presentation.
Sure, you bet. And a great way to think about our business, by the way, is if you're a sci-fi fan, and if you remember the movie Minority Report,
yes,
the technology that Oblong was built on, essentially, yes, taking all that content and moving it around real time, that's what Oblong was founded on, that technology. So,
all right, I'm convinced.
There you go.
All right,
do you want me to fire up the prezo?
Yeah, I would love to.
All right, here we go. So here's the sort of perfunctory safe harbor statement. I won't trouble everyone by reading it today. Give everyone just a quick glance of what Oblong does. As I just told Neil, we maximize engagement in day-to-day virtual meetings through technology. It accelerates decision-making, improves communication, and increases productivity. So here are some of the things we're focused on now, just so everybody gets a perspective of the company. We're in the process of now monetizing key partnerships. We're substantially ramping our bookings from global distribution channels, including our largest with Cisco Systems. We have a pretty experienced leadership team. Many of us have been in technology for decades in some cases. We have about 50 employees, so we're still a relatively small company, but as you might imagine, for a technology business, the majority of our staff are in software engineering and product design. We have a pretty comprehensive suite for a relatively young company. We have a digital collaboration platform. It can be sold as a delivered system into conferencing rooms or executive briefing centers. And we're migrating that product mix now over to a cloud-based service over the next 24 months. We have a pretty broad customer base. We have established relationships with many Fortune 500 companies where we've done proof of concepts and professional services engagements over the years. And our current snapshot, at least as of last night, we have about 26 million shares outstanding, $100 million market cap. Our revenue in 2020 was about 15 million, and our ticker symbol is OBLG. Just to give a sense of vision and what I was chatting with Neil about, here's just a quote from a pretty well-known gentleman at TechCrunch and Google Ventures, really talking about how technology evolves and crops up, and his view of our technology when he first experienced it was pretty revolutionary. And what mezzanine is, and this gives you a kind of a virtual representation of it, it's a scalable collaboration system that can go into extremely large environments, large executive briefing centers and big war room environments, all the way down to compact spaces like your laptop. And today, hundreds of deployments have been done around the world across many Fortune 500 companies. You can see, again, a representation of what it is up there. We can come across different TVs. In terms of our content representation, we can show 7, 8 different streams of content at once. Here's just a representation of some of our customers today that have used Oblong products both in the past and currently. And here's sort of the 3 principles, right? You can decide, you can make decisions faster, essentially, using all of your data. And so whether you get into a nice fancy conference room or whether you're working off your laptop at home, you want to maximize engagement. And the way to maximize engagement is to collaborate. And the definition of collaboration means multiple people engaging at once. And as I just described, today's meeting environment is generally set up as a one to few or one to many talking about a very specific piece of content. So our product is really focused on people on the early stages of a product cycle. So they're all getting together and building a product at once. They all have something to share, right? And so they all want to bring that content into one landscape simultaneously. Where we're headed here in the next few years, we're going beyond the conference room. So our history is in big room environments, doing big proof of concepts, doing some Hollywood movies as well along the way, but taking all that intellectual property and moving that now into the remote world as we do a complete shift to hybrid working, and how that hybrid working is going to look like in the future will be some composition of people coming back and forth to an office. Some people will be full-time, part-time in an office. Some people will choose to stay at home forever. So we want to make sure we touch all of those different theaters along the way. I talked a little bit about IP earlier. The company has over 100 million now invested in technology focused on engagement. We're the only provider that delivers a collaboration experience using multiple streams of content and connecting simultaneous locations geographically dispersed all at once. We have a lot of technology in spatial computing. And what that really means is, concepts that you might see in gaming today, right? AR, VR, multiple display, using gestures, touching content and moving it around. We've developed a wand effectively, which looks like a remote control, which you put in your hand that allows you to grab content, expand it, contract it, move it from system to system. And the whole goal is to get the human being to interact with information in a much more intimate way than it has in the past. We believe content is ultimately the new disruptor. If you look back 40 years, you look at sort of the evolution of how people have connected. They did it over the phone. Then they did it with some very early stage internet-based communications. So Microsoft and WebEx were at the forefront of that. A number of other people piled into that space in the following 10 years. Zoom kind of reinvented the model in the last 5 years by delivering video as part of that app, as part of that ecosystem that is now pretty seamless and easy to use. And we believe our platform and the way we're distributing content and how we're engaging people is the next frontier, the next generation of how collaboration is going to work. Here's a general collaboration landscape. You see a lot of familiar names up there. There's many people that focus on the video stream. There's many people that focus on getting into a conference room today and being able to digitally display things in real time. But there's not a lot of folks out there that really do all of those things and do it over sort of a geographic sort of dispersed environment. Pretty obvious here. In the last 12 months, the market has grown pretty dramatically as everyone has had to work from home. The user base has gone up just incredibly exponentially at this stage. And now the business use of video conferencing and collaboration is pretty much pervasive, right? We probably have over 1 billion users, whereas, probably 13, 14 months ago, it was probably a fifth of that. And so many people have had to learn how to use this technology. They've become familiar with it, and they're really looking for what the next step is because they've got a lot of fatigue, right, as a result of using some of these tools. Our technology, we believe, significantly expands the existing addressable market. So we believe just the virtual meeting space and the content distribution space, which is growing rapidly, is part of a broader ecosystem that is enterprise collaboration. We believe there's 500 million participants right now in the virtual meeting space. We believe there's 100 to 200,000 conference rooms out there that where Oblong's roots are. We're moving obviously up into the remote participant section, but we believe there's a big addressable market for Oblong moving forward. We've partnered with Cisco for the last couple of years to build and design and co-develop some interesting solutions, particularly in the conference room specifically. We've been a partner there since 2019. Obviously, with the pandemic, there hasn't been a lot of activity in conference rooms, in business conference rooms, but certainly the notion of reopening is upon us right now. In terms of Cisco collaboration, by the numbers, as you might guess, from a partner perspective, 95% of the Fortune 500 use Cisco. WebEx is a well-known, well-established enterprise class collaboration solution, and we believe our pipeline is extremely strong with Cisco right now. And in terms of pipeline, our focus right now, as you think about these three quadrants, we've got an on-premise solution, which is a hardware-based solution with our software loaded on it. We've long sold that for many years. We're migrating that to cloud, and we believe this is kind of where our pipeline is going to evolve based on demand. And our ultimate goal is to move the business from a sort of a classic one-time revenue model with some maintenance and annual recurring software to a full annual recurring revenue business over the next 2 to 3 years. So again, I just sort of spoke to this, but our hardware model has been delivered historically. We're now building technology based on customer validation. We've actually we just released a few weeks ago our first very early version of our cloud service. So we're pretty excited about that. Ultimately, we're evolving that to a mezzanine cloud. We believe a mezzanine app will be right behind that. And then we believe, artificial intelligence and machine learning in everything will be pervasive here in the next few years, and will certainly be part of that ecosystem. Just lastly, some of our investment highlights. We're poised to grow incredibly in the next few years, especially as the business market reopens and people return to work. So we have a pretty big addressable market right now. We have a global distribution with Cisco. We're obviously looking for other channels as well, and have some great things going on there. We're building a software as a service offering, and a full beta will be available here shortly. And we believe there's 10x growth anticipated from our cloud revenue in the next 3 to 4 years. We'll head towards a gross margin that is going to be in the 60s. Obviously, the cloud service will be higher than that, but we'll live in both worlds, sort of a hybrid cloud, if you will. And we're executing on the business. We've done a tremendous amount in the last 18 months, in spite of the pandemic, to capitalize the business properly, put the right people in the right places, and we've really started to rehire substantially now, particularly in software engineering and the sales area. So that's us in a nutshell, Neil, and really appreciate the time today.
Really, really cool stuff. Where can folks go now to learn more about what you're doing? Yeah,
go to oblong.com. We have a number of videos on the site with a lot of use cases, right? You'll see a little reference there to Minority Report and some of the things the founders have done in the past, in the Marvel movies particularly. But you'll also see some live business use cases, like business to business use cases from a number of our larger customers. We've done a lot of work with IBM. We've done a lot of work with some of the military. Obviously, you can't see some of that stuff because it's proprietary, but there's probably 10 or 15 videos on the site where you can see how people really interact with data live, and you'll see how fundamentally different the technology we use and how it really just enhances what you do with the Zooms and the Microsofts of the world.
Really amazing stuff. Are you able to touch on any key partnerships?
Well, I touched on the big one. We've had a partnership with Cisco, which has been both a distribution and a development partnership. We have a couple of really cool ones coming up soon here in the next few months that we'll release shortly, that we're really excited about. But we partner with a lot of global system integrators, folks in the IT services chain, broadly speaking, not just in the United States, but globally. But Cisco is certainly our biggest partner, and certainly the most exciting one.
Yeah, that makes absolute sense. So when was that announced, by the way?
Which one? Sorry, Cisco?
The Cisco partnership. When did you do that press release?
We probably announced that a couple of years ago at this point. Yeah, and it's been mostly development. So you announce the partnership, and then you put your head down and start writing code, right, so that you can integrate things in a more meaningful way. And a lot of that has just kind of come together here in the last 6 months. So
fantastic.
Yeah.
All right, so we've got a pretty diverse group here of institutional investors and retail investors.
Sure.
If there's anything that you'd like to leave folks with from an investment perspective, what do you think is one nugget that you'd like folks to walk away with?
Sure. I always think, the company is 17 years old, right? And so it's gone through sort of that classic venture cycle. A lot of venture capital has been poured into this company by some pretty smart investors. And the mission now is to take all that IP and really monetize it. And so the company's roots are really in research and development, and really doing some pretty cool proof of concepts. If you've seen some of the stuff that the company's built for some pretty well-known, companies in America, kind of behind the wall, if you will. It's pretty fascinating stuff how they've used our technology. I mean, if you look at even what Saudi Aramco has done, like the biggest oil producer in the world, they've used Oblong's technology to build one of the most interesting three-dimensional oil mapping systems on the planet.
Wow.
So a lot of that stuff is high-end, super expensive to build, right? You have a big checkbook. Yeah. And what we're doing now is taking all that institutional knowledge and now putting it in a wrapper and in the cloud environment where people can consume it day to day. And we're moving from, like I said, this sort of big sort of high-end room model down to the individual user. Obviously, the market opportunity for the company is the millions and millions, probably now billions of users that now use the day-to-day meeting technologies that we've all become accustomed to. We're not there to replace what those folks have built. They've done a fantastic job of building them. We're there to dramatically enhance them, right? Our mission is, as a guy who's been in this industry for 20 years and pretty much seen it all, I have seen user engagement drop kind of systematically in all these systems over time, because it's join, mute, disconnect on video, and multitask, right? That's kind of what happens broadly speaking. And so the way to stop that from happening is get your small work groups engaged, get people live and sharing content, and then actually the word collaboration becomes what its true intent was, which is let's talk, right? Let's all get together and build things. We have a great customer at Lockheed Martin today. They use Oblong to design their missile systems, to design their space systems, right? So everybody shows up with a different piece of the equation, and they compile it all together raw and live in real time. I mean, it's fascinating stuff. And we're at the front end of our life cycle. We haven't even built our cloud service fully at all yet. So the opportunity for us is really in front of us here over the next couple of years. And I think that's what I'd like to leave institutional investors with is there's an evolution that's happened in this space. I've personally gone through it for the last 20 years and seen every bit of the cycle. And I firmly believe that content is the next frontier. And the company that's best positioned to do content sharing in a fundamentally different way is Oblong.
Beautifully said. Top marks for the pitch. I'm absolutely sold. I just wanted to ask one more question, since we have about 2 more minutes here.
Yeah, go ahead.
So you mentioned we saw the rise of video communication as a necessity in the workplace, driven by the constraints that resulted from COVID-19 in the summer of 2020. Some might say that was a completely new thing, and then others have said that was an acceleration of pre-existing trends. What is sort of your take on the two? Do you see sort of these trends tapering down and us going into sort of a hybrid workplace type of thing, or are you more on the side of things have changed radically just forever and they were already happening, and this was just the shot in the arm?
Yeah, the answer is both, and which is sort of a hedgy answer. But the truth of the matter is, we have been on a slow, gradual migration path for the last 20 years as the advent of the internet has expanded and bandwidth has gotten better. Computing has gotten better, engagement has gotten better, and gaming has been a big part of that, by the way. But the truth of the matter is, yes, did COVID accelerate a trend that was already slowly in motion? No question about it. It radically accelerated it.
Yep.
And so it's now opened up a little bit of Pandora's box. There's not a company on the planet right now, Neil, that isn't looking at their commercial real estate footprint going, how much office space do I really need? When am I going to know the answer to that question? The only answer is, well, I'm going to invite people back to work in the next 6 to 12 months. I'm going to reopen effectively, right? Yeah. And then I'm going to see, right? I'm going to wait and see who comes, who goes, what the traffic patterns look like. And when they come back to the office, where do they come to? Do they go to an office? You're not going to, are you going to drive into New York City anymore for like an hour or take the train to spend 2 hours to go to your office? You're not going to do that. It's not going to happen. So that's a shift. That's a fundamental shift that's not going away ever. Are you going to come because you want to collaborate with your friends and your coworkers, and you want to do it in a conference room that is super digitally engaging? I might come to the office for that, for sure, right? That's an experience that I might come for, but I'm not coming back to go sit in my cubicle anymore. Those days are done. So
wow. All right, fantastic. Mr. Holst, thank you so much. Oblong.com. The site is up there. Check out the stock, OBLG. Peter, thank you so much for being with us today.
Thanks, Neil. Appreciate it.
All right, take care. All right, guys, do we have time for a game? I don't think we do. Why? Because next up we have Redhill BioPharma, the CEO and chairman, Dror Ben Asher is here. Mr. Ben Asher, how are we doing?
I'm doing great. How are you?
I'm doing wonderfully. I'm very glad to have you here at the Small Cap Conference. Would you mind giving folks a brief introduction to yourself and what you're doing over at Redhill BioPharma?
Absolutely, Neil. But a quick question about the guitar behind you. Are you playing sometimes while being online? Or yes.
This is so when I'm doing Zoom meetings at Benzinga, I like to turn off my webcam and turn off my microphone, and then I'm practicing death metal songs on that Ibanez mostly. Yeah, I use that one for the most part, and then this other one over here, that's a Jackson with the Floyd Rose. I just use that one to make loud squealy sounds. So really no music coming out of that one.
Nice, nice. Yeah, I'm a bit old-fashioned Tom Petty and the Heartbreakers kind of guy.
Oh, so, nice.
Yeah.
I love Patti Smith.
Patti Smith, Tom Petty. Yeah, Tom Petty. I'll tell you a little bit about the company. Let me share my screen.
Sure.
Is that okay?
Yes, absolutely. I'll get out of your way too.
That's great.
And if you have trouble, just let us know. It should be just like Zoom, where you're clicking the bottom middle.
Yeah, that's okay. Okay, just a moment.
And guys, while we're waiting for Dror here to get ready, remember we are giving away. I'm echoing, so I'm just going to stop talking. Were you able to get the screen share up, Dror? Okay.
Yeah, exactly.
All right, here we go.
Can you see it okay?
Yes, perfectly. You are good to go, my friend.
Wonderful, wonderful. So why don't I provide you with a quick overview, let's say 10 to 15 minutes, and we'll take questions thereafter. Is this okay, Neil?
It's more than okay.
Yeah. Sounds good. So a few words to begin with. I know a lot of folks are eager to hear about our very advanced opaganib pill for COVID-19. So before I go into the overview, if okay for you, what I will do, I will tell you a little bit about the status of this program, which we started actually just over a year ago, around March 2020, and have achieved a lot since then. So what we have been doing in this year or so is we have completed a phase 2 study in the United States successfully with opaganib for hospitalized patients with COVID-19. We have also shown a complete inhibition of the virus. We have initiated compassionate use treatments in Israel, in Switzerland, and most recently in another European country. We have also struck several manufacturing agreements, completed several independent committee reviews of our study, our phase 2/3 study, which we are about to complete. So I'm happy to let everybody know that we are about 95% enrolled in this study, which is ongoing currently in 10 countries. We're initiating to get over the finish line United States sites and Peruvian sites as we speak, on top of the existing 8 countries in which the study is already ongoing. So very exciting development, about to get over the finish line. We complete enrollment in the next week or two, all goes well, and should be able to announce the results shortly thereafter. To remind everybody, we are a publicly traded company, therefore we cannot make any representation or warranty as to the accuracy of the information. Who are we? We are a US specialty company, specialty pharma company. We are headquartered in Raleigh, North Carolina. We are primarily focused on commercialization and development of GI drugs and drugs for infectious diseases. And we have a very strong US commercial footprint and a robust development pipeline. If you look at our pipeline, at the very top you see our commercial assets, Talicia for H. pylori infection, which we developed in-house at Redhill. I'll talk about that in a moment. Movantik, which we acquired from AstraZeneca last year for opioid-induced constipation, and Mkolo for traveler's diarrhea. As far as our development pipeline, we cannot talk too much for lack of time, but I'll mention RHB204 for NTM disease with a phase 3 US study ongoing, as well as RHB104 for Crohn's disease, which successfully completed a phase 3 study in Crohn's patients, potentially the best results ever generated in a Crohn's study phase 3 by any company. I know a lot of people are interested in our COVID program. So if we look at the bottom 2 rows, you see Opaganib, which is currently completing a phase 2/3 study that I mentioned globally in 10 countries, as well as RHB107, which is another phase 2/3 study program that we are running for COVID-19. The main difference between them is that Opaganib, the study is focused on hospitalized patients, and RHB107 is focused on outpatient patients. This means that we are potentially covering the whole spectrum, meaning a vast majority of the patients suffering from COVID-19. A little bit of perspective on this, many companies have been trying, and there have been thousands of studies that have been completed, ongoing, starting now for COVID-19. But to the best of our understanding, no company, including Big Pharma, has completed a phase 2/3 study or is as advanced as Redhill is with an oral novel molecule for COVID-19 in programs that are running in the United States. We are not aware of a single company that has been that advanced. The closest that we are aware of is a Pfizer pill that is just beginning its first study. I believe they started back in March. So Redhill is the very forefront of research for COVID-19, despite having limited resources, and we are very proud of that. We have been working day and night, continue to do so with a highly motivated small team. Where are we heading? Redhill is rapidly growing with 3 assets that we are promoting already. We are doing so with a sales force of 100 highly motivated, excellent field force, including another 30 people in field support. So a total of 130 people in the field already promoting 3 products with growing revenues. In 2020, we generated over $60 million relative to 2019, where we generated hardly any revenues. What will happen is continued growth through both organic growth, meaning out of our own pipeline, as well as non-organic growth, meaning acquisition of products such as the acquisition of Movantik from AstraZeneca. In the coming years, Redhill will become one of the leading specialty pharma companies in the United States. Market cap is approximately 300 million, and cash balance as of the last reported date, March 4th, was approximately $100 million. Revenues have been growing, as I mentioned earlier. We are currently generating over 20 million a quarter, relative to hardly anything in 2019, and this is despite the pandemic. A little bit more about Opaganib, which I mentioned earlier. Currently completing enrollment in a global phase 2/3 study in 10 countries. Most likely the most advanced drug candidate in the world today for COVID-19. When it comes to orally administered, it's a pill, novel molecule, not a repurposed drug, that is in phase 2/3, advanced phase 2/3 study, including in the United States. What is critical to understand about opaganib is that unlike the vast majority of drug candidates out there for COVID-19, it has a dual mechanism of action. It means it's not only antiviral and works against the virus, but also it's anti-inflammatory. So this dual action is exactly what is needed for COVID patients. What's more, the mechanism is unique in that it targets the host cell, meaning the cell, the human cell, as opposed to the virus itself. What this means is that potentially what we expect opaganib to do is to target and resist resistance developing from the virus, by the virus, through existing mutations and new mutations. We all hear about the South African mutation, the Brazilian, Indian, and so on. We expect opaganib, based on its mechanism, to be able to treat COVID-19 with all these mutations and future mutations as well. We have the ongoing phase 2/3 study, which is about to be completed. I mentioned that. And we also have a positive phase 2 study from a study that we completed in the United States with opaganib for COVID-19. Opaganib completely inhibits SARS-CoV-2, which is the virus that causes COVID-19. In fact, it demonstrated the most potent activity versus all compounds that we tested, including remdesivir. The current study is 464 subjects in 10 countries, as I mentioned. The primary endpoint is the proportion of patients reaching room air. And we have already passed 4 independent committees that looked at the data, and one of them even looked at the efficacy data. A few words about the phase 2 study that we completed with opaganib in the United States for COVID-19 hospitalized patients. We have shown greater improvement by opaganib in the proportion of patients reaching room air. This is important. The numbers are very interesting, 52% versus 22%. We have shown also greater improvement in the proportion of patients with 50% reduction in supplemental oxygen, 89% versus 66%, and higher proportion of patients that have been discharged at 73% versus 55%. Lastly, a greater reduction from baseline of the median total oxygen requirement, 68% versus 46%. I did mention that we have 2 shots on goal, both of them very advanced clinical stage for COVID-19. RHB-107 is our second compound. It's also a pill, orally administered, novel compound with a unique mechanism of action. We are currently conducting a phase 2/3 study in the United States in a COVID-19 outpatient setting. Without dwelling too much on this, I will mention that RHB-107 does have a significant human database that includes about 200 patients in various studies, primarily in oncology studies. And we expect this drug to address a very significant market, outpatient market, which is far larger than the hospitalized patients market in COVID-19, with a primary endpoint of time to sustained recovery. This basically means that we expect RHB-107 to help the patients improve faster on their symptoms. We also demonstrated potent inhibition of the virus with RHB-107. Moving quickly to our commercial assets, Movantik, which we acquired from AstraZeneca back in April last year, indicated for opioid-induced constipation. This is one of the most common side effects of opioid therapy. 40% or even more of patients suffer from that. So it's a very meaningful indication and helps patients in a meaningful way because they suffer a lot from constipation while using opioids. Movantik is well covered by commercial access, managed care by the insurance companies. Moving on to Talicia, which we developed in-house at Redhill. We have launched the product last year. It was approved by FDA in the end of 2019 and launched into COVID effectively with a field force in July last year. So we are just starting. What is critical to understand is that this infection is affecting more than half of the world's adult population. I repeat, it's more than half of the adults in the world are suffering from this bacteria, vast majority of them without knowing them. And about 2 million patients are treated in the US alone every year. And we have very healthy national coverage by insurance companies of about 170 million people. The problem with H. pylori is that it's a carcinogen, group 1 carcinogen. It's the strongest risk factor for gastric cancer. And gastric cancer, unfortunately, is killing about 700,000 people annually. In the US population, it is estimated that about 100 million Americans, roughly 1 out of 3 Americans, is positive with H. pylori. We've been promoting in the field Talicia for the last half a year or so, and we are seeing meaningful growth despite the various challenges, very meaningful challenges that are presented by the pandemic. For pharma as a whole, specifically for product launches and specifically for products such as Talicia that require diagnostic testing prior to prescription. But we have shown significant growth, and we expect to show even faster growth later this year as the pandemic gradually goes away. We have healthy commercial coverage. I mentioned this already. What I want to mention about the uniqueness of Talicia is that it has been shown to be about 90% efficacious in patients that actually adhere to the medication, at least partially. And what this means is that they actually took the drug, or at least part of the drug, during the study. In all comers, meaning patients that took the drug or didn't take the drug or partially took the drug, in our study, 84% efficacy, very high efficacy with Talicia in eradicating H. pylori in our US study. What is very important to understand is that Talicia overcomes resistance, which is currently very high and growing fast among the antibiotics most commonly used for the treatment of H. pylori. So this is a key differentiation. We are very comfortable with our data, very comfortable with our mechanism of action, and we believe that Talicia is well on its way to become the standard of care.
Beautiful, Dror. And we are at time, so final remarks.
Absolutely. So let me say this. To sum up, Redhill is a specialty pharma company, rapidly growing. We are aiming to continue to go it alone. We have everything in place, including 3 products that we are promoting, very advanced pipelines here in red arrows, as you can see. We know what we are doing. We have a highly motivated team. We are going places, and this will be evidenced by our performance in the coming quarters and years. Happy to take any questions if there are.
I don't think we have time for questions, but where can folks direct questions if they'd like to email you?
Right. So our general email is info@redhillbio.com. You will always find us responsive. Thank you, Anil.
Thank you very much, Dror. Wonderful presentation. Thank you for your time, and have a great day.
Thank you.
Have a great weekend too. All right, I'm dropping that email. I'm pretty sure I've got it right. It's info@redhillbio.com. Great thing about companies at this size is they are almost always very responsive to investor questions at their info email. So hit them up if you have any further questions about them as an investment opportunity. All right, guys, let's keep on cooking. Next up, we have BioLargo. Let's get the ticker. Let's get everything up on the screen. We've got Dennis Calvert. How are we doing, sir?
Hey, awesome. Good to be here.
Yeah, I want to be there too. That's a nice looking backyard, my friend.
It's tough living in Southern California, right?
I mean, tell me, man, I'm living right by the Detroit River. It's beautiful out here this time of the year. So it's really great to have you here, Dennis. Would you mind giving a brief introduction to BioLargo and what you guys are doing over there?
Sure. So BioLargo is a sustainable solution provider for some of the toughest environmental problems we face around the world. Been at it a little over 10 years. Early stage revenues, enormous opportunities. Critical mass is achieving, and it's just a great story. So I can't wait to share it.
Beautiful, beautiful. So do you have a presentation for us today? There it is. All right, Dennis, I'll let you take it away.
Okay. So as we said, we make life better, right? It's sort of the overtone of our strategy, which is to do good for the earth, good for people, good for commerce, the trifecta for sustainability, and we're all over it. Very exciting time for the company as well. Symbol BLGO. Make sure you take a look. As you hear this story, you're going to want to do a deeper dive. There's a lot to look at for BioLargo. Multiple shots on goal, a great time in the company. We're almost down to zero debt, heading into expanding commercial activity. And so, again, very excited. Of course, we want to point out our safe harbor. We will talk about some forward-looking statements. And, of course, you need to rely on our 10K and 10Q for more accurate information. So in the portfolio, right, we've been at a little over 10 years. And the way we think about it is we have an environmental group, all things environmental, air, water, and earth, clean air, clean water, cleaner earth. And that environmental group has specialty tools in those buckets with talent, tools, and projects, right, that we offer to the marketplace to really solve some big problems. We also have a minority interest in a medical company that we spawned about 6 years ago. And really it's in the just going commercial stage of preparing for potential sales, spinoff, really kind of take on its wings and get going. It's pretty exciting as well. And we have a license, and we hold about 45% of the equity of that medical company. Very exciting as well. But we're going to focus on the environmental group, which is the core competency of the company. Of course, we're sustainable. We click the boxes on a number of sustainable initiatives for the goals across the world. And that's an exciting thing. We think it's critical for our mission. It all started really with an observation of nature. Ken Code, our founder technologist, he and I connected about 14 years ago, if you can believe it. And there was this great vision, right? Look to nature. Nature will show us the way. Watch how nature deals with contaminants. Watch how nature processes contamination, keeps it safe, clean, and healthy for our earth. That observation led to a portfolio of discoveries and technologies. And the thing that's unique, and I always say about BioLargo, if you're not checking it out every 6 months, you only know about half the story. It's so dynamic. You know, we're expanding with new technology. We're making new discoveries. We're continually filing patents and exploiting our core competency as innovators for science and engineering focus on environmental solutions, right? So watch carefully. This is one to watch. It's built through collaboration. I mean, my goodness, there's 100 stories here. Of course, it's over 10 years of work. There's a couple of really critical ones. INSERC's been one of our largest benefactors. That's the National Science and Engineering Research Council of Canada. For one of our technologies, we got 80 grants. That's 80. It's astonishing. And it's a difficult chore to innovate in a space that's super technical for advanced water treatment. Another one we love, Garrett Callahan's a new relationship. This is one of the leading water companies in America, privately held, 100 years. Extraordinarily customer focused on value and service, and we're partnered up to take some products and some technologies to market together. It's awesome. BKT, we have a joint venture in South Korea. BKT is one of the leading wastewater treatment operators in South Korea. We formed a joint venture about a year ago. It's just now taking root. Very exciting. Of course, Metropolitan Water District. I mean, it goes on and on. Metropolitan Water District is one of the leading water providers in the world. So again, built through collaboration. We've done 20 international collaborations, okay? The highest level of science and engineering. And there's more. Big markets, right? I'm not gonna spend a lot of time. Water's huge. Engineering as a service company is huge. So think about what we're doing. We've got consulting services for engineering, for environmental engineering. We've got products that solve very big problems like PFAS, we're going to talk about, contaminants in water, and then we have projects, right? So it's kind of the trifecta, and we're uniquely situated with expert talent, highly qualified people in science and engineering to tackle these problems for a client, solve a problem, add value, provide great service, and ultimately solve these big problems across the world. So PFAS is really fascinating. If you don't know about per and polyfluoroalkyl substances, PFAS, PFAS, that's how the industry talks about it. These are forever chemicals that were put out as non-stick coatings by some major corporations like DuPont, like 3M. Those are big names, of course, commonly associated with PFAS. It's all over the world. It's pretty much everywhere. And of course, it's estimated now to be about a $60 billion a year market globally. It's just unbelievable. You know, do an internet search, you'll see it. Of course, these chemicals were very minute, measured in parts per trillion. They accumulate, the environment will not break them down. And of course, if you accumulate small particles for an extraordinarily long period of time, they become a health hazard, linked to adverse health effects, birth defects, cancer, etc. You got to get it out of the water and you got to get it out of the soil. So we have a solution for that. It's awesome. It's called the AEC. The AEC it's a new innovation. It's just now going into commercial trials. We had about a 2-year head start in this one, which is awesome. We got a grant from the US EPA. Anyway, the value proposition is pretty simple. Low cost, available to use in a wider variety of different types of waters and soil. And our environmental footprint is a fraction of the competition. So this is a winner. This is a winner, right? So what we'll do is we'll take it through early adoption ourselves, meaning start to finish. And then as we get traction and prove that commercial viability, we'll partner with major engineering firms around the world to see this technology come to market. And again, it's a market starved for innovation, very, very difficult contaminant to deal with. And we are a specialist in this area with the talent and the technology and the plan to serve the world. Our engineering group, 3 years ago, this was a group that was a technical lead, sort of a skunkworks team at one of the largest engineering firms in the world, 55,000 man firm. And we were so fortunate. We were working on a development project, long story short, as their world changed dramatically, as big corporations often do. We said, what are you going to do? And we came together and formed our engineering group. Why is this important? Well, this is a group that's got 30 years frontline experience around the world, trusted industry veterans. They've been there, done that. They know what to do. They know the answers. They know how to guide a client to make wise choices about how to solve big problems, right? With a fiduciary duty and integrity, okay? So as they come to us, they present this talent that can take a project, an idea to technology, technology to product, product to solution to project. It's a very unusual thing for a small business like BioLargo to be able to take such a depth of talent and come into an industry problem and solve it all the way through. We are under contract with the United States Air Force. Awesome, awesome business and expanding. Anyway, these guys are really highly qualified people. They've become a cornerstone of how we approach our market. We're working with big clients and we're winning more and more big clients every day. Department of Defense, United States Air Force. Again, major corporations doing big projects, right? A lot of these are consulting projects. And what we learned, of course, is this provides a great avenue to ultimately present technical solutions as products and then ultimately become a bidder for projects. It's been a great strategy. It is working and it's working very well. Who are they? Well, they're experts in all these things. I don't need to go through them all, but all things environmental. And they've got 30 years frontline experience. It's an awesome talent pool. The next innovation of BioLargo is an AOS. AOS is a clean water technology. It has extraordinary performance as a disinfection tool and as a micropollutant destroyer. It is a destruction technology for contaminants in water, and it's extraordinarily high tech and extraordinarily low energy and high performance. So just to give you an example, micropollutants, that's like things like pharmaceuticals that are stuck in the water. That's a big deal in Europe right now. America's catching up. We're just a little ahead of the curve in America. We're right on point in Europe. We're already in discussions with companies about partnering. We're in our first commercial trials. There's the unit. It was delivered to a project, a commercial pilot in Montreal. We also have our first customer. It's about $1 million project up in Alberta. And so it's just getting its legs in the commercial market. It works really well. It's super high tech. And we think it's going to become a cornerstone of an asset, a product that will solve a big problem. And it needs to get in the hands of distributors and partners around the world. And so we're doing that hardest work to get it seeded in the market. O&M Environmental is one of our operating units. They're focused on industrial odor and VOC with chemistry and systems, air quality products. Again, perfectly integrated with our environmental engineering. They're also constructors, they're builders, they're wrench turners. I mean, they've got all this talent to go into the field and do a great market. And that business is about 6 years old. Actually, this product line is about 6 years old. And it was an iteration that became an industrial staple adopted by some of the largest waste handling companies. It's got just an extensive opportunity. In fact, there was an article this morning about hydrogen sulfide in North Carolina creating a health hazard for communities. You know, we're perfect for this. This is where this chemistry is really going to find its way. And it is an expanding business. I always say this is a hard work business. You know, this is hard work. Our guys are working really hard to win a client, to really show the market that we can do something that, by the way, has never been done before, which is to manage these offensive gases and odors. And here's some examples of how it goes into the field. We're building portable systems. We're installing misting systems, putting it on trucks, putting it on fences, and we do it all. We come in and bid it, spec it, construct it, install it, deliver chemistry, service and maintain it. It's a pretty cool business. It's got a really exciting opportunity for growth. Again, hard work, not easy, but reliable, dependable. It really works. The hardest work is really done. We talked about some of these relationships. You know, just to highlight 80 grants. We got a portfolio of patents. We're also acquiring new technologies. We've got exciting new acquisitions coming to bear that we'll talk about soon. Our Q will be out on record either late today or Monday morning. Or Garrett Callahan, we talked about that. What a great relationship. You know, they came to us and said, we've been watching your company. We love what you do. We see a need in the market for a device. If you'll make it, we'll sell it. Now just think about that. If you make it, we'll sell it. So really what they're recognizing is the talent of taking innovation from idea to patents, patents to product, product to solutions, and then ultimately deliver in the market. It's an unusual thing for a company of this size to be able to do all those things, and we are doing it very well. Sunworks is our first big commercial pilot for AOS, our first commercial pilot for the industrial wastewater up in Montreal, and of course, we're doing all this government national work. So when you look at the financials, again, we really want you to take a deep dive. I want to point out to you that the key for our financial condition is that we did about 2.4 million last year. We had a record fourth quarter. We always experience a little dip in Q1 because of the seasonality of the winter for our odor and VOC business, which is right now the largest portion of our revenue. But our other operating assets are coming to market and expanding. We've also retired, almost 5.8 million in debt. And the last little piece is a fixed price convertible, about 14 cents. We're trading around 19-20 cents. And that'll come due in August, and we're prepared to pay it off now. We're actually negotiating for a little accelerated pay down. We're working on that, but all that convertible debt is gone. That money was critical to develop these assets, support our engineering group, and really sort of break through to be a commercially viable business, which we have done. And the evidence is revenue, growing expansion, new opportunities, and really even being brought in as solution provider to new situations, which we have a number of, which we want to talk about. Anyway, when you dig deep, I also want to point out that the Cleara assets, Cleara's burn rate, Cleara's debt, is not necessarily BioLargo's. We do consolidate it today, but that's positioned well for a spin out. So we're down to a small amount of debt and such an improving financial picture over the last 24 months. It's pretty remarkable. So what do we got coming? Well, there's a lot, right? We want to get to cash flow positive. It's not that far away. It's doable. With these assets that are coming to market and the expansion of these partnerships, it's really right in front of us. As I always say, if we do nothing but what we're doing, we get there, right? But we're doing more. We're investing in R&D. We've got new assets coming. We're acquiring new technologies. It's a very dynamic time. PFAS alone, we believe will be the leader in that market for a solution that will go around the globe. Again, remember, $60 billion market. In that market, we're doing projects, we're doing engineering, we're doing equipment, right? And we're doing construction. And in that formula for those projects, the small projects start at around $250,000 each. The big ones go up literally up to 30 million. So we believe our sweet spot will be that smaller end of the market, $250,000 to the $5 million range. And again, with a solution that's such a compelling economic value, we think that's a very dynamic business. Also, we have new partnerships. We're courting in Europe to really expand our opportunities. We've got major publication coming and new technologies we'll be talking about very soon. So it's pretty exciting. So in the portfolio, right, we've got a research R&D team up in Edmonton. We've got a joint venture in Korea. We have medical company that's down in Florida. And of course, our engineering team is in Oak Ridge, right next to the National Lab, headquarters in Westminster. There's my contact information. We love talking to shareholders. We have an exciting story to tell, and I'll wrap it up there. How about some questions?
Beautifully done. Guys, do make sure that you reach out if you have questions that are not answered today. Questions coming from chat. How close are the AEC commercial demo units to being installed?
It's, they're really close. We set aside the budget months ago. The engineering team has been building units, and really technically the way it works is you build the first one, then you immediately build the second one, and you approve on the first one. So we're building those units. Before now, it's been lab scale. Now we're going to a commercial scaled unit sitting on a skid mount, maybe even a trailer mount that we can roll up to an operation, put it in use, and prove out its commercial viability. Commercial trials in that field are really focused on validating durability, life cycle maintenance and life cycle, right? And ultimately cost, because really you have to save the client money. Why would they use yours if you're gonna spend more money? Well, the answer is they won't. So you got to show that you're really a commercially viable economic solution with all these value propositions. Anyway, we're hoping to get in the field really in the 60 to 120 days. And the only hesitation I have is stuff happens, okay? Nothing dramatic that keeps us from getting it done, just stuff, right? For example, you're buying parts from all over the world for these units. The supply chain has been severely impacted with travel, with the pandemic. And so we get delays, nothing chronic. But it's really hard to pin down an exact date. And of course, as we scale up, we need to be in a volume supply chain delivery system. And so we're trying to get ahead of that curve. But really, we hope to be in the field. We did pass a technical milestone just a few weeks ago, did a press release that really was the last piece to validate durability, extended useful life in the market. And so now we're into go mode with clients. So we've got 2 big commercial trials. We're going to announce those relationships soon. We have 2 more. That's a federal and also a regional with major, let me say it this way, the largest customers in the world. And then beside that, we've got a couple of municipal clients for very large projects who are looking for technical solutions. Here's the way we think about it. If I put the word out tomorrow and said, we're ready to go, we'd have 50 trials. This is a problem where the economic burden, the health threat burden is so great. It's been listed under the Biden administration as one of the top 2 or 3 initiatives, especially in the environmental space. Just so do a little homework on PFAS, PFAS, and just think BioLargo right in the center of that storm. It's pretty cool. Next.
Excellent. Yeah, I think we have time for one more here. Do you use activated carbon or cocoa as the medium?
Yeah. So, well, that's a good question. So that's a good question. So look, there's real quick, the AOS, Advanced Oxidation System, we call it Advanced AOS, that does use carbon. And in that application, we actually use a felt. And we do a spiral roll. So that's an activated carbon felt. It's a compressed material rolled up into a roll, created in a spiral, and we flow water through that spiral. It's really a genius delivery system for getting great water flow, low pressure drop, all these things that make it functional to deliver this really highly potent oxidizing reaction. In the AEC, we compete with carbon. Carbon is the competitor. We have no carbon in that system. And what we've learned and what we've discovered and proven is that we can isolate the extraction of PFAS so that we selectively remove it from a flow of water and collect it on a membrane, collect it on a sheet of material, right? Like a plastic-like material that binds the PFAS to it. So as it flows through an electric field, it's drawn towards its opposite charge in the electric field across the surface of a membrane, and the membrane acts like flypaper, and it extracts the PFAS selectively. That means we don't take all the other stuff out, which is a huge, huge advantage. It means that we collect this massive quantity on a little sheet versus a truckload of carbon. I mean, that's the whole point. So I hope that answers the question. Next.
Yeah, I think it does. We are at time.
Sure.
So what we've got this audience of retail investors and institutional investors. Final remarks knowing that group.
Yeah, I mean, I think it sums up with, we make life better, of course, with as we say, 20 shots on goal. I mean, this company is so dynamic and it's expanding. Our plan is to uplist to NASDAQ when we're ready. We'd like to do that in the next 6 to 12 months, but we don't want to do it until the wind is in our sails, as we say, right? Filling up the sails with revenue, filling up the sails with clients. We're at that breakthrough moment where we've got critical mass, highly qualified people, proven technologies, a business strategy that really is pretty simple, right? Serve a customer, serve them well, right? Get a fair value and keep doing it over and over. That's what we're doing. So I really encourage people to take a deeper dive. If you have questions, reach out to us. And remember, all the debt's coming to almost zero. We're in an equity-only position. It's expanding, and we hope you'll take a deeper dive. And thank you.
Wonderful. Thank you so much for being with us, Dennis. BioLargo, the ticker is on the screen, BLGO. Dennis, have a great weekend, my friend.
Hey, thank you.
All right. Okay, guys, hit the like button, hit the subscribe, tap the little bell. Everyone always misses the bell. Just give a little tap. If you're enjoying this content, these small cap companies that we are bringing to you. But now it is my esteemed pleasure to bring on our first educational segment in track 1 for the day. My favorite options trader, Brad Weber. What's up, dude?
Good morning. How are you, my friend?
I'm super good.
I got to know something. All right. Can you hear me? Everything good?
Mm-hmm.
Okay. Was that guy like pumping in bird sounds, or was he actually outside in a courtyard?
No, that was me. Right before he started, I said, "Alexa, play bird sounds."
I was just saying, I thought,
holding
I'm
it
like,
to the
well,
mic
he's
the
sitting in
whole
front
time.
of a green screen, and then I heard the bird sounds, and I was like, well, wait a minute, are they like pumping in audio? Man, Benzinga is doing big things right now.
No, I commented on his backyard, and he was basically like, "Yeah, I'm in heaven right now." That's where our corporate headquarters is. Yeah, insanely beautiful and calm.
That was nice. That was really nice. I enjoyed that.
Yeah, I'm feeling pretty good. I'm about to shotgun an energy drink to get me back into my normal self.
Bring it back down to reality.
Yeah, I got to get back down to reality.
Yeah.
Brad, it's awesome to have you here. I want to thank you for being with us, so you can show folks your very special blend of options, herbs, and spices.
My favorite herbs and spices are options, herbs, and spices.
Heck yeah. Okay, so for the folks that don't know, let's let them know. Brad, can you give us an introduction to yourself and what you're doing?
Yeah, absolutely. My name is Brad. I am a full-time trader, primarily of options. I switched to options primarily about beginning of the year, probably end of the year. I always played around with options, and I enjoyed trading them, and they just sort of seemed to fit better for me. I don't really know what the thing was that happened that caused me to, primarily focus on options, but I'm a big technical analysis guy. So I have adapted options trading and learning the Greeks and doing all of those things, along with doing charting and technical analysis and learning how stocks move and how the premiums move with that. So I'm big into charting. I'm big into technical analysis. And most importantly, I'm big into teaching about options trading and trying to help people get over that that fear of what options trading, they think options trading is, but in reality, it's not like that.
Yeah. So so what I love about this, because I consider myself a student of Brad's, although I don't show up to class that often. I have taken lessons that I use as frequently as I can. Brad, you come off not like someone that's so deep off into options that you're going to say stuff that I can't understand. Like you have a strategy that is understandable. It's simple. You stick to it, and it makes sense when you show it to people. So that's why I think you're the best options trader. You're my favorite.
Well, I appreciate that very much. I always appreciate your kind words, but that was like the thing that when people sort of took me under their wing originally when I was trading, they didn't throw like, here's how you calculate theta that's decaying over a positive XYZ. Like they didn't throw all that stuff at me. It was brought up and it was told that it was important, and obviously it is. But my thing that I always try to get back to is I don't want to over teach anybody. I'm just a guy in Northeast Ohio. I'm in my basement. This is what I do, and I love doing it. And so I like people to get it, and that's what I try to do all the time.
Okay, beautiful. Well, let's get the darn thing started. I think you have a presentation.
Yeah. So if you were with us the last time, it's going to look, we went through like half of what we're going to talk about now. This is the stuff that we didn't really get into. There might be some of it that we kind of bounced around, but the last educational session that we did, we started talking about this. And if you watch on Thursday nights, I host a show called Technically Options, where we discuss basically all things options trading. And we've been working through over the last couple of weeks how premiums move. And because a lot of times people will send me a message and they'll say, hey, this stock is going up. Why is the premium not going up? Or this stock is going down and I bought a put, but the premium, there's a lot of information behind why premiums move. And it's not necessarily just because the stock is going up or the stock is going down. There's a lot more behind that. So we've been talking about that at the last couple of weeks. But today, what I want to talk about mainly is just a couple of real quick things. I only have a short amount of time, and I already know we're going to go over, but that's okay. We're going to talk about technical analysis and how to succeed as an options trader, basically getting rid of some of your bad habits and then developing some good habits to learn. So let me begin by saying this, because I know this is something that people always bring up, okay? If you are a non-technical analysis person, I completely understand that. And I do not think that technical analysis is perfect. I don't think my strategy is perfect. I don't think indicators give you the perfect buy and exit signals. However, I do believe that incorporating a system that has technical analysis in the long run proves to be more profitable, and it lasts longer than a system that does not include this. Now, with technical analysis, let me also say this. I don't mean just turning on a bunch of indicators and letting the indicators do their thing, because most indicators are lagging. And especially with options trading, if you are relying primarily on a lagging indicator, you have already missed the premium spike. So with technical analysis, I'm talking about indicators and then also adding charting, price action, support and resistance, and things like that. But again, I don't think technical analysis is perfect. I don't think you can just turn indicators on and make money. You've got to know about charts and things like that. So I always like to say that as we begin. Again, all of these things, charting, technical analysis, indicator strategies, learning, this is what I do. I mean, I'm still a student. I am by no means perfect. I make mistakes. Even this past week, I'll be completely transparent with you. I sort of backed away from trading a little bit because there's just stuff that didn't look good to me. And I spent a lot of time just studying and working on my skills. And I am, like I said, I'm not perfect, and I will never claim to be perfect. And that's something that I think that I enjoy the most about trading, is I have given myself over to the craft of trading. I have allowed myself to become a student of many other people. I watch Neil, for example, all the time, and there's stuff I'm learning from him every single day that he's on. I have plenty of people that I am allowing myself to be taught from. That's what we have to do as a trader. That's how you have to do as an options trader. But just understand that you need to use your time wisely when it comes to studying and things like that. Every weekend, you can see me studying. You can join me in my Discord. I posted a link at the beginning. But if you go to tradinggrounds.live, you can access all of my stuff. Feel free to send me a message. I'd love to chat with you. I'd love to give you a little bit more information about what I do and how I improve my skills on a daily basis. So with that being said, let me just go over real quick what the indicators that I have incorporated into my strategy. Now, again, this is my strategy. This is what has worked for me. This is what has been back tested. This is what has been studied. This is what has been all of those things. Okay. I use a moving average crossover strategy, which I use the 8/21 day EMA. The EMA is the exponential moving average. The EMA enters a little bit quicker. It actually is one of the faster of the moving averages. It's still lagging. Again, it's not a predictor. It's a lagging. It's telling you what's been happening. But I use the 8/21 day cross. So I actually have real quick, I have one pulled up here. So this is just to give you an example. This is the white line and the green line right here are going to be my EMAs. The white line is the 8-day and the green is the 21. So when you see this cross right here, that is an entry for me. Now, again, I just want to say that is not like as soon as it crosses, I'm not just automatically blindly entering. There's a couple other things that you have to look at and things like that. But that's my initial trigger. That's what's going to cause me to. And now in TradingView, I have basically a list of high options volume stocks that I just that's what I follow, and I have alerts triggered on these. And so when that EMA crosses, I get a notification that says, hey, this has happened. Then what I do is I go in and I check some other things and stuff like that. But I'm not just, okay, so the EMA cross, that automatically means an entry. That's not at all true. That's my first thing that I'm using in order to see if this is, I'm playing this stock. Most of the time, that's going to give me my entry. Most of the time, when that triggers, I'm playing that. I prefer the 5 minute, the 1 hour, and the daily charts. I use typically the 5 minute for entry, and then I use the monitoring on the 1 hour. 5 minutes when I'm a big option scalper, so I'm basically buying and selling same day, even same hour sometimes. Depending on what stock I'm playing, like a Tesla, for example. Tesla is a very fast mover. You can get in on a premium and then sell it within an hour and you're done for the day. I use the 5 minute for the scalp chart. I also use Ripster's EMA. He has a cloud-based system that works really good for support and resistance. It's not my primary, but it's there. It's more of confirmation. I use what's called the relative strength, not the RSI. I use the relative strength line, which shows how that stock is performing based to SPY, because I use SPY as my primary, what's going on in the market. I also use a trend indicator to tell me kind of what's going on with momentum. How is the stock, not sort of like an RSI or anything. I don't use the MACD. I don't use the RSI. RSI. I've actually this past week been kind of messing around with some other strategies and whatnot. And the RSI, I don't know if it's just I changed moving averages and I like to see what what's going on and maybe to a fault I'm always messing around and stuff like that. But I just don't use the RSI. I've tried actually changing the length of the RSI to something like lower. I think 14 is the standard. I've tried bringing it down to like an 8 or 9 to see if it gives me a little bit better of a signal. I've just really preferred lately. I've just preferred using the EMAs with the support and resistance and the levels and bouncing off of prices and things like that. I think that honestly is what is most important when it comes to trading options. I think knowing, okay, what is going to happen with like with your trend lines and with things like that. For example, with AMC, we saw this coming from a bounce off of a trend here, a breakthrough of a top resistance. This is telling you more support and resistance wise what should be coming than any real indicator. Now, again, we see this indicator. This is the daily chart. Now, the 8 did cross the 21, so that is another confirmation for me. I use a different volume indicator. It's a little bit more. It'll take me hours upon hours to explain that, but it's the WAE. It incorporates a little bit more of data into telling you about the volume, but you can see that there was a spike in volume on that as well. So you basically put all of those things together, and now you have confirmation that you are entering a stock. But I spend a lot of time, working on support and resistance. I spend a lot of time working on levels of what to expect, because stocks, again, they don't know that they're not like, it's like the equator. They don't know that those lines are there. Like, they don't know that the moving average is there. They don't know anything about that. But we as traders do, and traders use those things. And so what you have to do as an options trader is incorporate those things into your strategy, because other people are also incorporating that into their strategy. If people think that the 200 MA, the regular 200 moving day average, is a good indicator of support and resistance over a long-term trend, then you should have that turned on. You should be using that as well. There's also many people that will say, this system doesn't work for me. Okay. And that's fine. That's not a problem. Like, I'm not trying to pitch you a course on a how to be a better options trader. Like, everything I do is for free. I don't charge for anything. And that's not me knocking anybody that does charge, because there's people that know much more than me and they charge, and rightfully so. I mean, that's their trade. They should be paid for it. But I am not trying to sell you a class. I'm not trying to sell you a system. I'm just trying to explain to you that this is what works for me. This is not guaranteed to work for you. It might not. I'm a full-time trader. I spend literally 10 to 12 hours a day in front of my computer screens. I eat and I sleep and I breathe trading. I have the benefits of being able to design a system and tweak things according to what works for me. And it might not work for you, but again, that's fine. Real quickly, let me run through these things. I'm running out of time, but I want to talk about these things because these are the most important areas that I wanted to make sure I got to. So bad habits, good habits, how do we break them? How do we develop new ones? The first step is to be honest with yourself and identify where you need improvement, areas where you are strong, areas where you are lacking, and you need to add them to your trading strategy and plan. If you're good at doing something, acknowledge it. If you're bad at doing something, acknowledge that as well. Be honest with yourself. Don't try to hide your losses. Like, nobody's perfect. We have losses. We get it wrong. You need to be able to identify those things. So write down your trades in a trading journal. Start to evaluate intentionally why you are getting the results as a trader. There's certain bad habits that you have. Buying at the top, personal bias towards stock. That's a big one. Basically saying, like, I love this stock no matter what, and I'm going to ignore everything else about it. That's not good. Not having a specific profit and loss in mind when entering, blindly following a name on Twitter. Those are the real bad habits. Those are the things that you need to avoid doing, especially the not having a profit and loss in mind. When you take a trade, you should automatically know where I'm taking profit at, where I'm taking loss at. What are some of the good habits of a successful options trader? We cut losses immediately. We hate to lose. Like, if you go through my statements and stuff, I have a lot of small losses. I avoid those real big losses, though. That's what I hate. I cannot stand to, like, for example, Friday afternoons. I will not put myself in a situation where I am losing big on a Friday afternoon, because then I've got to carry that loss through all the weekend. And what it's going to do, it's going to sit on my mind. I'm not going to do my things over the weekend that I need to do. I need to be studying. I need to be looking at charts. But if I take a $400 loss because I made a bad trade, that gives me no motivation to study on the weekends. So do things that are going to set you up for success. Study every chance you get. Read good trading books. Find a good mentor. Get involved with the trading community. Again, Discord is one of the best resources we have as traders to be involved with other people, to get involved as a team to trade. It's an individual sport. However, it works so much better when you are in a team. But most importantly, realize that this is not an instant get-rich-quick scheme. I mean, right now we're seeing so many of these crazy stocks and meme coins and stuff like that. And people are just throwing $1,000 in, they're letting it sit, and a month later, they're the biggest YouTube sensation because they made $1 million. Listen, like, that's not normal, okay? If you have any desire to be a long-term trader, you need to realize that trading is a lot of work. It is exhausting. It is hard. It is you are going up against algorithms and systems and the best of the best in the world. And you think, as some guy in a basement in Northeast Ohio, you're going to dance with the big boys. You got to put the work in. But I'm telling you, it's rewarding, not just from a financial perspective, but from a freedom, from a sense of, I am my own boss. This is what I love to do. There's nothing else in the world I would rather do than do what I'm doing right now. And so that's why I do what I do on the weekends. That's why I do throughout the week. And I'm stopping there because it's 10:49 and I want to be able to say that I was done on time. So if we have any questions, I have YouTube pulled up. I might be able to get one question. So
Can I just say amen?
thank you.
Hey, chat, can we get some amens in the chat for everything that Brad just said? Man doesn't even need to show a chart to change what you're doing.
The last time
a little bit changed.
The last time I had to show charts, I only talked about one company. It was the last small cap. I talked about that one company for the 40 minutes. Or whatever.
Yeah, that tends to happen. I mean, because there's so much to dig into. Yeah, we're getting a lot of amens in the chat. Appreciate it. Brad, I guess not really a lot of questions. What I would say is guys, make sure you're coming back and watching this recording. Also, make sure you're checking out the man's chat. Follow him on social. You can go to tradinggrounds.live. That should direct you to everything that you need to find. And if you're a Twitch frog, you can even find him on Twitch.
Yeah, go to tradinggrounds.live. All my links are there. Twitter and Twitch, YouTube. Link to our free Discord is there as well. You're welcome to join. I spend majority of my time on TradingView. I post all of my charts there. So if you are a member of that community, you can just click the link and follow me on there. You can actually make a free account on TradingView if you just want to follow people. That's a great resource to have. Well, and then of course you can see me on Benzinga every Thursday night, 5 o'clock Eastern.
Watch him on Benzinga, like and subscribe.
Watch Neil on Benzinga, like and subscribe.
Like I said, my favorite options trader. Guys, do yourself a favor, keep learning from the man. Brad, thanks for being with us today.
Anytime, Neil. Thank you, buddy. Have a good day.
You too. All right, so there's a little ticker that's been coming up a lot lately. VUZI. We've got the CEO, president, and director with us here today, and I believe we're going to roll a little introduction.
Good morning, everyone, and welcome to Vuzix Corporation's presentation here at the Benzinga conference. Vuzix is a leading provider of augmented reality smart glasses in the enterprise space today. We're out of Rochester, New York. We're very well capitalized with over $140 million in the bank. And for a pile of reasons, our business has been accelerating significantly over the past year. I'll be sharing more about that coming up. The next big trend in technology is going to be smart glasses, but smart glasses that we wear everywhere. That said, it's going to start in the enterprise space, and that's where it's happening for Vuzix. Markets and many other research firms project upwards of $70 billion worth of market opportunity for smart glasses in enterprise by 2025. About a year and a half ago, Vuzix introduced our M400 smart glasses, and our revenues have been growing ever since. In fact, it's been quarter after quarter practically of growth from the day the M400 got into the marketplace. A bunch of factors are driving that. The M400 itself is an amazing product. It's one of the fastest, the best performing products in the marketplace today. And there's a pile of software applications that run on it today, enabling application after application in the enterprise space. And with it, as you can see, our revenues have set new records almost quarter after quarter. 2020 smart glasses sales were a record $10 million for Vuzix, up 106% year over year. We also introduced several new products in our product line, the M4000 and our Blade upgraded. Our OEM engagements have been expanding at the same time. Engineering revenues have grown 123% year over year. And again, our balance sheet has been significantly enhanced with over $145 million in the bank today. 2021 is also off to a great start for Vuzix. Our first quarter was $3.8 million in revenues for smart glasses sales, up year over year of 177%. And smart glasses demand so far in Q2 remain as healthy. There are many reasons why enterprises are adopting smart glasses today. They range from increasing productivity, eliminating travel costs, lowering carbon footprints of companies, reducing worker errors, protecting workers' health. And with each new application that comes out, there are more. It's just amazing how smart glasses are beginning to change enterprise. The markets that they're being used in today, for Vuzix, there's 4 primary ones: warehousing and logistics, manufacturing, telemedicine, and field service. With COVID, manufacturing and warehousing and logistics almost went to its knees. That said, telemedicine kicked into overdrive for Vuzix, and I'll explain more in a few minutes about that. And then the field service side of it, you might imagine if you can't get to a plant in China, but you can send a pair of glasses and see what's going on, you can continue operations. So those 2 pieces of our business really expanded. Vuzix has a line of smart glasses that is developed for the enterprise space today. The M400, which is our flagship. The M4000, very much like the M400, built on the same platform. However, the optics in this guy uses a waveguide, which are custom developed by Vuzix. You can see here that there's a window that you look into as opposed to an occluded view on the M400. The Blade upgraded is like a pair of sunglasses, a bit chunky, but it's the first pair in the world that look and feel much more like regular glasses. And finally, Vuzix is working on next generation glasses that look and feel like a regular pair of fashion-forward glasses. It's funny how the world thinks about things pre and post-COVID, but that's not different for Vuzix either. Just before COVID hit, Vuzix was working in remote support, a very small amount of stuff in healthcare. We have manufacturing activities going on. We were in retail, warehousing, third-party logistics. These were all things that were happening in a big way for Vuzix. Well, they were starting to. We had POCs all over the world where people were using our glasses and hoping to roll them out. COVID hit, and the demand for most of those market opportunities almost went to zero. That said, remote support in healthcare kicked into overdrive for Vuzix. I mean, and it makes sense. From a remote support perspective, if you can't get on a plane to fly someplace to check on operations, you have to come up with another way to do it. And smart glasses has become the way to do this. You put the glasses on, the camera looks forward, the person that's wearing the glasses is seeing right through the viewfinder of the glasses, and an expert on the other end, or an auditor on the other end, or a doctor on the other end can see what's going on and can help and support that activity. On the medical side, it's a very similar thing. People couldn't get into hospitals, so they started using smart glasses as a way to remote into the hospitals, and now today, smart glasses are being used all over the place in the medical space. Now that the world's coming back post-COVID, the medical applications around Vuzix products are not slowing down. It was a great opportunity to introduce smart glasses to the medical space, and now it's becoming adopted as the standard fare for how things get done there. Remote support activities is not different. It's here to stay. This is how people are going to get things done. Why put a person on an airplane when you can just send a pair of glasses and save all that money? Besides the machine uptime, there's so many reasons why having a pair of glasses on site makes so much sense compared to where we were. That said, manufacturing, retail with in-store picking, logistics, third-party logistics, warehousing, all of that business seems to be coming back in a big way for Vuzix. We're quoting on many thousands of units in that part of the space today, and all of these POCs, or many of them that we had that were going before, are all starting to start back up again. So why Vuzix smart glasses? Vuzix smart glasses are ideal for healthcare, telemedicine, and quite frankly, many of the application areas because of the design. We've been at this for a very long time. We knew over the years that when you were making big, bulky, heavy devices, they just won't work. If you put it on and it hurts to use after an hour, it's going to fail if you need to use it for an 8-hour shift. Our products today are lightweight, truly wearable. They have a variety of different mounting options. You can see here this young lady's wearing our glasses. Below that, there's two gentlemen that are loaded up with PPE equipment. The guy on the right is getting ready to do an open heart surgery. The guy on the left is in an ICU. Most of our competitors cannot be born in those kinds of environments with that kind of gear on. They're lightweight, flexible hardware to provide a variety of viewing options. That eyepiece can move anywhere. IP67 rated. They can be dipped underwater, cleaned with alcohol wipes, and they have great functionality with running applications, standard applications like Zoom, Skype, WebEx. These are all remote support kinds of applications, HIPAA compliant software applications. And they're currently being worked by medical professionals for as long as 16 hours. So you might imagine it's critically important that it's comfortable during that period of time. Over the last year in the medical space, our devices are being used around the world today. Pick a city, practically, Vuzix's glasses are being used in hospitals in those cities. And the healthcare list continues to grow of companies and organizations that are using our glasses. It's just a non-stop activity in healthcare around our glasses. And the amazing thing for me is just before COVID, there was practically none of this activity happening. The medical space takes a long time to adopt new technology. COVID was an opportunity to introduce our glasses to the medical space, and they are being embraced now today. They're being used across the environment, from surgeries, examinations, training, virtual rounds, long-term care, emergency departments are using them today, surgery, ICUs. In fact, it's not just a remote support in kind of an application or out for training purposes. They're being used actually for within the surgeries themselves as the tool to do the surgery, which I'll explain a little bit more here shortly on. Let me start by giving you guys just a quick example of how our glasses might be used for the basic sort of remote training and or support while you're in an ICU, or in this case, in an operating theater. The video that I'm about ready to show you, the short clip, has a gentleman who's getting ready to do open heart surgery. And one of the things you'll notice, there's a little inset in the bottom right-hand corner. That's the video feed coming off the glasses. This gentleman is an expert in open heart surgery. He can use the glasses to share what he's doing with a group of 500 people. You'll notice there's no space around him for anybody to stand to see over his shoulder. But with these glasses on, with this high resolution, in fact, it's up to 4K broadcast quality transmission, anybody can look over his shoulder and actually see his bird's eye view the catbird seat, as it were, right into the operation to learn how to do it. Let me give you another quick example. In this case, it's Pixie, a company called Pixie Medical. They do knee surgery. And the way they do it is, you can see there's this little metal superstructure, I guess, sticking up there. And on top of it, there's a flag that looks like a QR code. The glasses are good enough that they can look at that QR code and see where it's positioned in space and the angle that it's at. What they'll do is they'll put 2 of those on the person's knee to get it adjusted appropriately so it's aligned right. The knee is aligned right. So when they put the pins in, it's accurate for the pin placement. The video speaks for itself. You'll notice he doesn't have to touch the glasses. He can talk to them, and the glasses, he can just tilt his head to control it. After all, it's an operation, so you have to stay sterile. Those are a couple of really good examples. I can tell you it's gratifying to think that every single day Vuzix's smart glasses are being used in hospitals around the world again. That said, Vuzix is working in a lot of other areas. In the wireless space, companies like KDDI, which is a very large carrier like a Verizon, but in Asia, they're using our glasses for their own internal activities, and they're selling solutions to their customers around our glasses with applications that they have written. We have relationships with companies like Verizon with 5G-enabled EMS solutions, and many other activities in development on that front. The stuff that you're seeing here on the medical side is being used around the world and in vertical market opportunities everywhere. So it's not just medical. We have Fortune 100 brands like insurance companies that are using our glasses. It's healthcare for surgical, as we've just discussed. It's companies like CooperVision right over down the street here that are using them to pick out of their warehouses. Again, it's enterprise, broad-based. Let me just talk quickly about the smart glasses themselves for a moment. As I've said, we've got the M400. It's a workhorse product. It's Android-based, running one of the latest Androids. It's got an XR1 8-core processor from Qualcomm. It's got full voice controls. For instance, when that doctor was doing the operation, he could change the brightness, he could zoom in, he could change the contrast. A remote operator could do that while he was wearing the glasses, but all of that can be done hands-free with the click of a button. It's got 4K broadcast quality cameras. It supports a broad range of accessories, which I'll describe in a moment here. Like I said, IP67. The M400 is occluded, and what that means is you look in that eyepiece, and you can't see through it unless the camera's running. The M4000, on the other hand, all the same features, IP67, ruggedized, etc. But in this case, when you look inside that window pane, you literally see the image floating out in front, like it's shown here with this gentleman wearing the glasses on the bench. As far as the competition is concerned, well, take a look. I mean, think about the application. You saw earlier all that PPE equipment people have to wear when they're in medical space. None of these competitors can work in that kind of an environment. And imagine trying to wear some of these things for an 8-hour shift. And they come with a pile of different mounting options. You can go with prescriptions over the top of your glasses. We have safety glasses that you can get your scripts in, hard hats. They can be worn left eye, they can be worn right eye, with baseball caps. Effectively very comfortable, lightweight, easy to wear all day long. You go into a company and we can solve their problem, whether it's in the warehouse or the construction site. And finally, we make a computer, and a computer is useless if you don't have applications to run on it. We have a plethora of applications available now, from Vuzix's own connectors to tie into things like Microsoft Teams and the likes, to partnerships with companies like TeamViewer, with UbiMax and Upskill now, SiteCall, WebEx. Well, you get the idea. All of these applications now are plug and play. You get the glasses, you turn them on, and you're at work with them, which is why this business is really starting to take off also. To wrap up, I'd like to take a minute just to talk about next generation technology and products coming from Vuzix, because it's critical. This business is going to really take off when you can make glasses that have the look and feel of conventional glasses. Vuzix 192 patents and patents pending around this next generation technology. Very shortly, we're going to be announcing some really cool stuff around these next generation micro LED display engines that Vuzix is building. And with those, you can put them in with our waveguides in glasses that are going to look and feel, like I said, just like a conventional pair of glasses. The glasses that these folks are wearing, literally, those are phones. You can get on the internet with them, you can make phone calls with them. This is the beginnings of a seed change to the future of wearable computing. To sum up, Vuzix has the most competitive augmented reality smart glasses product line in the world today. We're a global leader with enterprise, healthcare, and OEM customers across the board. Our revenues are steadily growing. We have the critical IP in the key areas of AR smart glasses and micro LED technology to put together and make glasses that we think will be glasses people will want to wear all day, every day. And Vuzix now has sufficient cash to fully execute on our business plan. It's a great time to be Vuzix, and thank you very much.
Wow.
You're killing me, Neil.
I think I'm speaking for a lot of the folks watching, and actually internally at Benzinga. Wow. Your technology has achieved that coveted word in the space. We're all very impressed. I know that you guys are shipping a pair to the Benzinga office for us to check out and review. So I'll just watch the mailbox for that. But we do have a couple questions. I want to knock them out really quick. We only have about 60 seconds here with you. Do you mind, Paul, just kind of busting through some questions?
Sure, no problem.
Okay, cool. So number one is, currently you're obviously making a very big push towards surgery as a primary application. What other applications are you looking at? And is there something on the roadmap for assisting the blind, for example, or the visually impaired?
Well, on the assisting of the visually impaired, there's no doubt that, even though these glasses have displays in them, they can be an incredible tool. And one of software partners that we have is writing software for our Blade that literally uses the cameras to see the outside world and then uses audio feedback, kind of like you tap on the floor with a cane, So you can get the reflections, and this thing will effectively paint a picture of what the world looks like in front of you. The gentleman who's using them the first time out and testing them, he's a photographer with these glasses now, which is pretty amazing, frankly. Other kinds of applications, in-store picking, packing, pallets, and in surgeries all over the place. Vuzix is really not a straight up medical company. I mean, it's the fact that these glasses are so flexible and they can be used for so many things. You put a different piece of software on these glasses and all of a sudden they do a completely different function. It's like a computer today. You can do a lot with them based upon the software that's in them, and the more applications that come, the bigger the market opportunities are. So you'll see us show up in a lot of places, from inside of mines to warehouses to production floors to you name it.
So I will say, and I don't want to go too much over on time because we are, but I just have one question that I think is probably on the tip of everyone's mind. So you did touch on some of the peers or competitors in the space that have developed solutions that are somewhat cumbersome to wear or just have had outright failed launches altogether. What is your plan for remaining differentiated and superior in your niche market?
Well, first of all, we're about enterprise. I believe that our technology can be used in the consumer and the mass markets at the same time. We're building that core technology. Folks are coming to us, asking us if it might be available for them to use in those markets. But in enterprise, we're building software models, some of the applications, SaaS solutions, so our products become sticky. It's not just about a piece of hardware for Vuzix anymore. You'll see a complete ecosystem being built. That and the next generation technology that's going into making our glasses really puts us quite ahead of the competitors. We've been at it since '97, right? So we got a lot of depth and knowledge about how all this stuff works at Vuzix, and it's putting us, I think, ahead of most of the players out there.
Beautiful. Love the presentation. Paul, thank you so much for being with us today at the Small Cap Conference.
Yep, thank you.
Guys, that is ticker VUZI. If you don't know, now you do. Check them out. Next up, we've got a presentation from InspireMD President and CEO, Marvin Slosman. Let's have Marvin on. Hey, Marvin.
Hey, guys. How are you today?
Wonderful. How are you, sir?
Very well, thanks. Thanks very much.
Now, we've got an investor, some retail traders, and some investors, very inquisitive folks. Would you mind giving a brief overview of what you guys are doing over at InspireMD?
Absolutely. So thank you for the opportunity today. InspireMD's mission really is to change the way in which carotid artery disease is managed and strokes are prevented. And that is an awfully big mission and bold statement, but I think our inventive technology platform using our micronet mesh really is a game-changing solution to how carotid artery disease has been managed, and we believe it's the differentiation that will propel this huge opportunity forward in terms of medical management of strokes.
Amazing. I can't wait to hear more about it.
Great. Thanks. So I'll move forward here in the presentation. As I mentioned before, we are all about changing the way in which carotid artery disease is managed and strokes are prevented. And we do this by way of an inventive micronet technology platform. It is a very thin mesh outer lay on top of our stent technology, which prevents embolic events from occurring and provides embolic protection, which is both procedurally and post-procedurally really critical and important. And I'll describe why that's the case a little later in the presentation. But the micronet technology platform is really the differentiation in what we're trying to accomplish. So as is always the case, our leadership really matters. And I'm pleased to be able to announce that Gary Rubin, who is really a very, very impressive interventional cardiologist in the field, has joined our board of directors. He was a big part of carotid stenting from the very beginning. And I think it's a big proxy to our organization that Gary's joined our company as a director and is really giving us strategic guidance in terms of how we break through in terms of change of standard of care. So the platform is ubiquitous in a lot of different applications, and we're taking on stroke as our main focus for the time being with our C-Guard product for carotid application. But there are many different opportunities to apply our micronet technology and we have a full pipeline of opportunities to do that in different indications in the body, which I'll mention later in the presentation. So why is this important and why now? Because most of the major landscape of opportunity in converting open surgical procedures to endovascular procedures has already taken place. This whole notion that a vascular procedure would be done as open surgery anymore is really in the past, except for one area that we feel is the greenfield opportunity here, which is carotid artery disease. So why is this the case? Many technology platforms have been tried, but up to this point, surgery is still the standard of care. And I think a big part of that is because the platforms up to this point have just not been sufficient in terms of their clinical outcomes to be able to demonstrate superiority. But the idea of converting open surgical procedures to endovascular solutions is certainly on the horizon. We all know that stroke is a big problem, only second behind ischemic heart disease in terms of its devastating effect. What's interesting about strokes is that the issue here is that there's not a lot of pre-notice when you have a stroke, so to speak, and the devastation of the result of a stroke, both in death and disability, is significant. So unlike heart disease, strokes occur suddenly, and the impact is devastating. So we think that this is an opportunity to really change the game in terms of overall health globally. So let me give you a little bit of background as to why this is important. On the left-hand side of the screen, you see carotid endarterectomy, which is an open surgical procedure. Basically what happens is they open the artery and they clean it out surgically. And this is standard of care. And up to this point, carotid stenting has not really surpassed open surgery for this reason, because you've got open-celled stents up to this point, which is pretty much common practice. And those open cells rely or provide this opening that allows embolic events to occur, especially after the procedure is completed. I'll give you this visualization that I think tells the whole story. On the left-hand side, you see a 90% occlusion of the carotid artery, and you see the associated infarct in the brain, the stroke that occurs in the brain from this closure of the artery. On the right-hand side, you see that in an open-celled stent, it's opened the artery visually, but on the right-hand side there in the brain, you see these multiple infarcts that happen because the open-celled stent is allowing these mini strokes to occur. So what's the big difference here? The difference is in conventional stents, you have this open system, and in ours, we cover the inside of the stent and the endothelium to protect the brain after the procedure occurs. So on the bottom of the page, you see an inside view of the artery, and you see this plaque protruding in the vortex of blood flow. And that plaque that protrudes through there will break off and end up in the brain because of the proximity of your carotid arteries to the brain. And below you see where the micronet seals that plaque and doesn't allow these strokes to occur. So this gives you an idea of the size of the cell of the closure here. So CGuard with micronet has the smallest opening in the market. And we've optimized that opening size with a lot of research and development and a lot of proof in clinical application as to optimize the size of the opening for optimal blood flow, but at the same time to keep these plaques from breaking off and causing strokes. So evidence is really the language of our marketplace, and we have unmatched clinical evidence in terms of how we perform on a day-to-day routine. And I think this is really the story behind why we believe that now is the time and standard of care is on the horizon, because we've proven our technology. We have CE mark, and we serve 33 countries currently and are beginning our US FDA trial in the July timeframe. So we're excited about the fact that the evidence behind CGuard is significant and continues to grow. This is just an example of some of the many studies that occur. Over 1,700 patients have been enrolled in studies both in the past and ongoing to demonstrate our superiority and why CGuard really is the game changer here. So without going into a lot of detail, let me just show you this slide, which is really the aggregate of all of these studies. We reduce death, stroke, and myocardial infarction to below 1.7%, as opposed to conventional stents and open surgery being in the 4 and 5% range. So this is a really significant story that has never been told in the marketplace. And as I said before, that center line there of conventional stents is really why up to this point, this market has not converted from open surgical applications and endarterectomy to stenting. So we think that this data, this aggregated data, is really compelling, and it's a part of our day-to-day story. So this gives you just a sense of the size of the opportunity. More than 600,000 patients are diagnosed with high-grade carotid stenosis, and those patients are being treated. We believe that there are as many as 3 to 5 million people walking around that have undiagnosed carotid artery disease. And so we think that this market will continue to grow as more non-invasive solutions like stenting become available. So our company is currently serving 33 countries. Over 90% of our sales are through distributor partners. We just opened a huge market in Brazil and are about to announce a direct sales effort in France. We have efforts going on in Japan, South Korea, and we also announced a few months ago a distribution partnership in China. So our global expansion is really one of the key pillars to our growth beyond the 33 markets that we serve. And as I said before, we're about to start our IDE trial in July for the US market, which is obviously the largest and most significant. Let me talk about that for just a second. We have already funded the effort for the US trial end to end, and we'll be enrolling 315 patients at up to 40 centers. We think that this effort will take from start to finish about 3 years to get to approval, but we're thrilled to be able to have Gary Rubin, Christina Brennan advising us, but most importantly, Chris Metzger will be leading the effort as the PI for the trial. And Chris is recognized as being the top carotid stenter in the US market. We've invited 15 different investigators to join the trial itself, and all have accepted. So we're really thrilled to be able to build a robust story around the US marketplace, both during this FDA effort and rolling into commercial activity. We're not a new company. We've sold over 20,000 stents. We prove our work day to day. We think that the timing of the change here is significant and it's important because we're finally rounding the turn where endovascular solutions will become standard of care. It's really only been a matter of time, and it's been somewhat dependent, obviously, on the technology platforms that are available. So this is a little bit of our roadmap. In 2020, we continue to demonstrate CGuard as the superior technology. We've launched in Brazil. We started our US trial, as I said, in 2021. We're advancing the evidence. But 2021 is really a commercially focused year, notwithstanding COVID, which we're getting behind us, fortunately, in most of our markets. We're growing our South American effort. We're building an Asian growth strategy around China, and we're beginning to enroll in our FDA trial. So we think that there's tremendous potential about changing the standard of care through CGuard. We've got a very robust intellectual property portfolio. We continue to build that. Obviously, as an R&D based company, this is a key variable for us, and we pay attention to it every day. And then just as a baseline of understanding, we play amongst giants in this marketplace. And this is why we think that value inflection and potential liquidity options in the future and collaboration with these strategics is really important. They all have their eyes on us because carotid artery disease and stenting in particular is of interest to all of the major strategic players in the marketplace. And so we have ongoing dialogue with many of these companies. They are looking for the innovation. They're looking for companies like ours to build this change and are certainly interested in where we're headed. So we feel really good about the potential and the opportunity to collaborate with the strategics. Let me give you a little proxy of sort of where we're headed and why we think from a baseline of investment, we think we're a good bet at this point. Silk Road Medical has established a real standard of care with their TCAR product, which focuses on vascular surgeons, and they're only limited to the US market. But they've done a tremendous job of creating this recognition that carotid artery stenting is really the future of the market. Now, they do it with a very different approach. They focus on their delivery system, which is referred to as TCAR. They only focus on the vascular surgical community. And we believe our focus is different, which is our stent technology, because ultimately that's what matters. What's left in the patient's body and how that performs is really ultimately the predicate to how the successful clinical event happens. And so we're really excited about the fact that that Silk Road has built, continues to build in this marketplace, and we're positioned very well to be able to focus on our stent and why we think we have a superior technology. So that's our storyline, and happy to fill in the blanks and answer any questions.
All right, fantastic. Thank you so much, Marvin, for that presentation. Guys, drop your questions in the chat. We do have a couple here. When can we expect revenue to ramp up outside of China, or out of China, actually, is the question.
Yeah, very good question. So we've selected a partner in China to do our exclusive distribution, and they are handling the regulatory pathway for us. We hope that it is a similar pathway that we're looking at in the US, but it may be possible to accelerate that in China. But we're thinking general terms are 2 to 2.5 years is what we're being told by our partners in China.
Okay, fantastic. And do you have an idea of the size of that revenue that might be realized?
We don't have a full sense of the revenue opportunity, although the reason the Asian market is particularly important to us is because they are very much a stent-centric market, unlike the US and Europe. It's much more surgical focused. So they have a disposition towards stenting as it is right now. Much of it will depend on the uptake of the marketplace itself and reimbursement, but we think it's a very robust market, including China.
Fantastic. Okay, and then another one that we have here is, how do you compare the overall sales of Seaguard to competitor sales?
Yeah, so in the served markets that we're in, we generally have 20 to 30% market share in those served markets that we currently have. Our goal is to continue to build our market share within the space that we operate, but a big part of the growth of our company is built on converting these vascular surgeons and surgeries over to stenting. The existing stenting market is still a relatively small pool. We want to build our share within that, but our goal collectively is to figure out how to convert more surgeries over to the stenting side.
Okay, and could you speak a little bit to the marketing side of your growth strategy?
Yeah, so several initiatives are taking place. One, we have a Centers of Excellence program where we actually go in and proctor. We do it now real time again. We missed about a year or so with COVID, but we do online as well as real time proctoring of individual physicians. This is very much a touch business. We're in the cath lab every day with our physicians. It's about building credibility, and the stickiness of our technology is quite good. Once we convert endovascular operators to Seaguard, we generally hold share very well because the stent performs quite well. So we're focusing much of our effort and resources to our commercial focus of sales.
And is there anything on the horizon that you would advise investors to be being attuned to?
Yeah, so we are very much about execution. We raised an oversubscribed round of funding a while back and added about $35 million to our base, our treasury, and so we're in very good shape in terms of operating capital for the business. Our goal is to put our head down and go execute now on these key milestones that we've talked about. So we're going to grow share. We're going to build our global reach, and we're going to enroll patients in our clinical trial in the US and hopefully build a really nice tailwind in terms of entering new markets.
Beautiful. And I apologize if you already answered this, but do you have a date or a quarter or some time frame in mind for when you might achieve profitability?
We don't at this point. I mean, we're trying to focus on our commercial growth strategy, and obviously adding Asia and the U.S. markets into our mix makes a huge impact on our ability to drive both revenue and profitability.
Okay, and then what is the one thing in your mind that people could hang on as an investor that separates you from your peers or your competitors?
Yeah, I think this is a long play, right? I think we're looking for investors that really want to understand the story and understand that we're an execution-minded company. We are an R&D business, but we are transitioning very quickly into the commercial world, and the strategics of the world have their eyes on us. They are looking for innovators to break through and create standard of care options, and once they do, there's a lot of value inflection that comes with that. So our goal is to really change this marketplace through utilization and making CGuard the standard of care. So I think that's really our focus, and will continue to be our focus is on the stent.
Yep, well said. And I think that's easy enough for us traders to remember. So final, we are just about at time. Final remarks that you might like to leave us with.
Yeah, I think in terms of enterprise value, that we believe that this is a great opportunity for investors. We look at our business in terms of execution and growth and building new standard of care in a segment of the market that we think truly is ready to make this change, and converting open surgeries to endovascular options has really been part and parcel to how all this change occurs, and we think we've got the game-changing technology there.
Fantastic. Thank you so much, Marvin, for being with us today.
Thanks so much.
All right, guys, that's Marvin Slosman. He is the CEO. Oh, I'm sorry. Yeah, president and where's my thing? President and CEO. I don't want to get it wrong. President and CEO over at InspireMD. They got the ticker. Oh, the ticker's not on the screen anymore, guys. But that ticker is, there we go, NSPR. Check them out. Pull up a chart. Open your brokerage. Check out NSPR. All right, guys, we've got just a little bit of time to do the poll thing. So let's go ahead and pull that up on the screen. If you haven't played the game, here's how it works. Enter to win a lifetime subscription to Benzinga Pro and other prizes. It's that simple. All right. The value of a lifetime subscription or prescription. I might prescribe you Benzinga Pro. The value there is upwards of 3 quadrillion Benzinga bucks. And in USD, that's about $1,404 per year. So you really want to get out your little Nokia flip phone, point the camera at the screen at the QR code, and get ready for a little quiz. All right. It's going to be on technical, fundamental analysis, trading in general. Let's go. No. Okay. Just want to make sure that I wasn't showing you guys the answer. Minor freak out. We're good. Okay. Can you guys see the chart pattern? Here, how do I do this? Yes. Name this chart pattern. Go. All right, guys. If you're still not in, get your razors out, your razor phone, take a little picture of the QR code, get you right in there. Modern tech. Or if you're really hooked up, if you've got the connection, put your VUZI glasses on and just look at it. And then nod your head up to indicate yes, and you'll start the quiz. What is this chart pattern? Where are my technicians at? And if you are enjoying this show, if you are learning, if you're getting if you got your little sweet and sour sauce and you're dipping your knowledge nuggets in there and eating them up and loving the show so far, hit the like button, hit subscribe. We got great content for you all the time here on Benzinga YouTube. Hey, don't give it away, Angela. What the heck? You're raised in a barn? Yeah, that's correct. Good job, guys. Let's get another one in here. Blank options give holders of the option the right, but not the obligation to sell a specified amount of an underlying security at a specified price within a specified time frame. This one's super hard. And actually, that was a little bit sarcastic. For folks that are new to options, this one is a good one. Gotta know. Gotta know. We got some Mavericks here. Who's it going to be? Is it going to be call or put? All right, we are just about at time for our next presenter. Am I right on this? Let's see. I believe that it is time. Hold on one sec, guys. Yeah, it is. So let's wrap it up. Let's show the answer here. The answer is a put, guys. That's how puts work. Just plain old put contracts. All right, thank you guys. It is now my esteemed pleasure to remove the contest from the screen. And again, remember, by participating, you are entering for the chance to win over a quadrillion Benzinga bucks in subscription value to Benzinga Pro, the best damn stock market due diligence tool on the planet Earth. Next up, guys, here with us now, we have Wrap. Tom Smith, the president and CEO of Wrap. Tom, how are you doing today?
I'm doing great. How are you guys doing?
Wonderfully. It's very good to have you here. For the uninitiated, would you mind giving us a brief overview to what you guys are doing?
We are helping change policing by providing tools that are going to reduce the use of force to take a suspect into custody. The only tool out there right now that doesn't use pain compliance. And obviously, this is a hot topic in the world right now.
Absolutely. Absolutely. I'm very excited to hear your approach. First, I would like to ask, where in the world are you? You have the best view I've ever seen in my life. And the sky is a beautiful saffron.
I am in Phoenix, Arizona, and that's looking at downtown Phoenix with Camelback Mountain in the background. And it is a beautiful time of year to be in the valley.
That is gorgeous, guys. Keep that in mind. Let's plan a Benzinga trip down to Phoenix. It is beautiful down there. All right, Tom, I would love it if you could show us what you're doing over at Wrap now with a little presentation.
I will do that. And I appreciate everybody tuning in this morning. And obviously the wonderful safe harbor statement is we're going to talk about future things. And my background, as introduced, my name's Tom Smith. My brother and I started Taser back in 1993, now Axon. So my career's been spent in law enforcement, doing this all over the world. I was always doing the outside stuff. And I joined this company 2 years ago because this is what, I think policing is going to go to. They were always asking, is there a way to stop somebody and take them into custody without hurting them? And our product is the BioLargo, which you see here on the screen. And it is a handheld device about the size of your cell phone. You operate it like a remote control. And then it has a cartridge that you see on the right there that snaps into the front of it. And when you deploy this on a person, it sends out an 8-foot Kevlar tether that wraps around them. And then it doesn't put anything into the body, and it gives the police that window of opportunity to take them into custody. We also have a lot of intellectual property around this. The company was very active on that from the get-go. So you can see that we have 12 issued US patents and have filed all over the world. And so while I've given you the description of how this works, I'm going to show you a quick 30-second video so you visually get to see how this works. And now we've slowed this down so that it's filmed at 20,000 frames per second, so you can really see what's going on, because in real time it happens in the blink of an eye. So let's take a quick look at this video. So very exciting times for us right now. Obviously, there's a lot going on in the world, and to be able to give police something that doesn't hurt people, to allow them to end these confrontations early before they escalate to those higher levels of force, that's really what we're focused on. And we get asked a lot of times, what really is this market? So there's about just under 1 million officers in the US and 18,000 agencies, but internationally that number is 12 times the size of the US market. And we have a big international footprint already. Then when you start to look at military, private security, ultimately the consumers, this is a $6 billion market that's growing to almost $12 billion in the next few years. So there's a huge opportunity for us going forward to expand our technology into these other realms. And currently in the United States, we already have 475 agencies using this technology. So it's not just concept. This is something that's actually out there on the streets. And again, we're just the tip of the iceberg, because that's only 475 agencies out of 18,000 in the United States. And it's not just concept, it's being used. So what I want to also share with you is about a 90-second video of a chief that's talking about how he used it in Fruitland, Maryland. And while he's talking, you'll see in the background actually body cam footage of how they were able to use this against a suspect that was in a crisis that they needed to get help, and they didn't have to hurt him. So I'm going to let you watch this 90-second video. Oops, if I can get this to play for you.
You know, sometimes people need to be taken into custody that don't need to be injured. We get a call to assist EMS. The young man has really intense seizure. When he comes out of his seizures, he's in a confused state. He's not coherent. He's a big, strong guy, and he comes out swinging. They knew that they weren't being threatened by him, and they didn't want to hurt him. his condition is as bad as it needs to be already. We don't need to make it worse. Corporal Mills was able to explain to the family what the device was going to do. So when the noise came, they weren't thinking that it was a gunshot or a taser or anything like that. He deployed the device. It was a perfect deployment. In this particular case, he had somebody who dropped their arms to their side. So he took the shot and it worked perfectly. As soon as the polar app was deployed, they come running in with the stretcher and, you know, they get him the help he needs right away. This is the first thing that we've ever been able to add to our arsenal other than, you know, verbal commands that isn't supposed to hurt anybody. The way we look at it, this isn't a use of force. This is an apprehension tool. I don't see how anybody could say that having a device like this isn't worthwhile, that it isn't worth the money. It's, you know, how many times does something like that have to be effective or it's paid for itself? Not very many. You know, maybe one. If, you know, in this particular case, they had to go to, you know, if he continued to be violent and they had to go to some other type of device, you know, the outcome may have been different.
So you can hear a lot of great points. And the best thing we have now is that it's being used in the field and we have our customers talking about it. You can see here a snippet of body cams that we've received from all over the country. And if you go to our YouTube channel, you can obviously see these for yourselves, that it's not just in demonstration and practice, it's actually working in the field. And the best cases is the chiefs and these departments talking about it. We have over 50 documented uses already. And that's just a fraction of what we believe is actually happening out there, because a lot of times this isn't even categorized as a use of force. So think Batman and Spider-Man for those movie people out there, that it just throws a rope around someone from a distance and allows them to be stopped without hurting them. And that's what's really exciting about this technology, because it's making a difference. So no other tool has been introduced since Taser came out 20 years ago. This is the first tool to do that, and it's being adopted at a much quicker rate than we even saw back then, because it's something that's really having an impact in policing today. A lot of people ask about our distribution network. We have 14 distributors in the United States that cover all of the states. I've worked with these guys before, and they work with all those local and small agencies, because over 80% of those 18,000 agencies are less than 100 men in the US. So it makes a lot of sense for us to use a distribution channel that puts almost 100 other people out there on the ground, boots on the ground, helping to sell this, helping to do those demonstrations. Then internationally, we've already shipped to over 40 countries. My second day here, I went overseas because I knew the international market was going to be an enormous opportunity for us. It is the majority of our business already, and we believe that's going to be the case for the next several years, because it is 12 times the size of the US market. So international is something that's really important to us. And here's a quick snippet of all of those different places that we've shipped. Obviously, we've seen some headwinds with COVID and not being able to travel internationally, but by having those distributors on the ground, they're able to continue to do demonstrations, training, sales, and we continue to grow and really have it impact our business and continue for the foreseeable future to be the majority of our business. Because internationally too, they're not as, they don't use as force much as they do here in the US. And when I was traveling all over for Taser those 20 years, they were always asking for something like this. And that's why I knew international was going to be a key part of our business. We also have a lot of people that try to understand how the sales process works, because we are selling to government agencies. So it is a fairly lengthy process. The bigger the agency, the longer that process can take. So for example, an LAPD, a Houston, or an NYPD, we measure those in terms of months and years and the process that goes through there. So as a comparison with Taser, they tested for 4 years, and then it was they bought 750 a year for multiple years before they rolled it out to everybody. So in our case, they were in a test. They've done a first year of the trial. They're going to continue a second year starting this summer, and it's going to be a very lengthy process. It's those small agencies that they're under 100 men that move quickly, and we're seeing a lot of agencies show up now at our demonstrations with a purchase order in hand. And that's really going to be our bread and butter. That's those agencies, they can move quickly. You saw Fruitland, Maryland there. They were able to get the body cam uses to us to be able to share. So they're really a key aspect for us, because then they have to go through training. Then they have to come up with a policy. How do they want this used? And each agency can have their own policy. So that's a key aspect to this. So we can provide sample policies from other agencies to be able to use, so they don't have to reinvent the wheel. Sometimes they'll do field testing like LAPD is. A lot of the smaller agencies will skip that step and just go right to purchase. And ultimately, our goal is full deployment. We want this on every frontline officer so that it's available for them to be used. So that's what we're really going to drive to, is to get this out there and have this used with all of those frontline officers. We also invested early in manufacturing. One of the benefits of being a public company, although it's early for us to be public, is that we do have an incredibly strong balance sheet. with over 37 million as of the end of the first quarter, but it allows us to invest in getting our manufacturing set up. So right now we're running a single shift 4 days a week, and we don't require a lot of capital investment to be able to expand our manufacturing very quickly. You see 3 examples of it here. So we are really well prepared and set up for the growth that we're anticipating to come, especially with those international markets. And now with the pressure law enforcement's under domestically, we expect that to change, and we're ready for that growth because we were able to do that up front. One of the other things that we did is we obviously work, and I mentioned earlier, training is a key aspect to this. So in December of last year, we bought a company in the virtual reality training space that we are going to have a platform that's going to address training. So while we have our BolaWrap family of products, we also have a virtual reality called Wrap Reality family that's creating a platform for us to address the training within law enforcement and to give them tools to end these confrontations early before they escalate. So through our Wrap Reality platform, we're not only going to train on BolaWrap, we're going to train on all the other use of force tools that they have, firearms, baton, tasers, even verbal skills, intervention skills, diversity training. And we're really looking at helping to reform police training, that from cadet through retirement, they can incorporate the virtual reality. So instead of just showing up once a year at an academy, this is something that they use constantly now, where they can get continual upgrades. We're really excited about this platform. It's brand new to us. And we're also going to incorporate it into a subscription model where it's a per officer per seat, so that we can track all of their training data and they can pay for it over time. And then they can either incorporate the BolaWrap into that training or that subscription as well, or they can buy it as a standalone. But really excited about that platform because we're already dealing with those trainers in the sales process and teaching them how to use the BolaWrap. So now we can also provide a tool that's going to create a platform for them to solve the problems with the device, as well as to solve the training issues and get people better trained, and offer a different platform to get it more immersive. So something that might have taken 2 hours, we can now do in 30 minutes. So there's going to be a cost savings for them to do that as well. Recently, the company just completed going through our ISO 9001 2015 certification, and another initiative that we just started that's obviously important to our investors and to our company is our ESG, or environmental, social, and governance initiatives. We've already taken our first steps internally to go through this program as a follow-on to our ISO certification. We're going to be continuing to drive towards this process of incorporating ESG and have a lot more to report on it and get our first report out by the third quarter of this year. So another really exciting initiative that we're doing internally, being aware of our impact in society, not only with our product, but being good corporate citizens as well. And again, I mentioned earlier, some of those corporate milestones that we have out there is over 37 million on the balance sheet as cash, virtually no debt. We've got about 37 or 39 million shares out there today, and we've got over 25,000 different shareholders. And a lot of those shareholders all are law enforcement officers that are using our products. So we've seen that as well, where they don't only use it in the field, but they've also invested in the company. So, it's a really exciting time for WRAP. Where we're at today, we're obviously looking forward to the future and what the opportunities are going to bring, because it's really easy for people to point out problems. We're working on solving those problems through technology like the BolaWrap and through our Wrap Reality. So that's something that, not a lot of companies get to say they do, is that they've changed the world. And it is something that we focus on here at WRAP, and that we're going to continue to do with our BolaWrap products, in addition to our training platform. And we're a very exciting future. It's a very young company, and we're early stage days, again, with the penetration that we're at. And having done this before and spent my entire career in this space, I'm very, very excited about where we're going to be going as a company. So I appreciate all of your time right now, and I think we're going to go ahead and get back to doing some Q&A at this point.
Yeah, and we've got quite a few questions, and guys and gals. If you guys haven't gotten your question in, go ahead and drop it now in chat. We have time to get some of these answered. One question here is around legislation. Could you walk us through it? I'm assuming this is, for the sake of time, let's just talk about the United States. Is this considered a weapon? Does it take a license, or how does that work?
Great question. So the device currently does use a half-charge 380, if you're familiar with firearms. So it's like a starter pistol they use in a sporting event. So we use gunpowder to get the speeds that we need. So the Bureau of Alcohol, Tobacco, and Firearm, also known as ATF, does classify us as a firearm. And because we don't fit a normal category, we're in what they call any other weapon. So right now our sales are primarily focused on law enforcement, which we have a process in place. It's very easy to do that. The consumer and private security markets will be a little bit more challenging, but we've got our hands full today with law enforcement sales. So we are going to be focused on that for the near term. And then internationally, we're covered under commerce for export. And so the advantage, I've been doing this my entire career, so we do understand how to sell and how to work in this with these regulations, both domestically and internationally.
That's fantastic. And then how does the one operationally for the operator, how does the cartridge system work for reloading? And then how do you do that from a pricing and packaging perspective?
Great question. So the cartridge snaps into the front. So it's a razor blade business. After you've used that cartridge, you throw it away. So there's a quick cartridge release lever on the bowler wrap itself. You drop that cartridge out and you snap another one in. So in rough numbers, back of the envelope, an officer's between $1,000 and $1,200 to give them everything they need through the bowler wrap, the cartridges, the training, the holsters. So kind of a soup to nuts number to get them out there. So if you're a 10-man agency, it's roughly $10,000 to $12,000 to equip all of your officers with this equipment and get them trained and put them out there in the field. And the cartridges are roughly $30 a piece. So it's not something like a regular firearm where you're going to go fire hundreds of rounds. They only need 2 rounds, 2 cartridges for an annual certification, and then they would just have the others available for field use.
I see. Okay. And then so on that topic, I guess you're selling these cartridges, and again, I just want to get it back because you went kind of fast, so I want to go back. This is a razor and cartridge model, which is fantastic. So you're getting the quarter unit into the hands of law enforcement, and then you're selling the cartridges just like you would buy a razor. For those of us that shave,
correct.
So what about profitability? Do you have a quarter or a year that you might achieve that?
Yeah, we're working right now on our margins. Obviously, we've been investing heavily in the company, so we don't foresee that happening until probably sometime in 22. We're obviously striving to do that sooner, but probably late 22, we'll start to see that flip. And then obviously, if we get some of the momentum to convert into the sales, that'll happen sooner. And then we're obviously focused on our margins to improve those. The device right now in its current form has a lot of opportunity for margin improvement because that'll also be a quick impact to getting us to flip over and stop burning the cash and get us to profitable. And it's certainly something we're focused on as an organization. And even in the first quarter this year, we had 5 points improvement on the margin. So we are focused on trying to get there as quick as we can.
Wonderful. And can you give us a peek into your product roadmap and how that might be evolving in either domestic or abroad markets?
We're investing heavily in our research and development. And one of our unique challenges, for example, in the iPhone industry, everybody knows every September there's going to be a new product announcement. So with law enforcement, we're not as regular. And the reason is because a lot of times they don't move as quickly. So if they know something's coming, they'll just wait because they're a government agency. So there's no urgency for them. So we don't really pre-announce anything. But obviously, if you look at our expenditures, we're investing heavily in that area. And if you look at the rest of the industry, there's always advancements in technology, and we're doing the same thing. We're taking a lot of input from our users. We work very closely to make sure we incorporate voice of the customer in what they want to see improve for the product to make it more usable for them. Because at the end of the day, we got to make it super simple to use in the field and very easy for them to carry and deploy, and make sure that those frontline officers are carrying it so that they have it when they need it.
Yeah, and you've clearly with your pedigree have a firm foot in the door in this space. Now, could you speak a little bit to the competitive landscape and how you differentiate yourself?
Yeah, so it's a lot like carpentry, right? You don't build a house with just a hammer. There's multiple tools in the toolbox, whether it's a hammer, screwdriver, wrench. So we're the same thing here. Ultimately, the officers are going to have a firearm. They're going to have other tools like the taser, the baton, the pepper spray. This device fits between that officer presence and conversation and those higher levels of force, those intermediate levels of force. And that's the niche. And when you look at the body cams that we fill that, and a lot of agencies, you heard the chief mention, they don't even consider it a use of force because it's used so early and it's not designed. And it's the only tool that doesn't rely on pain compliance. So there's no magic bullet. I wish that existed. It just doesn't. So you need multiple tools for these situations. And we fill that niche. Early use, don't hurt the person, get them into custody quickly, and get them that help that they need.
Wonderful. And we are at time. So final remarks for our investor and retail trader audience.
Yeah, so RAP is an exciting company. I've been there before. I know the playbook, and this has never been more pressure on law enforcement than there is today to change the way they're doing business. And this is the only tool out there that doesn't hurt them. And we have a very, very exciting opportunity for investors ahead because we're very early in the game in terms of adoption and have a huge market that we're going to address and solve real world problems with technology.
Fantastic. Tom Smith, Wrap, thank you so much for being here with us today.
Thanks for having me on.
All right, guys, that is Tom Smith from Wrap. Ticker is just what you think it is, WRAP. Made a fantastic presentation with some real world examples. I've seen that thing before. It wasn't being aimed at me, as far as I can recall, but I have seen that before. So he made a great case for the environment that we're in today, socially, and I suppose legally, for that product. So guys, check them out. Ticker WRAP. Next up from Virios Therapeutics. We have the CEO and chairman of the board of directors, Greg Duncan. Can we please bring Greg in? Greg.
Good morning, or potentially good afternoon to some of the audience. Nice to be with you today.
Good morrow, my friend. How are you doing?
I'm doing quite well, thank you. Thank you very much.
Yeah, no problem. So it's great to have you here on the small cap conference here at Benzinga. For the folks that are not familiar with what you guys are doing over there, could you please give a brief introduction to your company, to yourself, and what you guys are doing?
Sure. So I am the chairman and chief exec, as you mentioned. I've spent roughly coming in on 30 years in the pharmaceutical development industry. Spent 17 years with Pfizer. I had a good fortune of running their U.S. marketing group, their Latina business. Spent a couple of years at UCB, a specialty pharma company, the last 3 of which as an executive committee member, and then took the jump into the private sector working on development for cystic fibrosis drugs, and have been in my current position with Virios Therapeutics for a little over a year. Virios Therapeutics, which trades under the ticker VIRI, is focused on how common viruses, specifically the herpes simplex 1 virus, which many people are aware of, becomes activated. And that common activated virus engenders an overheated or abnormal immune response, and that immune response serving as a potential catalyst for chronic debilitating diseases. Mm-hmm. Specifically, our focus for today is on fibromyalgia, but we believe this particular antiviral medicine, this combination antiviral medicine, could have a potential utility in other chronic conditions, including irritable bowel syndrome and chronic fatigue syndrome. So that's the upshot, if you will, of the company.
Yeah. Okay. Fantastic breakdown. I understood that. So Greg, yeah, I see that you have a presentation here for us today. So I'll go ahead and get out of your way.
Great. We'll be making some forward-looking statements, and as with any company that's raised money, and we IPO'd back in December of 2020, we have substantive documentation on file with the FCC if you'd like to learn more about Virios Therapeutics. Let me start by unpacking the pillars of the presentation I'll cover in the next 13 or 14 minutes. The fibromyalgia marketplace, which, as I mentioned, is the focus of our lead compound, is actually quite a large marketplace, but it's presently very dissatisfied. There are 3 approved drugs to treat fibromyalgia, and all of them come with good pain relief, but significant side effect burden. The reciprocal view is that a large market that's dissatisfied holds very significant commercial potential for a differentiated, new, safe, and effective fibromyalgia treatment. Our lead asset is oral IMC-1. It's a capsule taken twice a day. And we've already demonstrated very significant pain reduction and tolerability benefits in a phase 2A clinical trial. So we've already established proof of concept for this particular thesis, and now we're moving IMC-1 into advanced development. This is a very unique combination, an antiviral combination of proprietary doses of famciclovir, an established product, and celecoxib, or Celebrex as you may know it, at customized doses to treat viral-mediated conditions. And while we think this is impressive and unique, you're probably more impressed to know that the FDA does as well. The FDA has actually conferred Fast Track Review designation for IMC-1 for the treatment of fibromyalgia. To the best of our team's knowledge, that's the first time that's happened in the history of drug development for this particular condition. We are scaling up for a phase 2B trial, which will deliver top-line results in Q2 of next year. And we truly believe, based on our experience and the commercial potential, this could transform patient care for these patients desperate for new therapies. And myself, the rest of the team, and the board of directors have led development and commercialization for many household name drugs, including, as I referenced, 2 of the 3 drugs approved by FDA for this particular treatment. So these jockeys, if you will, have run this race before. So let me talk a little bit about the team. In addition to myself, we have Dr. Genro, our chief medical officer, Angela Walsh, and Ralph Grosswald. Mike was the chief medical officer at Cypress. He developed and launched Savella, which is one of the 3 drugs to treat fibromyalgia. I had the good fortune of managing Lyrica, which is one of those 3 drugs, and Rick Birch, one of our board members, actually launched Lyrica for the treatment of fibromyalgia for Pfizer back during his tenure. We have excellent virology experience at the very top of the organization. On the board of directors, Dr. Whitley and De La Rosa are virologists, extensive drug development experience, and you may be actually familiar with Dr. Whitley. He's actually the data safety monitoring chair for all of the compounds being evaluated by Operation Warp Speed, which you know is targeted at COVID. So a very high-profile virologist, really excited about what we're doing relative to getting activated viruses back to a dormant state and potentially improving health outcomes for fibromyalgia patients and other conditions. We'll talk a little bit about fibromyalgia. It's not necessarily known by everybody, but if you do know somebody with fibromyalgia, you know they are actually quite sick. This is a chronic condition that affects up to 8% of the US population. The hallmark characteristics of this disease are widespread chronic pain and severe fatigue. And when the pain and fatigue are persistent for 3 or more months and we rule out other causes of the pain, we land on a diagnosis of fibromyalgia. Other symptoms include gastrointestinal disorders, sleep disruption, mood disorders, and headache. And as you can imagine, this is quite devastating to patients. Evidence of the debilitating nature of fibromyalgia can be seen in a 3 times greater risk of these patients committing suicide due to the uncontrolled pain and severe fatigue. These patients consume tremendous healthcare resources, and they have very significant disability, as evidenced by the fact that 1 in 2 patients with this disease actually misses work when they get a disease flare-up. Estimates range pretty widely, but we've seen estimates that is as high as 40% of fibromyalgia patients are actually treated with opioids. That's a bad fact. If you know opioids, we're trying to get patients off opioids across the globe and certainly here in the US. And it's made worse in this particular condition because opioid-treated patients are actually documented in the medical literature as having very poor outcomes. There's an opportunity to improve care and potentially do our part in reducing the opioid crisis here in the US and abroad. This is a very large market, as I mentioned, and we believe it's quite well poised for growth if better therapeutic options emerge. And we hope IMC-1 is that option. Low end of the range of estimates in the US, as seen on the left-hand side of slide number 6, suggests that there's about 10 million unique individuals in the US who fit the correct criteria for a fibromyalgia diagnosis. We do see estimates as high as 20 million, but even using the low end of the range, you'll note that only 1 in 3 are diagnosed at present, and worse yet, only 1 in 5, 20% are treated. So it's a large market, but it's a large market with significant potential because if we can establish a new drug in this space that has a great blend of efficacy and safety that allows more patients to be treated successfully, we can begin to educate the other 6.4 million to get to their doctor, accelerate that discussion and accelerate a diagnosis, and maybe get those patients on a therapy that can truly improve their lives. This is a disease that impacts not just US citizens, but citizens around the globe. The fibromyalgia prevalence range estimates from 3 to 6% of the worldwide population. Even using the low end of the range, that's something north of 220 million unique individuals who meet the diagnostic criteria for this particular disorder. Unfortunately, there's a lot of dissatisfaction in the marketplace. Polypharmacy, or utilization of multiple medications, and utilization of unapproved therapies are the normative care standards for these particular patients. Starting on the left-hand side of slide number 7, you'll note of those 2 million patients who are treated in the US, roughly each one of those patients is on 2.6 prescriptions per patient, 2.6 unique medicines. What does that tell us? Well, that tells us there's no one drug doing the job for these patients. What's really astounding is that 75%, fully 3 in 4 prescriptions of medicines prescribed for these patients are for drugs that are actually not approved to treat fibromyalgia. As you know, you probably know that's not illegal. Doctors can prescribe drugs for anything they would like to. But what it really clearly highlights in our mind is that the existing 3 drugs, Cymbalta, Lyrica, and Sabella, middle of slide number 7, are not getting the job done for the vast majority of patients. Cymbalta and Lyrica are the category leaders with a roughly 25% share of those 2 million patients. So simple math, about 500,000 people each year are treated with one or the other for the fibromyalgia in the US. This obviously excludes ex-US markets, which would bring those totals even higher. The market research we've done suggests that only 15% of doctors who treat these patients with medication are satisfied with their current treatment. So use of multiple medications, use of off-label therapies suggests very low dissatisfaction with the available treatment choices. We hope to change those levels of satisfaction as we continue to put IMC-1 through its development paces. To give you a sense of the potential opportunity if we continue to see success with this unique antiviral combination, I'll give you just some big math, which I think you'll agree portrays a very significant commercial potential, blockbuster potential, if I can use the industry jargon, for this particular medicine, if successful. If you assume we achieved a 25% patient share, which is what the category leaders have, and you multiply that times $16 a day, which was the cost of Lyrica when it went off patent in 2019, it even took a haircut for the total prescriptions of 40%. So multiply 500,000 times 16 times 0.6. You'll note that the estimated sales for a leading drug in this category are somewhere between $1.7 and $1.8 billion per annum, just for this indication, just in the US. That's before we contemplate addressing the full diagnosed population, and much as we did with Viagra and Zoloft and other successful drugs back during my Pfizer days, once you establish a foothold in the marketplace, establish the value of a new medicine, you then have the financial wherewithal to go educate the market and bring in the full 10 million, and then replicate that commercial model outside of the US. So that's the opportunity that we see. Again, presuming IMC-1 continues to show encouraging results in development. The company was actually founded on a thesis that herpes simplex 1, which I referenced earlier, a very common virus, actually lies dormant in patients' neural ganglia. In simple terms, this is central nervous system tissue. This virus becomes activated by some type of stressor. It could be a medical challenge, it could be stress related to employment in the COVID era. Whatever the stressor is, that dormant virus becomes activated and it begins to replicate. That replicating virus challenges the immune system. What's less well known broadly, but certainly well documented in the medical literature, is that HSV1 or herpes simplex 1 uses cyclooxygenase 2 and cyclooxygenase 1, common prostaglandins, as a bit of a turbo booster to enhance viral replication. So the virus gets activated. Think of the virus as a sports car. It consumes COX-2 and to a lesser extent COX-1 to accelerate its own activation. Hit the gas, turbocharger kicks in. We have excessive speed, or in this case, excessive viral replication. That, we believe, leads to the overheated immune response and the pain and fatigue that are associated with this particular disorder. This is very similar to shingles. You're probably familiar with the disease shingles, where the chickenpox virus that affects people at young ages lies dormant and is controlled by their immune system for a long period of time. But something triggers that virus, it becomes activated, and you see the painful condition known as shingles. Very similar story here, just a different herpes virus, herpes simplex 1 specifically. It may surprise you to know that the World Health estimates that 3.7 billion people across the globe are presently infected today with herpes simplex 1. We see other estimates using PCR testing that suggest something north of 9 in 10 people are infected with HSV1. So we believe this common virus actually probably infects the vast majority of patients with a disease like fibromyalgia or irritable bowel syndrome. And that activated disease is the root cause, if you will, of this particular condition. That's our hypothesis. IMC-1 is a synergistic antiviral mechanism that serves as the basis for this fibromyalgia treatment effect we've seen in clinical trials. Specifically, we're combining famciclovir, which inhibits DNA polymerase, one of the components that's required for viral replication, and Celebrex, a COX-2 inhibitor, which binds to the COX-2 pocket and leaves less cyclooxygenase 2 available for consumption by the virus to accelerate its replication. The combination antiviral synergy inhibits viral replication. It allows the immune system to reset, and we see in clinical trials a reduction in pain and fatigue that are the hallmark symptoms of this particular disease. This unique combination, this synergistic combination, has been granted intellectual property protection to 2033. So very exciting for the future of this particular compound. I'd like to share with you the data that has the community so excited and hopefully is generating interest amongst you as you consider a potential investment in various therapeutics. But to put that data in context, let me share with you a very simple overview of the phase 2A clinical trial that we've completed to date. This was a classic randomized, double-blind, multi-center, placebo-controlled trial executed here in the US using 12 sites where we compared IMC-1, this combination of famciclovir and celecoxib, versus placebo, both dosed twice a day over the course of 16 weeks of treatment. Patients were randomized either to IMC-1 or placebo, and then they were treated consistently on a daily basis for those full 16 weeks, with office visits at their baseline at week 6, week 12, and week 16. And week 16 is the key week where we do the statistics on the outcomes that you see in this trial. There are a number of pain endpoints that are used to assess fibromyalgia medications, and specifically we use 2 co-primaries here to measure pain reduction, including the endpoint that is key for FDA approval of drugs in this particular category. And we showed statistically significant improvement on these particular endpoints, but also looked at a whole host of other secondary endpoints, which I'll share with you in the coming slides. I'm very pleased to tell you what's got the medical community quite excited is that IMC-1 demonstrated statistically significant reduction in pain on both primary endpoints. the NRS 24-hour recall, which is a pain assessment that asks patients on a scale of 0 to 10, how does your pain compare to when you started the trial? And then the FIQR 7-day recall, which asks patients again on week 6, week 12, and week 16, how does your pain compare to when you started the trial? But in this case, how does it compare over the last 7 days, not just during the office visit? To put these statistically significant reductions in pain in perspective, using the 24-hour recall, the last drug that was approved by FDA showed a 0.4 unit change versus placebo. Here we're showing a 0.8 unit change. And while I hasten to add these are not head-to-head trials, we're actually quite surprised at the magnitude of effect on the efficacy. You can see this is a drug that doesn't work the first time you take the dose. Not like an opioid, which is going to reduce pain day one, but actually confer poor outcomes over time. This drug takes a little bit longer to work, but you can see at week 6, we see a numeric effect. At week 12, we see statistically significant effects. And at week 16, we see a very durable pain reduction effect using this antiviral combination known as IMC-1. In addition, key secondary outcomes at 16 weeks are equally encouraging. We see reductions in fatigue. We see improvement in patients' overall global health. We saw improvement across all domains of a diagnostic that's used to assess fibromyalgia specifically. And we actually saw less use of rescue medication. In this particular trial, we allowed patients to top up with low-dose opioids to control their pain if they weren't getting adequate pain response either from IMC-1 or the placebo. And what's incredible here is that we saw statistically significantly lower utilization of opioids, opioid sparing, if you will, for the IMC-1 group versus placebo. We saw a very important numeric and statistically significant benefits across a whole host of other symptoms, and specifically saw statistically significant reductions in patients' stiffness related to their pain, improvements in sleep quality, reductions in depression, and highly statistically significant reductions in anxiety, a key hallmark symptom of this particular disorder. So really terrific pain reduction, and a battery or other outcomes assessment shows improved global Holst status really consistently across the board. What's equally important, and our chief medical officer would tell you is his favorite thing about this particular drug candidate, is that IMC-1 had lower discontinuation rates versus placebo in this trial. Traditionally in fibromyalgia treatment work, Lyrica, Cymbalta, Savella, you see that the active drug component has a higher discontinuation rate due to adverse events. What we saw in this trial was actually the opposite, and is quite astounding. We saw that placebo patients dropped out at a 3 times greater risk due to adverse events as compared with IMC-1. That was statistically significant lower dropout due to adverse events on IMC-1. The upshot of that is better tolerability. And as I started with the presentation today, the primary reason for the rampant dissatisfaction in this drug category amongst patients, prescribers, and in fact payers is actually poor tolerability. Patients can get some pain relief, but they can't stay on this medication for a long time. And it's important because this is a chronic medication, and patients need to be able to take that medication for the rest of their lives.
Hey, Greg.
Yeah.
We are at time, so final remarks.
Sure. IMC-1 is progressing into phase 2B using optimized doses. The trial will start in the next couple of days, and we will actually see patients recruited to the balance of this year with top-line results in June of 2022. And so we're really excited about the potential to change not just patient care, which is critically important for 200 million patients, but to have a very serious value inflection point within the next 15 months. The upshot of today's discussion is we have a large market, which is quite readily addressable. We have a very unique approach to treating these patients, supported by data, and we have a team that knows this category well, having developed and or commercialized 2 of the 3 drugs in the space. Thank you for your time and attention.
Greg, thank you so much. And where can folks get in contact with your organization if they have more questions?
You can simply contact us on Virios.com, which is our website. You can email questions to our website. We are quite urgent about following up on those requests, and obviously all of the press releases and publications and the data that support today's presentation are listed on the website.
Wonderful. Thank you so much, Greg, for being here with us today.
Thank you for the time and attention. We appreciate it.
All right, guys, that was Virios. Check them out. Greg Duncan, CEO. Next up, it is my deep pleasure to bring onto the screen a fireside chat with Yield 10. Cassidy, second time's the charm. Cassidy, would you mind giving a brief introduction to folks and letting them know who they're about to hear from?
Absolutely. Yeah, we're about to hear from Yield 10, have a really interesting platform technology with some exciting implications for a lot of different industries and making a lot of different industries more sustainable. I personally work at Cleantech Group, but happy to be chatting with Ollie today.
Beautiful. All right, I will get out of your way and let you do your thing. Let me know if you have any technical difficulties.
All right, will do. Thank you. All right, awesome. We don't have too much time, so Ollie, how are you doing?
I'm doing pretty well, Cassidy. Nice to be with you.
Nice. So to kick us off, at a high level, just tell us more about your platform technology and the industries and markets you're looking to address in the near term and long term.
Yeah, so the platform technology, we call it the Trait Factory, is really a system based on a very unique gene discovery tool for improving crops. We call that grain. But that's combined with essentially genetic engineering to make those genetic modifications in the crop. And the crop they mostly work in is an oilseed called camelina, which has tremendous potential as a new crop for sustainable agriculture. Out of that Trait Factory comes really two very different opportunities. And one is really licensing those traits to the major seed companies. And we have relationships in place with four big seed players: Bayer, Forage, GDM, and Simplot. The other is really using camelina. So every time we discover a trait that improves the performance of camelina, and there is a driver to determine if it has performance improvements in other crops, that improved variety actually represents a step change in the value of the camelina as a new seed for the agricultural sector. And so there we're really looking at, essentially using camelina as a platform crop to produce essentially fuel, basically food, and ultimately PHA bioplastics.
Very cool. And could you tell me about maybe some of the land use implications of using camelina and using this technology rather than using traditional crops or traditional solutions?
Yeah, there's a number of reasons why camelina is really very exciting. First of all, it's got a very short growth cycle. It grows very quickly, about 100 days from sort of planting to harvest. That's very, very fast. And what that does is it opens up opportunities in the Pacific Northwest in particular. And it's a very interesting rotation crop with some of the crops grown there like wheat, pulses, and canola. The second attribute of it is because, again, fast growth cycle, it's a very exciting platform for what we would call a sustainable cover crop. In other words, for double cropping or relay cropping in the Corn Belt. And the reason that the cover crops are of growing importance is really to reduce some of the negative impacts of commodity agriculture, which is really nutrient runoff, and to restore soil carbon. So you've got these sustainability benefits with a very unique platform that happens to be, for some reason, biologically, extremely well suited to making new high-value products. And we're targeting two very high-value products for this platform.
Yeah, could you tell me a little bit more about that, some of the products that you're targeting, and how this can improve the sustainability of those products?
Yeah, so I would say, the one that's actually I would say closest to hand is really just the use of camelina as a sort of a low carbon index oil for use in renewable diesel. That's obviously a more economically challenging value proposition. But what we're seeing with the 5.5 billion gallons of renewable diesel capacity being installed in the US, either has been installed or is being installed, is you're going to have a supply-demand disconnect with vegetable oil to supply essentially low-carbon fuels. And so you've got that aspect of it. The second one is really something that we're really excited about, which is a plant-based drop-in replacement for fish oil. And so when you think of fish oil, you'll obviously be aware of all the nutraceutical applications, DS red, red krill oil, omega-3s, EPA, DHA oil, which is really, really important for human health, development, and wellness. And the primary source of that oil is actually harvested fish from the ocean, either consumed directly, but increasingly used as feed for aquaculture. So if you think about salmon as being a great source of omega-3 fatty acids, very healthy, very nutritious protein, that omega-3 fatty acid is actually coming from harvested fish from the ocean. And there what you're seeing is reduced supply as overfishing, which will of course be increased with global population growth, really is creating a big disconnect. It's not sustainable. So we have a drop-in replacement, plant-based source of fish oil based on engineered camelina systems.
Yeah, that's very exciting. Yeah, and maybe in the longer term, what are some of the other markets that you're targeting?
Yeah, so I think one of the things that we believe is really an absolute game changer is, and this is a concept that, you know, I would say came to fruition very recently from the point of view of an overnight, you know, technology success, which was 30 years in the making. And that's actually totally legit. This concept behind this, actually, I filed the first patent on it at MIT many years ago. I'm not going to say how many decades, but it was more than one. But right, you know, I would say in the last year and a half, the technology team has actually made great progress in demonstrating that there's another path towards commercializing this. So still early days. It's going to take another 4 or 5 years. But what it really represents is a way to capture carbon from the air and make a sustainable, very low cost bioplastic directly in camelina seed with two really important co-products, which is oil, which can go to renewable diesel, and protein, which can go into food production. So it's really a sort of tremendous sustainability story around essentially renewable fuel, food, and PHA bioplastic. The difference being that it's all driven by enhanced economics and low cost.
That's really interesting. And outside of just further developing the technology, what are some other key market enablers, whether it's regulatory or economic, that are going to drive some of those end markets to want to adopt more sustainable solutions?
Yeah, I would say that in the nearest term, the renewable fuel is driven by the low carbon fuel standards. So basically, this is really creating tremendous investment in what they call renewable diesel. And to make renewable diesel, you take waste oil. Well, given the volumes that are being produced already, you know, most of the waste oil is probably being used up. So what's happening is you're seeing a supply-demand disconnect in vegetable oil, which is why you're seeing booming commodity prices in agriculture as the demand for this oil is driving more production. So that's a big driver. It's driven by the low carbon fuel standard. I think inevitably a technology like that, as vegetable oil prices in the grocery store increase, well, you're going to have the same food v fuel debate. So over the longer term, we think the answer to that is to use camelina as a second crop. So you're actually adding to the production. And we've got some calculations that would show by growing camelina in the same sort of growing, in sequential growing seasons in a 12-month period with soybean, you could double the oil production. So, you know, there's some tremendous upside in this driven by that. The omega oils is, again, a strong desire for sustainability, but it's also, I think, economics. Simply put, there isn't enough fish oil left in the sea to supply the growing demand in aquaculture, and salmon production is growing at sort of 7% per year. And we see an opportunity there to generate somewhere around $500 million by 2030. So tremendous opportunities. And then the PHA bioplastic. The main driver is actually, it's not regulation. It's actually consumer backlash against the failure of a lot of recycling and the transport of plastic waste to China being banned. And suddenly the whole entire, I would say, consumer products food sector is getting a lot more active in this space versus, I would say, the raw petroleum resin producers who would obviously like to maintain the status quo. So you're seeing drivers from the large companies, and all of this stuff ties into ESG investing. Our difference is we're really focused on, you know, strong ESG profile, very sustainable, carbon negative, but more importantly, cost effective. It's got to be cost effective or cost advantaged, and we think we have a deal with that.
Absolutely. I mean, we have a low carbon fuel standard here in California, and I wouldn't be surprised if there were a nationwide version of that in the coming years. So I imagine that industry will really take off.
It started with California, but Washington State, Oregon, Canada, a number of the countries in the EU. Looks like the UK is going the same way. And there's an inevitable consequence to this, you know, new use or added use, which is supply demand. And the reality of it is in agriculture, and why agriculture is so exciting. There's only so much land and so much water available to produce these raw materials, whether it's for food or for fuels or bioplastics. And so we feel we've got a great position now.
Yeah, absolutely. So on that note, what kind of traction have you seen so far? And then what are your growth and commercialization plans in the coming years?
Yeah, so right now I would say we are seeing traction. Initially, there's two areas of traction. One is really in the renewable fuel space. We're now receiving inbound inquiries around, where things are at with Camelina. So actually this, we have been quite public about scaling up seed production. It takes time to actually get enough seed to plant a large number of acres. That's one challenge. The second challenge is doing that prematurely, sort of on spec, if you like, is not necessarily a good strategy. And so there's two good examples of what's really worked in the space. I think there's the older example of Dow AgroScience with its high oleic canola that was very successful, but where they were patient and secured agreements, offtake agreements for the end product, primarily in Japan, and they shared the value proposition with the growers. And they literally had a relatively straightforward path forward. And there's another example, Calyx, which tried to sort of go out in front of itself and started scaling up prematurely without having those offtake agreements. So we're going to follow the Dow Ag model, which is we're right now ramping up our business development activities and conversations with some of the renewable fuel companies, looking for offtake arrangements to sort of underwrite that aspect of the business. The omega oils, we only secured that technology back in fourth quarter last year. And so even so, we're actually, we're able to play off a strong history of feed companies looking at that particular product. And I would say the feedback so far has been very, very encouraging, but obviously it's pretty early days. We've only really had this in hand for about 5 months. And then in the PHAs, it's a little frustrating. I was actually probably the founder of the field of synthetic biology and PHA production out of MIT, and we had a company called Metabolics, which of course ran into the same headwinds when you hit the feed v fuel and you compete with petroleum resources. The industry and the investor community lost interest in renewables and biodegradables back in 2014-15. So we ended up selling the fermentation platform to a Korean company, which has actually now built a plant. So obviously we get tremendous numbers of inbound inquiries. And what we hear is and it doesn't matter how big the company is, these are the largest food companies in the world. The interesting thing is it's always the same thing, which is they've got to do something. They're excited about PHA bioplastics. They know it checks all the boxes. It really is degradable in all the environments. It makes good plastic products, cost and scale. And what the Camelina represents is a way to address both cost and scalability of this technology and make a meaningful dent in the plastic food packaging and serviceware area with a truly degradable material.
Thank you, Ollie and Cassidy. We are at time, so final remarks, please.
Yeah, so it's a very exciting time for Yield 10. Obviously, we've made a lot of progress on the Camelina business plan with two, I would say, initiatives really beginning to show great promise. Starting roughly in Q4 last year, obviously based on a tremendous amount of earlier investment. And then we're seeing this upsurge in interest in camelina oil in general from the renewable fuel sector. So I would say we're extremely well positioned in this. We still continue to supply trade targets to large seed companies, but right now we see just a tremendous upside for Yield 10 as a specialty camelina company producing some really unique products.
Fantastic. Well, thank you so much. I'm looking forward to keeping up with your progress and keeping tabs on how you're doing in the future. But it's a great conversation and enjoyed being here.
Well, I enjoyed the conversation too, Cassidy, and it's great talking with you. And as I said, it's a pretty exciting time to be in ag in general. So thank you very much.
Yeah, thank you.
All right. Thank you both for being with us, Cassidy and Ollie. Next up, Kintara Therapeutics. We have Zaid Zarabian. Zaid, are you there?
I am. Good morning.
Good morning to you as well. How are you?
Excellent. Thank you very much.
Wonderful. Wow. You like cars, huh?
It's a hobby, but it's more like an addiction. Yes.
Those are the best hobbies. All right. So for the uninitiated, could you please give us a brief introduction to your company and what you guys do?
Absolutely, be happy to. Kintara is a company that's focused on oncology indications for underserved patients. These are patients where either there's no current therapy or the current therapies are very ineffective. And we have 2 late-stage compounds that one of them has started a registration study for glioblastoma. And I think at this point, maybe with your agreement, I'll bring up the slide deck and walk through the slide deck.
You're good to go. You know what, Said?
If I can figure out how to do it.
You might want to just close that share and then restart a new one.
Got it.
And I'll be here for moral support while you do that.
Thank you. I appreciate it. And sadly, we just practiced all this, and I am going through it the old way. So let me start.
Oh, you had it there for a second.
Share screen, share screen. Can you see my screen?
You had it up for a second and then it closed.
Okay, let's try it again.
Yeah, so whatever you did, just do it again.
Yeah, and luckily I'm only able to show your screen and not the presentation.
Can you drag the presentation over onto that?
I will do that. Give me 1 second to go back and find it.
And if all else fails, I believe we have your presentation on file and we are able to present for you.
You do. I assume we're not live, so this is being recorded, so we're not wasting people's time.
We are live.
Okay. Yeah, I think we're going to have to rely on your existing slide deck, which is the same one I have, because I'm unable to share mine.
Chelsea coming in clutch. There it is, Said. And we will advance it every time you say next slide.
Great. Thank you very much. So let's go to the next slide. And this is standard forward-looking statements. We can go to the actual presentation. Next slide, please. Thank you. So as I mentioned, Kintara is a diversified oncology company with 2 late-stage products. Both of these are for clear unmet oncology needs. The first one is for GBM. GBM is a market that's growing from an estimated 800 million in 2018 to 1.4 billion in 2027. The current drug, lead drug for first-line GBM patients, was approved in 1999 and has been generic since 2010. And it's fairly ineffective. The current survival outcome for these patients is less than 5% of them survive beyond 5 years. And the median overall survival for these patients, despite the current therapies, radiation, and surgery improvements, is less than 1.5 years. And we have begun the registration study for that indication as of January 6th of this year. The second indication is for CMBC, cutaneous metastatic breast cancer, and that's an acquisition of an asset we made last August, and that's a phase 3 ready asset, meaning we have a phase 3 study planned, and we're just in the process of manufacturing sufficient quantity of GMP material to initiate that phase 3 study. Both of these compounds have been studied over the years. Initially, the VAL-083, which is the GBM product, has been studied in over 40 phase 1 and phase 2 clinical trials by National Cancer Institute, and we estimate they spent about $100 million before we in-licensed it. And similarly, REM-001 had been studied to the tune of another $140 million of investments in the prior companies before we acquired it. So the fact that we have this late-stage asset at Kintara is reflective of almost $250 million of prior investments in multiple phase 1, phase 2 clinical trials. The go-forward plan was to do a study by ourselves, but we agreed with GBM Agile team to participate with them. And I'll go into that in a few minutes. This slide simply shows the status of our advanced products. The first one, GBM, we have orphan drug designation and fast track. For cutaneous metastatic breast cancer, as I said, is phase 3 ready. We also have a few follow-on indications, although at the moment, all of our assets, capital resources, and intellectual assets are going into the 2 phase 3 late-stage products because that's where the highest value accretion can occur. But we will follow on, hopefully, after we've crossed the goal line with one or both of these current indications, with additional indications getting approval for Nevis syndrome, where we have orphan drug designation, and for ovarian cancer, where we also have orphan drug designation from FDA. Next slide. Thank you. On the GBM side, as I mentioned, the market size is fairly large, approximately 30,000 newly diagnosed patients in the US and Europe per year, of which 14,000 become recurrent. And that, I think, is a small indications of the impact of this disease, because the vast majority of the patients don't even get to become recurrent because they pass away. The plan is to, and we have executed a plan with an FDA-approved and highly endorsed adaptive design trial with involvement from numerous GBM KOLs, and we're doing it with partnership with a group of 130 clinicians who founded an organization called GCAR, Global Coalition for Adaptive Research. I will go further into that because, in my view, their clinical trial design that we're participating is probably, if not very likely, the best GBM clinical trial design on the planet at the moment. And we're very proud and pleased to be participating in this partnership. Of interest is there is 3 separate patient groups being analyzed and studied in this. There is newly diagnosed unmethylated, which is approximately 60% of GBM patients that have an enzyme that repairs the damage done by the current first-line therapy. These patients have even a worse outcome than the average patients that I mentioned before. The second group is newly diagnosed methylated. These are the patients who do not have this enzyme, who generally fare a little bit better in survival than the unmethylated patients, but still not very highly. And of course, the last patient group's recurrent. Of interest is the fact that Kintara is the only one of the 3 companies in this platform study that has been approved by GCAR and by FDA to be studying all 3 patient groups. And that, I think, gives us an advantage in respect to the potential market size we can address and the number of shots on goal, because this trial design allows 1, 2, or all 3 of these patient subtypes to be approved going forward. Next slide, please. These are just a high-level summary of our phase 2 open-label trials status. These are ongoing trials. We expect to finish these. 2 of them have been fully enrolled. 1 is still enrolling. And the interesting component here is, although these are open label trials, comparator to historical data, we are showing improved survival versus all 3 patient groups versus historical data. So that's encouraging as we go forward to be able to show that in every patient group that we're studying BALO83 and GBM, we are beating the standard of care. Next slide. Thank you. I mentioned about GBM Agile and GCAR. GCAR was founded in 2017 with the single goal of accelerating drug development for deadly diseases. They're a nonprofit organization. They were funded by National Brain Tumor Society, National Foundation for Cancer Research, Asian Foundation for Cancer Research. And over the past 4 years, they have designed and received approval from FDA for a platform study with an international effort for newly diagnosed and recurrent GBM, exactly the patient populations that we have been studying. It's a master protocol with 3 experimental arms versus a common control. And that simply means there can be 3 companies' assets being studied at the same time, and we all get compared to a common control. In GBM, obviously, the primary endpoint is overall survival. We have to improve the survival of patients. And the advantage of a registration pathway through an adaptive design is that it's a seamless phase 3, phase 2 study. That means all of the phase 2 patients will be used in the final analysis versus a normal trial where you do a phase 2 study, finish it, and then you do a separate and distinct phase 3 study. The adaptive design nature of this study allows the phase 2 patients to be counted as part of the phase 3 in a seamless design. That saves time and money. And this group, lucky for Kintara, the first indication GCAR decided to go after was GBM, which is very advantageous for us. The size of the trial, although eventually it will enroll well over 1,000 patients, so it's a very large trial. On the Kintara arm, we are 150 to 200 patients maximum, stratified by the 3 subtypes that I stated we uniquely are qualified to study. So the size of the dosed patient population will be 150 to 200 patients in these 3 studies in totality. Next slide, please. Thank you. I mentioned regulatory buy-in. On the right-hand side, you'll see a quote from Janet Woodcock from FDA, Drug Evaluation and Research, that not only highlights the value of platform trials, but also states how important GBM Agile is by potentially raising the bar for all clinical trials. Obviously, this is something that a commercial company like this could not achieve, but because GCAR is a nonprofit trying to accelerate drug development and thus lower the cost of drugs, they have strong support. It's a turnkey solution which is strongly advantageous for smaller companies. That means that we supply the drug, we provide some oversight, but GCAR and the GBM Agile team do everything else. They have the CRO and they have the statisticians who are world-class CROs and statisticians. They currently have over 35 US sites enrolling. And they just announced the first Canadian site being added, and 2021 plans are to include European Union and China. The benefit of the shared control group is multifold. First, it contains the cost and accelerates the speed of the study. And by that, I mean we, Kintara, only pay for 1/3 the cost of the control arm. The other 2 companies that are in this study with us, that I'll show on the next slide, share that cost. So that's a cost reduction to all of us. But the other advantage for Kintara is, although we just joined this trial, patient initiation enrollment as of January 6th of this year, we benefit from all the control arm patients that have been enrolling since June of 2019. And that's a tremendous speed advantage, obviously, versus starting the trial and allocating the patients to control arm and the drug arm. So the fact that this study started 2 years ago with control arm patient recruitment is tremendously valuable. It has taken GCAR 4 years to get the trial approved, to sign 35 US sites, and to initiate the trial, where in a matter of 3 or 4 months, we're benefiting from site enrollment at many of those sites already, and the control arm that's been enrolling since 2019, June of 2019. So in combination, the adaptive design, which allows us to go into 3 patient groups with the same number of patients, the initiation of the patient enrollment for the control arm since June, and the fact that GCAR GBM Agile already has over 35 sites, saves what we estimate to be well over 2 to 4 years versus us doing these 3 patient groups in a serial fashion, one at a time, and tens of millions of dollars in cost reduction versus running 3 separate trials, one for each one of these patient groups. And lastly, it saves energy, time, and risk, because as a turnkey solution, we don't have to scale up the fixed expenses of Kintara by hiring a lot of extra people to manage this trial. And because GCAR is a nonprofit, we're not paying a profit margin on top of their expenses. So what Kintara pays for is the patients we dose or get dosed on our behalf, and 1/3 of the control arm. Next slide, please. Thank you. No, 2, 1 back, please. This is just a small sampling of the sites that are enrolling for the GBM Agile trial. And as you can see, if you're at all familiar with oncology, these are the major centers for GBM. Henry Ford, certainly Memorial Sloan Kettering, Duke University, University of Texas MD Anderson, where we have been executing our phase 2 trials. So having this level of centers that have signed on to run this trial is of tremendous value, not just in speed, but also in execution. I think we all know clinical trials are a major win or fail point of any drug development activity, and having this kind of trial design, this kind of partners as partners for Kentara materially improves the chances of success. Next slide. Thank you. As I mentioned, this is a platform trial. There's 2 other companies, Bayer, regorafenib, and Kazia are in this trial with us. But as I said before, we are uniquely approved by FDA and GCAR to be in all 3 patient groups. Both Bayer and Kazia are in patient group 1 and 3 in the sub-bullet 2, where we are in all 3 patient groups, which enhances the chances of success by giving us 3 chances on goal, and increases the market share accessibility by giving us access to that extra 40% of GBM patients. And as I said before, we have already initiated patient randomization in this trial as of January 6th of this year. And all indications are that the GBM Agile program is actually ahead of schedule in site enrollment and patient enrollment. So we are incredibly pleased with the partnership. Next slide. Thank you. The second asset, this was acquired in August of 2020, is yet another major unmet medical need. It's estimated to impact 40,000 patients in the US, representing approximately a $500 million market opportunity. This is a form of breast cancer. It's a clinical aspect, which is a highly morbid form of breast cancer that's indicated by open lesions on the surface of the back, chest wall, and neck of patients. These open lesions are bleeding, infectious, they're quite often malodorous, and patients have so much pain where they have to take narcotics for pain control. And sadly, the suicide rate amongst these patients is extremely high. Similar to GBM, where the current indication and the current drug is less than optimal, the current therapies for CMBC are very limited. Both chemotherapy and radiation have very limited impact in this disease. Next slide. Per the GBM presentation that I mentioned, we have had 4 separate studies that have been executed in CMBC with 149 patients. On the left-hand side, you can see 2 of those had a control arm with a complete response rate of roughly 15%. The average of the 4 studies that were done with our second-generation photodynamic therapy is an 80% complete response rate. And this is based on 149 patients and 674 lesions that were treated and evaluated. The method of treatment for this drug is fairly easy. It's an outpatient treatment. The patient comes in one day where the drug is infused, and 24 hours later, after the drug has accumulated in these CMBC tumors, we activate, the physician, I should say, activates the compound by using a simple off-the-shelf red laser light. So although it's a systemic infusion, it's only activated on a lesion-by-lesion basis. And that's the advantage that adds some safety to this drug. In addition, because of the previous studies that have been done, there is a safety database of 1,100 patients that have been dosed with this compound. As a matter of fact, this drug actually, with a prior owner, reached an approvable endpoint for an ophthalmology indication. But by the time the company started going to that path, another company had come with a better drug that had slightly better results. So this company couldn't go ahead, but they did reach an approvable endpoint. These previous trials have allowed us to optimize the current trial design, and I'll talk about that in the next slide. Next slide, please. The CNBC development plan, although it seems very complicated, is pretty simple. We are currently in the process of manufacturing sufficient quantity of drug to start and finish our phase 3 study. That's got to be a GMP material. And indeed, although our GBM trials have not been impacted by COVID, to our very great surprise, this particular development plan did, because most of the manufacturing companies that have the wherewithal to manufacture this drug have been too busy or working understaffed. So the current plan is to get an engineering run in the 3rd quarter and initiate this trial in the 4th quarter of this year or the beginning of next year. Part of this new trial design is to try a 15-patient stage 1, which is to try a lower dose than in previous studies. And the reason for that is there is belief that because these lesions are topical, a lower dose might not only be as efficacious, but also allow for a much faster healing time. So the phase 3 design has a lead-in portion with a lower dose. If we succeed with a lower dose, that will be the go-forward plan with an accelerated path to get the trial finished. And if not, the 1.2 mg current dose is locked and loaded, and that's what we'll go forward with. Next slide.
Hey, Zaid, we are at time for final remarks.
Okay, thank you. In closing, I think Kintara is a late-stage company with 2 late-stage assets, one for GBM, one for CNBC, both multi-$100-million revenue streams. The GBM trial has already started the final stage. It's expected to yield a graduation signal sometime in the first half of next year, after which we'll only need to recruit 50 more patients before hope for NDA. And CNBC is a phase 3 trial that's expected to initiate in Q4 of this year or Q1 of next year with a 15-patient lead-in. And we have additional data that will be released in the middle and later this year to show forward momentum on both of these programs.
Very interesting stuff, Syed. Thank you so much for being with us today.
Thank you very much. Have a great day.
You too.
Bye-bye.
Whoa, cool voice effect, huh? All right, guys. Next up from Genprex, we have Rodney Varner, president, co-founder, and the CEO. Can we have Rodney on the screen, please? Hey, Rodney.
Hi.
How are you?
Today? I'm great, and you?
I'm doing wonderfully. Thank you for asking. For the folks that are not familiar with Genprex, which I'm sure there's a small group, would you mind giving a brief introduction to your organization and what you do?
Sure. Well, again, I'm Rodney Varner, CEO and a co-founder. Genprex is developing gene therapies for cancer and diabetes. We're addressing some of the largest markets there are in medicine, lung cancer and both type 1 and type 2 diabetes. Our lung cancer program is much more advanced. We've been working on it for more than a decade, and we've got 2 phase 1/2 trials upcoming.
Fantastic. All right, so guys, gene therapy. Keep your eyes peeled. For the presentation, I believe that Chelsea will be our producer. So Rodney, you can go ahead and take it away, and just whenever you want to switch aside, just say next.
Okay, great. Okay, well, again, at Genprex, we're reprogramming the course of cancer and diabetes using gene therapies. Next slide. I commend you all to read the forward-looking statement slide. I know you see them with every presentation, but they are important, and I hope you do read them. By the way, this deck, actually an expanded version of this deck, is available on the Genprex webpage for those who want to look more closely. It's got quite a few more slides and more detail than what I'm going to be able to go over today, particularly with the time constraints that we have. Next slide. This is information you can get on your trading platform, but basically the most important points on it are the trading symbol, GNPX, and I think our volume. We have a very healthy trading volume. Like many other biotechs, our stock has been down the last few weeks. I see we're having a good day today. But very importantly, I think for our company our size, we have a very strong cash position. If you see on the right side, we have 47 million of cash and no debt other than trade payables. Next slide. I'm going to spend the bulk of my time on this slide, actually. These are points that we believe are important that you should consider if you're looking at GenPrex. First, we have a gene therapy platform. It's built around a non-viral nanoparticle delivery system. This is for our oncology program. We have a series of genes that are in-licensed, and we have this non-viral nanoparticle delivery system that can deliver any of a number of these genes and possibly other genes to a wide range of different types of cancer. It also can be combined with other approved cancer drugs, such as two of the largest selling lung cancer drugs that I'm about to tell you about. But it's not limited to those two. We can combine with a large number of drugs and potentially improve the benefits of those drugs to patients. And we can it can be applied to a wide range of cancers, not just lung cancer, even though lung cancer is a huge market in itself. So we are addressing large markets and unmet needs, and I mean really large markets and unmet needs. Lung cancer is, the market for lung cancer therapeutics exceeds $20 billion a year. And our initial development program is to combine our gene therapy with two of the largest selling drugs. One of them is Tagrisso by AstraZeneca. It had sales last year of about $4 billion. And we have an FDA fast track designation for the combination of our gene therapy, Recorsa, with Tagrisso. That essentially, we believe, will allow us to participate in that very large market. Additionally, we have strong preclinical data from our academic researchers that shows that our gene therapy is synergistic with Keytruda, which is Merck's largest selling drug. It had sales of over $14 billion last year. And let me note that we're not attempting to take market share from anyone. Our program is to combine with those drugs, improve their benefits, and participate in those massive markets. Again, we have the FDA fast track designation. In order to get such a designation, a company has to demonstrate to the FDA that its drug has the potential to be an improvement over existing therapies in a particular patient population with unmet needs and a serious disease. We're gratified that we were able to satisfy the FDA on that for Recorsa combined with Tagrisso. Now, we have demonstrated clinical achievement here. This is not just theoretical. We've done 2 prior clinical trials. We've treated over 50 patients with Recorsa, and we've shown strong evidence of efficacy and a very favorable safety profile related in relation to other lung cancer drugs. We have world-class academic partners, MD Anderson in Houston and the University of Pittsburgh for our diabetes program. I haven't mentioned our diabetes program up until now, and let me touch on that as well. It's a different type of gene therapy than our oncology gene therapy. It was developed at the University of Pittsburgh, and research is ongoing now in that technology, and it addresses both type 1 and type 2 diabetes. About 10% of the population of the United States, or 34 million people, have diabetes, and of course there are similar numbers around the world. So it is also a truly massive market. This diabetes gene therapy, according to the researchers at the University of Pittsburgh, has the potential to reduce or eliminate the need for insulin treatment for diabetics. And of course, that would be huge. the University of Pittsburgh recently received a $2.6 million NIH grant to pursue that technology in primates, that is apes, and that research is ongoing now. We view that NIH grant also as important validation of the technology, because those grants are heavily peer-reviewed and competitive to receive. And so we're gratified that the University of Pittsburgh received that. Also, just last month, we were awarded, along with Dr. George Giddies of the University of Pittsburgh, the University's Award for License of the Year for this technology and our work with the university in developing it. We're proud to receive that because the University of Pittsburgh is a very distinguished medical research institution with many excellent technologies coming out of it, and we were really pleased to receive that. I believe that you can see information on that award on the university's webpage as well as ours. We have an expanding technology pipeline, as evidenced by the in-license of the diabetes therapy last year. We're also reviewing additional technologies for in-license and also developing additional technologies within our company. We haven't announced those yet. We're not far enough along that we think they should be made public, but we're doing that on a regular basis. And then, as I mentioned, we have a strong balance sheet. You saw the cash number earlier, and again, no debt other than trade payables. So we're well positioned to advance our programs over the next few years. Next slide. This is our R&D pipeline. Again, we have the two clinical trials that I've mentioned, ACCLAIM 1 and ACCLAIM 2. The one with the star on it is the one with our fast track designation, FDA fast track designation. ACCLAIM 2 is the one with Recursa plus Keytruda. The next two are the prior trials that we did. We did a phase 1 trial with our gene therapy alone as a monotherapy. We did a phase 1/2 trial with our gene therapy combined with Tarceva, which is a prior generation EGFR inhibitor of the same class of drug as Tagrisso, but just an earlier version. In earlier years, it was the largest selling of that category of drug, but Tagrisso has overtaken that in the United States, and thus our change to Tagrisso. And we have these discovery programs that I mentioned before. And then finally, we have the diabetes program, which is preclinical at the University of Pittsburgh. Next slide, please. Next slide. I'm skipping some of these in the interest of time. Next slide. Just a few more words on the non-small cell lung cancer market. Again, it's a truly huge market. Lung cancer is the second most common form of cancer, and it kills more people than any other form of cancer. Over 2 million cases a year worldwide, 235,000 a year in the United States, and 84% of those are non-small cell lung cancer, which we're targeting. Again, sales of Tagrisso, which we're combining with, $4 billion a year, Keytruda, $14 billion a year. Global market over 26 billion. So, and again, by combining with these already selling drugs and improving their benefit, we could participate in these very large markets that are already created by these other drugs. And we're not taking market share away from them. We're supplementing the benefit of those drugs, which we believe would increase their sales along with ours. Next slide. This is an illustration of our platform. As I mentioned, we have multiple genes under license. These are therapeutic genes against cancer. We have multiple drug synergies. The researchers have shown that our gene therapy can be combined with and improve the benefit of a wide range of other cancer drugs, including the two that I've just told you about. And we can address multiple cancers. Researchers have identified a number, more than a half dozen already, other cancers that our gene therapy might address. These are researchers both that we're working with at our academic institutions and also researchers at other unrelated institutions. Next slide, please. This is an illustration of our nanoparticle delivery system. This is really unique and I think quite interesting. Most gene therapies are delivered with a virus. That is, a virus is hollowed out, genetic DNA is inserted into the virus, and that's used to carry the gene into tumors. Those have limitations in that they can cause immune responses and unwanted side effects. And also, in many cases, they have to be injected directly into a tumor. Thus, they're limited to tumors that can be identified and reached with a needle. This nanoparticle delivery system does not use viruses. The DNA is encapsulated within a lipid nanoparticle. It's put into a liquid solution and injected by IV, a fairly standard 30-minute IV, and the nanoparticles are carried throughout the body where they attach to tumors wherever they're found. Metastatic tumors wherever they might be, so they don't have to even be identified, and they don't need to be reached with a needle. So this is very important, and to our knowledge, we're the only ones doing this in cancer, and certainly we're the only ones who have treated patients with it. Next slide, please. Next slide. It's important to note that our gene therapy, which is branded Recorsa, we actually have the FDA approval of the Recorsa trade name. It modulates the immune system, and that's why we call it an immunogene therapy. Next slide. Next slide. And next slide. I'm not going to get into the details of the slide, obviously, due to time limitations, but it's important to note that data produced by our academic researchers show that our gene therapy plus Tagrisso reduces tumor growth in Tagrisso-resistant tumors. And what happens with Tagrisso and other cancer drugs is that patients receive them, they benefit from them for some period of time, and then they become resistant. In the case of Tagrisso, nearly 100% become resistant. And our fast track designation targets those who become resistant. We combine Recorsa with Tagrisso, and research shows that we can reduce tumor growth even after these patients have become resistant. Next slide. This is the design of our Acclaim 1 trial. This is the one with Tagrisso. Just to hit the high points, it's targeting, again, patients who have received Tagrisso and seen their tumors progress, which almost 100% of them will. And we're combining our gene therapy with Tagrisso and treating those patients who see their tumors progress and comparing the result with a group of patients who continue on Tagrisso. So what we have to beat is the performance of those who continue on Tagrisso versus those who receive our drug combination. We're targeting about 92 patients, some in the, I think 18 in the phase 1 portion, 74 in the phase 2 portion. And again, the bar that we have to clear is to see an improvement over those who continue on Tagrisso. And this was the clinical trial design set forth in our FDA fast track designation. Thus, the FDA has already looked at this and agrees that this is the population we should be targeting. Next slide. This is more details on the Acclaim 1 trial. This is in our deck on the web page. I'm going to skip it in the interest of time. Keep going. Again, as I mentioned, we're showing our drug Recorsa shows synergy with immunotherapies. Next slide. importantly, it also shows synergy with the combination of immunotherapy and chemotherapy. This is important because many patients who receive Keytruda also receive a chemotherapy. Thus, if we can show an improvement over that combination, then we can cover virtually all patients, late-stage cancer patients who would receive Keytruda. And if we could be successful on only one of these drug combinations, either Tagrisso or Keytruda, it would be a home run. We would be able to participate in these multi-billion-dollar markets. I believe we'll be successful with both of them. And when we are, we'll be able to treat a large majority of late-stage lung cancer patients and participate in the markets of both Keytruda and Tagrisso. Next slide. And recently, our researchers presented a presentation at the AACR. This was, I think, April 10 of this year, showing a rationale for our gene therapy plus Keytruda to be used first line in lung cancer. Of course, first line is the holy grail. That's the first patients that receive a therapeutic, and that's the largest market. So our researchers explained, they described the rationale for why our gene therapy should be eligible for first line treatment. Next slide. This is our acclaimed 2 trial with Keytruda. Again, it's combining our gene therapy with Keytruda, in this case, comparing it to chemotherapy, which is the alternative for patients who become resistant to Keytruda. And again, eventually, most patients do become resistant to Keytruda. So most patients who go on to Keytruda are going to need an option. And right now, the standard of care is chemotherapy for them. And we hope to supplement that or replace that standard of care with our gene therapy plus Keytruda.
We are at time, Rodney, so final remarks, please.
Okay. Well, thank you all very much for listening. I appreciate your time. And again, I commend you to look at our webpage if you have further interest. Thank you very much.
All right. Thank you, Rodney. Genprex.com is up on the screen, ticker GNPX. Rodney, thanks so much for being with us today, and have a great weekend, my friend.
Thank you. Thanks very much. And you have a good weekend as well.
Thank you. All right. Let's bring Cassidy back on screen for another fireside chat. Hey, Cassidy. I figured by now you would turn on the Netflix fire video on that TV behind you to really set the mood, but I think yeah, but we'll have a shovel side chat. So we got the shovel in the background here, and maybe we'll get the story on that. I'm assuming a groundbreaking of some sorts, but I'll get out of your way. Cassidy, it's your show.
Thank you. Tony, how are you doing?
Cassidy, I'm doing well. How are you?
I'm doing really, really well. Great. Well, we don't have too much time, so let's go ahead and get it started. But for those attending who might be new to your company, can you give us a brief overview of what BioHitech does and kind of where you fit into the waste management industry?
Sure, Cassidy. I'll even explain the shovel in a little bit. We bring technological solutions to the problems of waste that affect us on this planet. I like to think about it as 2 different lines of business, one that attacks food waste, and it attacks it both at the inception and in the disposal of the food waste. We do that through a piece of equipment we call a digester that is coupled with technology that allows you to measure what you're throwing away and allows you to then dispose of your waste in a way that keeps it out of the landfills, actually creates a liquid that can be disposed of naturally. We've deployed a lot of those through the years. We've deployed a lot of them in the past year with Carnival Cruise Lines and some other people. The other part of our business and the other waste issue that we attack is the issue of municipal solid waste and where do communities go with it? And what do you do with it? And how do you keep it out of the landfill? And we have developed a plant. The shovel relates to a groundbreaking of a plant in Martinsburg, West Virginia. And at that plant, we convert municipal solid waste into a solid recovered fuel that can be used to replace coal, We believe it has other uses as a feedstock for production of other types of renewable energy. We're the first, it's the first of its kind in the US. We're very proud of it, and we're learning a lot as we stand up the operations there. So those are the two pillars of our business that we're involved with most extensively at the moment.
Very cool. I love the circular economy system that you're developing. But you said you are working with Carnival Cruise Lines. You just broke ground, or at some point broke ground, on a municipal waste facility. So it seems like you've experienced a good bit of growth and traction. So can you talk about the drivers of the growth that you're seeing and your perspective on how today's evolving macroeconomic fundamentals are shaping your strategy for capturing market share in the digester market in the future?
Okay, I can do that. I will tell you that when you look at our business and you look at our digester business, clearly one of the drivers of growth for us is the fact that business is opening up again. If our digester fleet that has been deployed, our technology that has been deployed, it's basically going to double this year with the Carnival contract. But when you look at that fleet before, there was a good distribution between restaurants, hospitality, retail, hospital, government. There were a number of verticals that we operated in. You could tell that a few of those verticals have been interrupted in the past year and are certainly now poised to come back. So we think that's certainly a fundamental that is about to swing back in our favor, because it's good for our customers. It'll be good for us. So we see that as a real fundamental of a regaining that. You know, the other thing that we see on the digester side of the business is it just feels like you have to be in the right place at the right time. There are regulations that are being put in place in different areas that impact what you do with food waste, which is a surprisingly large component of what goes into landfills in this country. And there's also a heightened awareness and a heightened responsibility that I think we all feel to address the food waste problem overall, because it just doesn't make sense for us to throw away so much food when there are so many people who are hungry or who are short. So the technology enables you to measure that, and what you can measure, you can control. So we're addressing fundamental macroeconomic factors, yes, but fundamental problems that we face as a globe. So we think that on the digester side of the business, we like the fact that we act on both ends of the spectrum here, and that if you do have to throw it away, well, then you can do it responsibly, because that's another factor. That's another thing that is shifting for us and becoming more important than it ever has. You know, if you look at the plant side of the business, one of the factors that really drives the opportunity to grow there is the fact that landfills are not being built at a record pace, if at all, in the country today. The ones that we have are full. You're hauling trash further. You're using more fossil fuels to do that. And there just needs to be a solution that takes that which is going to be thrown away today and converts it into something that has a useful purpose. Again, it feels like we're on trend with that. Certainly, we're addressing a problem. We're addressing a need that exists in our country today. So when we look at those factors, we think they position us for growth. The other thing, though, that always positions a company for growth, or is a requirement for growth, is you have to execute. And when I think about our business and where we stand today, the opportunity on the digester and technology part of the business to execute has been something we've actually experienced in 2020. We've actually been able to grow our business in 2020 and execute at scale. So we positioned ourselves during that period to do that very thing. And then with the plant facility itself, it's still in a commissioning phase. I mean, we're an early early adopter here. We're an early pioneer of this technology. So we're learning, but we're doing, and we're making a really good fuel that's got a lot of possible use. So those are the things that we're doing to position ourselves for the growth. And we think the environment and the appropriate focus that we have as a country to do things in a more circular fashion, as you said, we think it positions us well if we do our job in this coming year and the years beyond.
That's fantastic. Thank you for that. And I guess my next question kind of follows on from that. As we all know, waste is a huge problem globally, and innovative solutions like yours are going to be really key to help solving our waste problem. And I think both sides of the business are, addressing different types of problems within waste, and they're both very important. But what needs to happen, maybe through regulation or economics, to really enable large-scale commercialization and adoption of technologies like this? So in other words, like, what key kind of triggers or milestones should we be looking out for?
I think you've well described waste as a global problem. It's a global problem that plays itself out in municipality after municipality, state after state. And there is a heightened emphasis that we see in states right now in saying, hey, it doesn't make sense to throw away this food or put it in the landfill. There are other regulations that need to be adopted here. There are other ways to do this. We want to keep it out. And that conversation, it feels to me like it has enlarged over the past several months. So we think that is in fact one of those things that needs to happen in our country. Landfill capacity, as I said before, and what communities do with their waste is a local issue. I mean, and in some part it has to become a household issue or a business operational issue as well. So we believe that as we look at that, and as you say, okay, there needs to be a large scale adoption of these pieces of business. Part of what we want to do is tell our story, because we believe that we offer solutions that work well with these issues. If you're a business operator and you create a quantity of food waste, first of all, you want to know that you're not throwing away any more than you should. You want to understand your supply chain. But then if you're going to have to do that, you want to do it in a way that's clean, in a way that's responsible, in a way that deals with the waste at its source. If you think about the consumer today, I think that consumer is going to be more focused on businesses operating responsibly and ethically. There will be a groundswell of emphasis on that from the consumers, from the voters. But also, if you're going to go eat in a restaurant, it's really nice to know that that's a clean environment, and there's a heightened awareness and desire for that than there ever has been. We deal with the waste where it's created, and we keep it from having to move through. So, our belief is that when you look at how you scale this and how you take the next steps with this, and what you see as a trigger for it, somebody has to go out and do it. I mean, that's why we did Martinsburg, West Virginia. That's why we used a shovel to break the ground. There has to be someone who goes out and says, hey, we can make a really good fuel out of this thing we were digging a hole in and putting in the ground. We can use that really good fuel to replace carbon-based fuels in a way that will be good for the environment. So instead of digging a hole in the ground and burying it, you're now using it to replace something else that has a more harmful environmental impact. So we think that when you look at those things and you look at large-scale adoption, we think large-scale adoption, yeah, we would like that, but we understand that it has to work locally first. It has to serve people locally first. And we're really focused on that here. We think that as you solve big problems, you earn the right to solve big problems, and you earn the right to grow. And we're focused on doing that.
Yeah, I think that's great. I love how I guess at least on the municipal side, not only are you solving issues of waste and landfill, but you're also creating opportunities to solve other environmental challenges as well, such as fuel. So I love the kind of two-pronged aspect of that. I think that's really interesting.
And I feel like we just kind of touched the tip of the iceberg here, because anytime you're first at doing something, you may find that the fuel that you create has even broader application, has even broader use than what you realized at first. And we're excited by that. We think that this is a good thing for the environment. We think it's a good thing for the communities, and we're really excited to be a part of it as it rolls out.
Yeah, I couldn't agree more. So on the digester side, what other verticals do you see as significant growth opportunities? I know you mentioned a couple sectors that in the past year or so you haven't seen much activity, but moving forward, as we kind of enter a phase of economic recovery, where do you see some major growth opportunities? And also, I'd love to hear your answer on the municipal side as well, where the growth opportunities within municipalities.
On the equipment and technology digester side of the business first, I would tell you that yes, we've executed on a very large contract with Carnival, but there's a lot of other things on the oceans that have a need for a digester and a solution as well. Whether it's platforms, whether it's other ships, whether it's, I mean, Carnival is a part of what's out there, but we know our solution serves that. So why wouldn't it serve the other things that are on the oceans or seas as well? We believe that there's an opportunity in the healthcare arena, certainly. You know, that is consistent with an aging population, that is consistent with a lot of things that go on. And the ability for that sector to appropriately dispose of and manage their food supply just seems to make tremendous sense to us. So we're working hard on that. And it's not a new, but I think I can only answer this question by saying also, as the consumer comes back to the restaurants, as the consumer comes back to hospitality, as we see that coming back online, we've done pretty well during the pandemic. We've worked with our customers during the pandemic. We've learned a lot about our ability to deliver at scale. You know, we had the opportunity to do that last year. So we're not going to neglect any of those verticals, because we think that we've honed the solution. We've strengthened our ability to deliver the product, and we understand so much more about how it can impact waste at its origin, that those are all really good things. The other thing I would tell you on the plant side of the business, and when you look at the opportunity to grow that, you know, I mentioned earlier that these are global issues, but they're local problems. So you have municipalities, you have states who are looking for solutions to this. And what I love is when you can take that which is being thrown away and redeem it to a different use that's better for the environment. So you have municipalities who are struggling with landfill capacity. You have recycling markets that are a lot different than they were a few years ago, that are begging for solutions. And we've got something that creates a clean place for that waste hauler to bring their waste in a contained environment, using technology, creating a fuel that is good for the environment and useful in many ways. We're getting a lot of interest from municipalities, from states, as to how we could bring the solution there. So we're learning a lot. We're building a foundation to grow and solve those problems locally. But that's what we're seeing. I mean, and it's been good.
Fantastic, guys. Thank you so much. Just want to let you know we're out of time.
We're out of time. Okay. Well, thank you for the opportunity to visit and talk about our business. I appreciate it. And hope you all have a great weekend.
Yeah, thank you. And hopefully we'll see you breaking more ground in the future.
I want to use this shovel. So, okay.
That was an awesome transition. Great segue, Cassidy. I loved that. All right. Tony, Cassidy, thanks so much for joining us at the Benzinga Small Cap Conference. Hope to see you again.
Thanks.
Tony, you're muted, Tony. You're frozen too.
Okay. No. Hopefully not. Can you get my voice clearly?
Yeah. Now I can hear you. You're going to want to share your screen.
Okay.
So just so you know, in the bottom middle of your screen, just like Zoom. There you go.
Share
Very
screen.
well.
There we go.
And while you're doing that, Tony, would you mind introducing yourself and your organization, telling us what you guys do?
Yes. And so, hello, everybody. Thank you for joining us on the call today with Benzinga. Thank you, Benzinga, for hosting this. My name is Tony Tontat. I am the CFO of BioPharma, and we are specialists in creating cell therapies for oncology, specifically solid tumors.
Fantastic. And were you able to get your screen share working there?
Okay, so screen share, here it comes, right? Here we go. And so you guys can see on here that this is our corporate presentation that we had done the IPO with, and our science is fairly complex. And so most of the time, I prefer to go through a generalist format in which I will offer you this following format. The technology module lasting approximately 4 or 5 minutes, the financial module lasting approximately 2 minutes, and then the catalyst module 2 minutes, and of course, most of the time spent on comparables thereafter. Does that make sense for you, Neil? Would that work?
That works for me. Thank you, Tony.
Right, so the Curomic presentation, everybody can pull it directly from ir.curomic.com. And so we can certainly share that, but you can see here it's fairly scientific, right? So I would like to offer the generalist format instead. Would that be okay, Neil?
I approve. Continue.
Okay, so hello, everybody. So I'm going to go ahead and launch into our technology module. Please know that there are liquid cancers, which are all the cancers that are going through your circulatory system, like leukemia. And then there are solid tumors. Curomic is solid tumors. So we work on cancers that are essentially sitting on all of our organs. So that would be ovarian, prostate, lung, brain, kidney, so on and so forth. Next, for the treatment of cancer, there are what you see in the labs called small molecules created by humans and put into humans with significant side effects. What Curomic does is called live cell therapy, otherwise known as CAR-T. In the live cell therapy, a T cell is extracted out of a donor, gene edited, and given to a patient. So that's what Curomic does, a live cell therapy. And also within the live cell therapy, there is the autologous format in which T cells are extracted from the patient, gene edited, and given back to the same patient. Here's a problem with that. When you go and use T cell from a sick patient, try to gene edit it, that T cell doesn't survive so well. So the next generation of live cell therapy is called allogeneic. You guys can see it directly on the screen. This is T cell directly from a donor. We take it out, we gene edit it, and then we give it back to the patient. Very similar to what you see in an organ transplant. And so within even the allogeneic live cell therapies, there are two different versions. The one-on-one version, which is very much like an organ transplant, or the version that Curomic does. In the Curomic version, the allogeneic off the shelf, we take healthy T cells from a healthy donor, we gene edit it, and next we do what other people don't do. We expand that so that it can be used to treat up to 500 patients. And the typical dose is about 12 million cells. Okay, next we have biomarkers. And so most of you know biomarkers are probably proteins that are sticking out on the surface of the cell. And these biomarkers are used by scientists in order to differentiate cancer cells from healthy cells. That said, the Curomic version, we use a proprietary artificial intelligence engine to be able to generate new biomarkers that improves our chances of differentiating healthy cells versus cancer cells. So that's it. That concludes our technology module. So I'm going to ask you if you have any questions. If you don't, I will go directly into the financial module. Neil, you have any questions?
So far, actually, so there is one person here that's asking if you can comment on the status of the Rensselaer deal.
The Rensselaer deal, I don't know. We don't have that as a deal, sir.
I might have mispronounced it. Other than that, we don't have any questions right now. But guys, clearly Tony is open to taking questions. So make sure you're dropping those in chat, and we'll make sure they get over to him. So Tony, I think right now just keep going, and if we get some more, I might stop you and make sure you get those questions.
Okay, so on to the financial module. So in September 2012, the company was founded by Dr. Maurizio Curiva, Dr. Scott Delbeck, and Mr. Gianluca Rotino. We raised $23.5 million since the beginning of the company, and the company IPO on the 20th of October 2020. Since then, at the IPO, we sold 1.25 million shares, and we raised $15 million with a $13.24 million net raise. Our monthly burn is currently run at $650,000 to $750,000 monthly. Our cash runway is expected to extend to June to July 2021, so it's coming up very close. And without having to treat severe adverse events, it is likely that our cash runway could extend all the way September to October 2021. Okay, so that's it. That's my financial module. And I'm sure you guys would have many questions upon our financing strategy going forward as we file the IND, getting the FDA approval, and then starting in human. So that's it. Let's go directly to the catalyst modules, right? In the catalyst module, in 2Q 2021, so we have approximately, 46 days until the end of the quarter to file our IND. Next, when we file our IND, it's likely that we will have 30 days until the FDA return and give us authorization to begin first in human. After we get that, we have announced that in 3Q 2021, we will be commencing our first in human dosing. And in 4Q 2021, we will be expecting the first in human safety and efficacy data from the trial. Okay, so do you have any questions for me, Neil?
Right now, everyone is really enjoying it and they don't have any questions. So
okay, so I'll just go directly to our Curomic presentation. And on page 27, I would jump right into the comparables. Right, so you guys can see here on the screen share, Curomic truly is very unique because we are taking the intersection of technology and live cell therapy. So on the left side, you are seeing all the companies that are operating inside artificial intelligence and oncology. And then on the right side, you're seeing all the guys who don't have artificial intelligence for biomarkers, but they are using live cell therapy, very similar to Curomic. So I'll just start with a few comparables on the left, right? So in Lantern, they have an excellent AI engine that is used to salvage clinical trials. So their AI engine combed through many clinical trials and they try to fish one out that they can save. Okay, and they run those trials again for a new indication or the same indication. But essentially, it's an AI engine for clinical trial salvage. Very, very successful, and I wish them best in that. And so the next one is BioXcel. In BioXcel, BioXcel, they have an AI engine that goes through many off-patented drugs. They take those drugs back and run the trials again for a new indication. So that said, BioXcel is an AI engine for extending patent life of old drugs. And then next, there are Black Diamond Therapeutics and Schrodinger. Both of them have AI engine value in the multi-billions, and they use their AI engine to do biomarkers very similar to what Curomic does. But that said, we don't share our codes with them, and they don't share their codes with us. So they use their small molecules for therapeutics instead of using live cell therapy. So that said, you can see just on the AI component, Curomic is priced very attractively. And so now let's take a look at the live cell therapy guys on the right side. All right, Juno and Kite, they have been acquired by Gilead and Bristol Myers respectively, just as they were finishing up phase 2 and going into their pivotal trial to get approval by the FDA. So they were acquired before they were approved. And then next you see Kodiak, value at nearly $350 million as of the latest. I can see that Kodiak had gone through their IND and got approval for the IND. And you can see that the value creation potential for Curomic going from sub $100 million today all the way up to where Kodiak is. And Kodiak is also in the live cell therapy space, just like us. So if you think about Kodiak and Curomic is approximately 45 to 60 days behind Kodiak. And then there is Fate Therapeutics, value in a multi-billion dollars. That's considered the bellwether of our space. They are doing solid tumors and CAR T, just like Curomic. So if you look at Fate and you look at Curomic, Fate is approximately 9 months to a year ahead of Curomic where they are. So the potential for Curomic to create value from a sub $100 million valuation is extremely high. So that's it, Neil. That concludes essentially all of my modules. And so you let me know what kind of questions that the generalist audience might have.
Yeah, so we have one. I'm not really sure what they mean, but I'm gonna give it a try. So have you seen your technology work on subjects before you start trials on humans, or is it still only on theoretical basis?
Oh yeah, so you know that CAR T back in September, October of 2014, it came to the forefront of science for the first time. The theory was that you can take a T cell directly from a human, you can gene edit it, and then you can give that back to the patient, and that is a lot more effective than giving a patient a small molecule completely from a laboratory. So in September, November 2014, that was a novel concept. As of today, that concept is alive, very, very much alive, with 2 marketed drugs on treating leukemia, and they are Yescarta and Kymriah. And so it's no longer a concept. What Curomic is going to do that's different than the marketed drugs for CAR T is that we're going to go into solid tumors. Currently, all the CAR Ts, they only work in leukemic indications, meaning how do you say, blood cancers. So solid tumors is still the predominant indications, right? If you have liquid and solids is like 90% of the market. So when Curomic succeed in doing this, it's going to be a spectacular value creation.
That's remarkable. And how would you compare like your approach to this to your peers or competitors in the space?
Yeah, and so in the sense that when we are taking out T cells, there are different types of T cells. Some companies would go and take out T cells that are called NK cell. Others would use stem cells, and Curomic is specifically using a subset of those T cells called gamma delta T cell. We had chosen that specifically because it is much easier to maintain in ex vivo expansion, meaning making clones of the cell, and then of course in gene editing, putting in information so that the gamma delta T cell know how to go and find a cancer so we are targeting. So those are the main differentiations.
And then do you have any operational or strategic advantages that you find compared to your peers?
Oh, yes. So when you think about, I'll just highlight a very specific thing for you, right? In other CAR Ts, the manufacturing of the cells, the cloning of the cell after the gene edit and extraction, it is very difficult. So cloning these cells, normally the CAR T company, they are not confident that they can do it consistently. So as such, they have to hire out contract manufacturers to settle the process. Curomic is lucky in that we have the scientific knowledge in-house, and we also have GMP facility completely locked up so that we can manufacture all of these cells ourselves. Manufacturing, specifically, I'll use the word cloning, right? So you're trying to clone cell from a core block of cells.
Okay, so you're vertically integrated.
Yeah, correct. We're not allowing this process to go out-house.
Okay, yeah, great answers. Everyone's very, very pleased. From an investor perspective, if there's one thing that everyone should remember about Curomic, what is that thing?
Yeah, so that we are solid tumors, allogenic, and off the shelf, meaning we can take a sample from a single patient, gene edited and expanded up to treat to 500 patients. So that is very unique because currently the whole entire market, they have to do a single donor, a single patient. That makes sense, right, Neil? If you think about it, right? If you are able to go and get one single good sample and you expand it for 500 different patients, you have a lot more consistency from batch to batch versus having multiple donors. So Curomic is very, very special in that.
Absolutely remarkable, Tony. Incredible. Thank you so much for being here with us. I think that your scientific approach unto itself is absolutely fascinating, in addition to the investment opportunities you guys present. So thank you so much for being here with us.
Thank you. And we look forward to anyone who have any questions to go to our investor website, ir.curomic.com, and post any comments. And we look forward to having further interactions with you and getting your answers on time. Okay. Thank you.
Thank you, Tony. Thank you for being accessible.
Have a great weekend. Thank you, sir.
You too. Guys, that's ir.curomic.com. As always, the great thing about these organizations that we bring here today is that they're very responsive to their investors. And that's folks like me and you. So take that opportunity to do some deep due diligence on your potential investment opportunities. Next up, it is my great pleasure to bring on from Audia, Jeff Trauman. Am I getting the pronunciation right?
It's actually Trayman, like the H doesn't exist. Trips everybody up.
Oh man, it's your name is like a puzzle, and you solved it for me. I appreciate it so much, Mr. Trayman. So for the folks that don't know about your organization, would you mind giving a brief introduction?
Yeah, so I mean, my name is Jeff Trayman. I'm the founder and executive chairman of the company, and we're essentially a technology company that is built in artificial intelligence platform that interacts with audio, and we're looking to reinvent how people can engage with it.
That sounds incredible. I can't wait to see how you're doing it. Would you mind getting your presentation started?
Yeah, I'm ready to go. I assume you guys can see my screen.
Yeah, we see like the presenter view, so we can see like the next slide and all that. So what you want to do, I think, is go to the top and go to display settings. That drop down, there should be something that says like swap. The swap.
Yep.
There we go. All right. Thank you so much, Jeff.
Okay, good. Great. Well, thanks everyone. Again, Audia, we're looking to reinvent how consumers engage with audio. So this is our standard disclaimer. And what I'm going to do is just give you an overview of the two products that we're bringing to market. One is the Audia app and the other is the Vodacast app. So with the Audia app, what happens here is consumers can download this application, they can pay a subscription, and then they're able to listen to any AM/FM radio station without commercials. They can also personalize the content that they're listening to on radio for the first time. Vodacast plays in the podcast space, and we bring some unique capabilities to the podcast realm that I'll go into in detail as we get through the presentation. So first, I'm just going to go over the Audia app by itself. Again, this allows commercial-free radio listening. So one of the big problems with radio out there is that they have essentially too many ads and they have no choice in content. And this becomes an issue as consumers have more and more options to experience audio in a premium environment where they're accustomed to not having to listen to ads and being able to choose exactly what they want to listen to when. Radio doesn't have a solution here, so we're stepping in to provide that solution. And the solution we're providing is an app called Audia. And with this app, you're able to download the app and you can find any AM/FM radio station in the country. You can listen to it without commercials. And the way we do that is through this AI platform that we've developed that is able to identify the beginning and end of all the ad segments and then replace that with other content. Now, what's interesting here is we're able to allow kind of the high value local content that radio is known for to go through while just blocking the ads. So for instance, when the local DJs are talking about an event that might be happening, whether that's a weather event, a festival, or a concert coming into town, that comes through, as does weather or traffic. And of course, you can program it to have some or none of these be blocked. But the high value local content that really differentiates radio from any other audio platform, that content comes through. And then for the first time, you're able to personalize that. And you can do that with skips. So radio puts something in front of you that you don't like, you can skip it. And you can also request content on demand and kind of program routines like you can with a smart speaker. So if you're getting in your car every morning to commute to work, you might program it to give you a quick traffic update, maybe something about the weather, hear an update about the game last night, and then you get right into the radio station. So it's this kind of flexibility that we're bringing to the platform. So how do we stack up against the competition? I think the big thing to look at here is really that bottom row of local content. That's the big differentiator that radio has. No other audio platform out there gives people a tie back to their local community. And we believe that's a big reason why radio still has a huge audience of about 270 million listeners every month. So if you look at the first column here, this is really what I call the Me Too music players. This is Spotify, Pandora, you got Apple Music, Amazon, they're all pretty much the same. It's ad-free, and you can choose anything you want as it relates to music content, but you don't have access to any local content. SiriusXM in the next column, again, ad-free, but again, there's no content choice, and these are national stations. So no tie back to the local community. And then you have Spotify and Pandora, the free versions, pretty much like the paid versions, other than you have to endure ads on that platform. And then of course you have radio. And where radio stands out, as I previously mentioned, is really this local content that you have access to. So where we come in with the audio platform is we bring this premium listening experience to radio. We allow people to pay a subscription, consume it without ads, and to have choice in the content that they listen to. So the way the platform works is we essentially built our AI technology on top of Google's TensorFlow library. So the data that we're using to train our AI is broadcast radio. So there's tons of it, it's unlimited, and we're able to put it through the TensorFlow platform and teach it to know the difference between a song, a DJ talking, a weather report, a traffic report, and also ads. And of course, we let the good content through, and then we block the ads. So this graphic here gives you an overall view of what happens with the live broadcast, which is that top stream, and then a broadcast where audio is processing the stream and replacing the ads with songs. So you can immediately see that first ad break on the top live broadcast, and this depicts kind of 3 ads played in a row. And you can see on the lower section, our technology would identify the beginning of that ad break, and then it would fill in with a song or with some music. Now that music may not match up exactly to the ad break, so when you rejoin afterwards, after the ad break, you can see that you're on a time delay slightly, and then you continue to hear the broadcast. Now this kind of accordion occurs where we can make that up with different ad breaks. So you're really listening in an environment where you're trailing behind anywhere from 50 seconds to, let's say, up to 5 minutes. We filed patents on all of our technology early on, back in 2018. The first patents have already issued, and the way we do this is we file patents and then keep them open through continuation in parts. So we have the opportunity to build this big family of patents over time as we discover more and more inventions to improve the platform. But the patents cover very, very broadly the use of artificial intelligence technologies against broadcast audio to customize the experience. The market that we're going after, I mean, again, I've mentioned that radio still has significant amount of listening. It's proved to be tremendously enduring, and there's about 270 million people that still tune into broadcast radio every month. But radio makes $0 on subscription revenue there. On the other side, there's about 133 million people who have raised their hand and started subscribing to the premium services. These are the internet streaming music players that are out there, and SiriusXM, driving about $14 billion in subscription revenue. We believe we're going to be able to pull some users from the existing group of radio listeners, and we're going to be able to pull subscribers from those who are already raising their hand and paying a subscription on other platforms. So we went out and engaged the Harris polling folks to get an idea as to how many people really wanted to engage with radio in this premium environment. So Harris went out and they got 2,000 respondents to this poll, and they asked them to self-identify themselves as radio listeners or people who are already subscribing to another platform. And for those who identified as radio listeners, the product was then described and they were asked how likely they were to purchase. And on the radio listeners, about approximately 7% said they were extremely likely to purchase. And for those who were already out there paying a subscription, about 12% were extremely likely to purchase. When you apply these to those populations, you wind up with a low-hanging fruit, a group of about 35 million consumers that are extremely likely to purchase this product. As part of that Harris poll, we did a Van Westendorp pricing analysis, and this showed that the optimal price point that consumers would pay to maximize revenue was $12 a month. So this leads into our go-to-market strategy. Radio, the way that we model our business at a $12 per month subscription, we show $10 of that going back to radio. Now, radio today makes about $3.75 a month on the ad model for every listener. So this is a little over 2x revenue to them for getting on air and kind of promoting the opportunity to listen in a premium environment to their consumers. And that's how we plan to go to market, to partner with broadcast radio groups, have them go on air, use their megaphone to tell their consumers that there is this opportunity to listen in a premium environment. So where we are right now is we just had our IPO back in February, and the purpose of the IPO is to get the funds to start launching these commercial trials. We announced 2 broadcast radio partnerships so far, one with Lakes Media and one with Sonoma Media. These groups reach about 350,000 listeners, and we're going to be starting to market this next month with Lakes Media and then Sonoma Media following shortly thereafter. Consumers are going to have the opportunity to download the app, listen for free for 30 days, and then they're going to have to convert over to subscription. So we plan on reporting on those subscription rates sometime in the July-August timeframe. So that covers the audio platform. I'm going to quickly go through Vodacast now. Vodacast is an app that we've built to address the podcasting space. And what we're bringing to the podcasting space is 2 new capabilities that don't currently exist. The first one is a digital content feed that correlates directly with the on-air audio. We're kind of depicting this in that first screen there, where you see some video and some images that correlate to a particular podcast. So the idea is today that when podcasters go out and research their shows, they're finding video, they're finding text, they're finding images that make the story more compelling, but they really don't have any way to present that to consumers. We've created this digital content feed that correlates with the on-air podcast that is being consumed by the consumer, to allow folks to go through this feed and interact deeper. That capability opens up the opportunity for podcasters to have access to digital revenue. Currently today, the only revenue that podcasters have access to is the audio ads that flow through. So the competition that we're up against here is pretty significant. There's a lot of music, there's a lot of players out there on the podcast space. The problem is none of them really provide the podcasters with any differentiation or the consumers with additional content. So right now, today, when a podcaster is is putting their show out there, they really don't care where you listen to the podcast. It makes no difference to them. They make the same revenue regardless, and they only make that revenue from the audio ad. And we're trying to change that. So for the first time, podcasters have a reason to tell their audience to go listen on the Vodacast platform, because when they do that, the audience is going to get a better experience with the digital feed. They're going to be able to interact with all of the brand content from that podcaster, and the podcaster is simultaneously going to make more money. So the revenue opportunities that we're introducing here not only consist of the digital ads, which we have listed in the first column here, but we're also bringing this on-demand capability to pay for podcasting. In this environment, you don't necessarily need to be a subscriber to a podcast to be able to consume it without listening to the commercials. So for the first time, you'll be able to, on the Vodacast platform, decide that you want to listen to a particular episode with no commercials. You can simply pay a micro payment of 25 cents for that episode and be able to consume in an on-demand environment without having to be a long-term subscriber. Although we of course support that as well. So the go-to-market strategy on Vodacast is very similar to what we're doing with Audia. We're essentially creating a platform where the podcaster can make more money and the consumer can have a better experience. We believe this will allow the podcasters to get on air on their shows and basically tell their audience to go download the Vodacast app and listen. This promotion will drive people to the platform. The podcast consumer will have a better listening experience and be able to engage in more content. And this in turn will drive additional digital revenue to the podcasters to kind of reinforce this strategy. So podcasting is a huge market today. It's continuing to grow at a 27.5% CAGR. And we believe it's a really interesting opportunity, and that we're coming in with a highly differentiated product. So there's been a lot of activity in the podcasting space. Another reason why we think it's attractive, you can see here all the different activities that have gone on. Spotify has really been driving this with their M&A activity, and now recently have had SiriusXM and Amazon both jump into this with acquisitions within the last year. But again, none of these are providing any additional content or giving the podcaster a way to actually make more money. So where we are with the product readiness on Vodacast is we do have the app available in the app stores. The digital feed is not yet active on all platforms, but we're just starting to do that. We're starting to enter into our first podcast partnerships where they're getting on air, they're promoting the Vodacast platform, and we're looking to provide some of the results on how we're doing with that later this year, which will coincide with our national launch as we build some momentum. This is essentially the team. I'm not going to go into this right now, just to leave a little time for questions. We also have a fully independent board of directors. And this gives you a little information on our recent IPO. It was a unit transaction priced at $4 and 12.5 cents. And those were the unit and the share price were immediately separable at the IPO. So key takeaways, we're entering two very large industries, coming in with some industry firsts on the AM/FM radio side, personalizing content and allowing people to listen to stations for their first time with no commercials. And on the podcast side, bringing in this interactive digital feed that supports the deeper stories. So a highly differentiated listening experience with strong IP, addressing large markets, and getting ready to ramp up our revenue in the second half of this year, and then meaningfully expanding that in 2022. So that concludes the presentation. I'll open that up to any questions.
Absolutely. Fantastic. Who is your what does your target demo look like, and what is your total addressable market?
Yeah, well, the demographic really matches the demographic that listens to radio, and a lot of people don't know this, but radio still draws in, a huge audience. And when you look at time spent listening to audio platforms, it's about 46% of the time is actually spent on broadcast radio. To put that in perspective, the next closest is really all the internet streaming providers, which are running at about 15 to 18%. And you have SiriusXM running around 7-8%. So huge audience is still going to that local content on radio. And we think that's really our primary target market. And it's easy to reach them when you partner with the broadcast radio groups and they tell their fans, their listeners, that they have this premium opportunity.
In which regions is going to be your scope?
Are you talking about geographic regions?
Geographic regions.
Yeah, well, we're starting in the U.S. That's where we have a lot of broadcast partnerships and relationships already. We've been working with broadcasters in the U.S. since 2012 on another project where we had a digital interactive feed that correlated with their on-air audio to make the ads interactive and the content interactive. We had about 580 radio stations on that platform, all major groups. So we've had long relationships with them. So it's a natural area for us to start. But this carries over very nicely internationally, especially in the international markets where the music scene is very local. And radio really does a good job of harvesting that local content for the consumer.
And what's your short-term approach to the liability side of your financials?
Oh, I'm not sure what you're asking there.
So I think one of our viewers noticed that there was a line of credit on your balance sheet. Do you have an approach to paying off debt in the short term?
Yeah, so that's a residual line of credit that was at $6 million prior to the IPO. We paid it down to $2 million at the IPO. It's with a local bank at a very low interest rate. What we're looking to do for the rest of the year is really prove out product market fit across both of these products. And with that product market fit, we think that really opens up access to capital as being a NASDAQ traded company. And from that standpoint, once we have a good idea of what the trajectory of the growth is that we're going to be pushing with these subscriptions, that's when we'll be looking to kind of refinance that debt and also potentially position us for additional growth capital to drive the demand that we're hoping to see.
And finally, I think you made a wonderful case for the green grass that exists for radio listeners to come over to something that provides more interactive, more selection, and clear value benefits over radio itself. How do you have a strategy for takeaway from the current streaming services that people might already be used to?
We do. I mean, there's a lot of listening that correlates over from that. So for instance, if you're an SXM listener, you tend to still listen to broadcast radio, or if you have Pandora or Spotify, you still tend to work in broadcast radio as well, because there's just no other place you can get the access to that local content, and people tend to go there. So we expect to be able to reach them there. And based on that Harris polling results that we got, we believe there's a fair amount of folks, and you can see it in those numbers. It was about 12% that were extremely likely to purchase this product that are looking for an opportunity to go back to get access to this local content, but they're only going to do it in a premium environment where they can avoid the ads and then be able to personalize the content a bit.
Fantastic. And to our audience of institutional and retail investors, what's the one thing that folks should remember as they look at you as an investment opportunity?
Yeah, I think the big thing to look at for us is the size of the markets that we're going after, and really bringing this first ever capability back to radio, where you have these huge audiences out there. And for the first time, people will be able to start consuming that content without commercials and in a personalized manner. So we think this is the most highly differentiated opportunity on the audio landscape to come around since really these music players started coming around, 5 to 10 years ago. So if we're able to show the results that we're hoping to show in these trials with our first broadcast partners, and we can really set the trajectory of how quickly these subscriptions are going to grow, that's really where we think the huge opportunity is for our investors.
Fantastic. Jeff, thank you so much for joining us today.
Yeah, thank you. Appreciate the time.
Our pleasure. Have a great weekend, sir.
Okay.
Guys, that was Jeff Trayman, cut off a little bit earlier than we'd like to. Sorry about that, Jeff. So guys, check out Audia. The website's very easy to get to. It's just audia.com, AUDDIA.com. I know I'm going to watch this very closely. Why? Because this is a product I would actually use. So this is something I would understand as an investment opportunity. So that's just me. So awesome having Jeff Trayman and Audia here today. Next up, we have Supercom. So let's go ahead and bring Supercom up.
Hello, and welcome to Supercom's May 2021 investor presentation at the Benzinga virtual conference. My name is Radam Trabelsi. I'm President and CEO of Supercom, and I'm happy today to introduce you to our story and provide some recent updates at Supercom. Attached, you'll find our safe harbor statement for your review. Supercom is a global technology security company. We have three segments which we focus on. Our main one is IoT tracking solutions. Essentially for tracking of offenders, we provide this solution to governments around the world. Some like to call this house arrest or home confinement. And we have two additional business segments in the secure identification and cybersecurity space. In secure identification, we essentially provide turnkey solutions for the issuance and reading of credentials, such as biometric passports, ID cards, driver's licenses, and so forth. And in cybersecurity division, we provide software solutions to protect endpoints at enterprises around the world. Some interesting investment highlights. We've been growing and expanding our footprint aggressively over the past years with 20 new multi-year government projects with long-term recurring revenues and predictability in the past 2 years alone. We've been gaining traction with our new Pure Health, Pure Care COVID-19 quarantine compliance technology, which we just won a $9 million project over 3 months in Israel. This is to help fight the spread of the coronavirus and a solution that we offered to governments around the world sometime last year after the COVID pandemic began. We have superior technology in the IoT tracking space, leading to over 65% win rate in competitive RFPs in governments in Europe that helped us win in countries such as Sweden, in Denmark, in Czech Republic, in Bulgaria, and more. And we've been doing some interesting cost optimizations, leading to increased gross margin of 900 basis points, while reducing operating expenses by 36% in 2020. Our EBITDA in 2020 grew to $2.8 million. We have secured a total of 119 patents, and we have insider ownership of roughly 23%, such that our focus, like yours, is to create shareholder value. One of the interesting parts of our revenues is the steady state recurring revenue. In 2020, 83% of the revenue was steady state recurring revenue. This consists of software as a service, a daily fee for our monitoring and tracking of assets and people on cloud-based software systems. This is where we're tracking offenders. We usually get a per day billing rate or per month rate. The more offenders that we're tracking, the higher the rate is, and it is recurring in nature. We have maintenance, which is post-implementation of a project, typically for 3 to 5 years, and then continued in renewals of contracts. Consumables. If we have passports in a certain country or driver's licenses or ID cards, they're buying everything from us. So we have ID cards, laminates, booklets for passports, and they're required continuously to purchase from us, also providing a recurring revenue aspect. We have software and hardware upgrades for platforms which we deployed, And as our customers expand, they need us to expand the solution to them. Also interesting on the right to notice our breakdown by segments. As you said, we have 3 main segments, the IoT tracking, the secure identification, also known as eGov in our business, and cybersecurity. And the revenues break down between 7.7 million, 2.2, and 1.9 in 2020. So our first division and focus, IoT tracking segment. Let's look at the market and some of the drivers. It's a multi-billion-dollar market of electronic monitoring of offenders with very high barriers to entry. There's only roughly 10 players around the world who manufacture this equipment and compete on these global RFPs. You can't come in with technology, however strong and however capable you are as a company, without showing references from at least 5 customers around the world. You've had to deploy this type of solution, tracking of offenders in home confinement or in GPS tracking in order to even bid. So our market is very niche and very barriered, and larger players around the world have a hard time entering because of this. There is growth across the globe in Europe, US, Latin America. In almost every region around the world, we notice that when the project goes up for rebid, it's at a larger size. So if Florida was 7,000 units, it goes up to 9,000 units. Similarly for California State, similarly for other countries around the world. And the adoption of EM technologies is driven by various factors, which are important to understand. Firstly, there's prison overcrowding, especially in the US. There's not enough room, more and more people are incarcerated, and the prison capacity is not growing at the same rate. This is also due to a cycle of recidivism, as it's typically called. People go into prison for 10, 20, 30 years. They typically lose ties with their close ones and their friends, and they learn how to be great criminals sometimes. They come out of prison, and without those ties, without the training and experience of dealing in modern society, they're likely to commit crimes again and go right back into prison. Hence, you see this image on the right of just people going into prison and coming out and going right back in. And we try to prevent that by having this step of getting out of prison, but still being monitored in a way and still having someone to communicate with in an ongoing fashion as they're being tracked, they're actually in their home or at their job where they're supposed to be. Also, there's heightened budgetary pressures. In the US, it costs $100 a day for a federal prisoner and $140 a day roughly for a state prisoner. And while someone is on electronic monitoring, the cost per day for the government, including the technology, including the services, cellular, everything around it, somewhere between $10 and $30 a day. So significant cost savings and significant improvements to the process of re-entry from prison, together with prison overcrowding. These are some market trends and drivers for this industry. And lately, with the pandemic of COVID-19, there's been further pressure increasing the market size for electronic monitoring. We'll talk about that soon. Our technology and services. So we have a suite called the Pure Security Suite. It's an industry-leading comprehensive offender tracking platform. Everything is proprietarily developed at SuperCom, from the hardware to the software on the cloud, software on the smartphone that we lock down. And this platform alone won us over 30 new government projects in the past few years. It's an increasing source of high margin recurring revenue because these projects are usually paid for per day, per unit. We lease the hardware and we charge for the software on the cloud. The technology includes real-time monitoring of criminal justice agencies, of these offenders, whether they're at home or on GPS tracking when they're out to go to work. It increases offender accountability, enhances public safety, and also provides other services that we provide as a company, including case management, treatment programs, employment services, and so forth. See here on the next slide what our suite looks like. You can see it has many components. And firstly, the Pure Tag, the historic or incumbent ankle bracelet, which you may have seen in movies or other places around the world, is a one-piece heavy ankle bracelet. You have to charge it every single day. It weighs a lot. It's uncomfortable. And if you don't charge it for one day, the battery runs out and you are violating the program and likely to go back to prison. With our Pure Tag technology, it's a very lightweight, ergonomic bracelet. You don't have to charge it. You don't have to charge it. The battery lasts for over a year. And on the program, the person doesn't have to charge it. They put it on their leg and they forget about it. Communicates seamlessly with a Pure Track smartphone. This is a hardened smartphone. We lock it down completely so people can't play with the location. They can't turn it off. They can't install other apps. They can't jailbreak it. Nothing of that sort. Completely proprietary and customized. We use the hardware of Samsung, their phones, and our software on top of it. We have a PureCom base station, which compared to the incumbent base stations is a battleship of capabilities. It has two-way voice communications. It has long-term battery life. It has biometric authentication. It has audio, many other features which are essential to running these programs effectively. And then we have the software, Pure Monitor, that runs on the cloud, which essentially you can see allows the officer to see where all these offenders are and who has done any violation. And they have the protocol on how to respond in that situation. That's the suite. And it scores us most of the points when we're competing. And this has been the leading driver for us winning more and more projects around the world with technology where we score very high. Here are some select IoT tender awards. We had a win rate of over 64 or 65% in Europe alone, 11 national Europe tender awards. And also in the US, we've expanded into many counties and many states, including California, Texas, Georgia, South Carolina, Tennessee, Wisconsin, and more. Just recently, we announced another award in California for up to $4 million over the next 5 years in this division. Interesting development. Over the last 12 months, the COVID-19 pandemic actually created a surge in EM demand. In close quarters, in prisons, it's very hard to maintain the social distancing requirements to prevent the spread of coronavirus. This created a surge in electronic monitoring of offender demand, and we accordingly ramped up production to support this increase in customer demand. In the US, you could see there's over 2 million incarcerated Americans, where only a few hundred thousands which are actually on house arrest. And quickly last year, after the pandemic began, we saw government customers around the world, scrambling, looking for more and more units, thousands of units quickly, so they could take people out of prison and put them in house arrest. This is helping the general industry, not just in the short term, but also long term, because these government customers are trying more and more the notion of house arrest, and they're seeing how good it works and how much it saves them funds, and also how it could help them with the re-entry program and services. Just a few months after the beginning of the pandemic, they were seeing a 25-30% increase in prisoners wearing the bracelets back in 2020. Furthermore, we have deployed our solution, which is an adoption towards COVID-19. It's a quarantine compliance solution, which essentially verifies that a person is at home during their 10 to 14-day quarantine. It's actually a simplified version of our full electronic monitoring of offenders. These aren't offenders now, just civilians, but they do have to stay home because them leaving their quarantine is just as dangerous or more than some of the offenders who are breaching their house arrest. Someone leaving their quarantine could spread coronavirus, and we all know the potential damages from those implications. We have recently sent this as a pilot to the Middle East, to Central America, to South America, the Caribbean, and also announced that we won a COVID-19 quarantine compliance project in Israel earlier this year in 2021. It's meant to aid in preventing the spread of coronavirus. This is after a successful pilot and the passing of a new law, quote unquote, the bracelets law. And the project estimated to generate $9 million in revenues over 3 months once it goes live. Let's look at our other two segments. First, secure identification. Here we're talking about again, highly barriered industry. It's a niche. You have to have experience doing exactly this, issuance of credentials, secure credentials, passports, ID cards, and so forth. Many different segments here within this general industry, whether it's e-passport, national ID, border control. And this, of course, is to prevent fraud, malicious activity, and increase functionality of governments and managing their citizens and their information. SuperCom has been in this space for over 30 years. Since it was founded, and it's launched many different projects in many regions around the world, including the UK, Hong Kong, Iceland, Israel, China, Tanzania, Ethiopia. And with each one of these projects, we get additional references for a company which deals with very sensitive data of governments, identification data, and we've done it well. And we use those references and those track records when we're bidding on projects in the IoT tracking space. So we're showing them that we tracked a lot of data points for a lot of citizens in many areas around the world. We've done so successfully, and we continue to win accordingly more national projects around the world. Our cyber division, we essentially have technology that we developed, and we have a robust sales and distribution platform, over 50 active resellers, distributors around the world, with 700 plus customers and over 1 million active licenses. This allows us to have very high retention with our existing customers, but also allow for additional sales of new technologies that we're adding onto the same platform. You can see we have different modules. It's a very modular suite. We have Protector, Encryptor, Inspector. Each one has different capabilities, all towards the same goal of preventing data leakage from enterprises. We sell to hospitals, we sell to government counties, we sell to technology companies, to investment companies, to banks, and so forth around the world. And this generates a couple million of high margin recurring revenue per year with potential to grow this customer base to more and more units or more and more seats of our technologies. Some financial information and stock info. In 2020, revenues were $11.8 million with a gross profit of $5.6 million, EBITDA of 2.8. And this is interesting because a lot of our expenses are actually depreciation and amortization from purchase price allocations when we acquired several companies back in 2016. The financial expenses, mainly to service our debt and some allowance of doubtful debt. This is mainly to our old, more traditional business of the secure identification out of Africa and South America. Our current customers, the majority of our revenues is from developed countries today, and the collectability is much better. Some balance sheet items, close to $4 million. This is at the end of 2020, of course. Current assets of $25 million, total assets 40, similar and total liabilities of $35 million. Stock price has been very volatile because we've been winning projects quite rapidly. A lot of movements around there. But we did file our 20F on time this year on April 30th, and we plan to continue filing our quarterly reports in a timely fashion. And we hope that will provide more transparency and updates to the investment community. So, as a summary, at SuperCom, we're a leading provider of IoT tracking, secure identification, and cybersecurity solutions. We are expanding rapidly, awarded over 30 multi-government projects in 2018. Superior technology, these that's what the scoring shows when we compete against other providers in the space and help us get a very high win rate in Europe. New customized COVID-19 quarantine solution has been gaining traction. We were awarded just a sizable project in Israel. We're waiting for the go live on that. Our steady state recurring revenues represent 83% of our total 2020 revenues, giving us a strong base of predictable revenues with government customers in the years to come. We're expanding our footprint in multi-billion-dollar global markets with high barriers to entry. Our EBITDA grew to $2.8 million in 2020, and there is 22% roughly insider ownership as of the end of 2020. And of course, as shareholders, we, just like you, are trying to increase the value of the shares, which is of high importance to us. Investor relations contact at ir@supercom.com, or you call our office line.
All right, that was Supercom. Up next, a message from our fearless leader, the Razman. We're gonna roll it.
We're super excited to have Kevin O'Leary, the biggest shark of them all, this afternoon speaking to you in a featured presentation. Kevin is a successful entrepreneur. He founded several companies, but one of the ones early in his years was The Learning Company. The Learning Company bought his company for billions of dollars. This company, he started in the basement of his house, and built this into a multi-billion-dollar company. Truly unbelievable. Before that, Kevin worked at an ice cream store, which he got fired from because he wouldn't scoop up gum off the floor, which, you know, that isn't cool to ask anyone to do that. And Kevin went on to be an entrepreneur and built a company that, like I said, sold to the Learning Company. He didn't quit there. He could have stopped. He could have retired. But he went on, as you guys know, to be the biggest shark in the world. Some people call him Mr. Wonderful at Shark Tank. You know, he has successes like the Honey Fund, Plated, Benji Lock, and many more. On top of that, he doesn't stop there. He has a personal finance company called Beanstalk and the O-Shares. These are ETFs, a series of them that have done tremendously. Some of them are based on his grandma's value and his mom's value of like investing in companies that make money and produce a dividend. These ETFs have done tremendous assets under management. But I'm gonna throw it to Kevin as he is gonna talk to you for about 15, 20 minutes. And then at the end, we're gonna leave time for 15 minutes of Q&A, and we'll get some of your questions answered, and you'll hear from the biggest shark himself. Kevin O'Leary, hello.
Hey, how are you? Thank you very much. I wanted to talk a little bit about, you know, what I see going on in terms of the direction of capital for the remainder of this year and early next year, and just in terms of what's capturing the minds of investors. And I think that's a good place to go. And I point something out, particularly about venture capital, that I've really seen change in the last, call it 14 months. When I think about the companies that I invest in now, and the ones that I read the pitch decks of, and all of the ideas that are coming forward as a result of the post-pandemic digital America 2.0, if you want to call it that, the companies that are getting the best valuations, that are getting funded, that have tremendous interest from investors, have shifted from a few different perspectives. Let me give you a good example. If you walked into me today and said, look, I have a new product or consumer good or service, and I want to launch it like I would have launched it in 2019 or early 2020 before the pandemic, and it would have looked like this. Most companies that were building up franchises were 50% in retail. They were figuring out how to sell products the way Nike did, you know, in a mall, in a Foot Locker or whatever, or in a Target or a Walmart. That was half their business, and they made 50 cents on the dollar doing that. And then maybe most companies had a relationship with Amazon, and they would sell 40% of their product through there, and they'd make 60 cents on the dollar because Amazon's a little more efficient than traditional retailers, but they don't give you back the name. And then maybe 10% was on their own platform selling to their own consumers, but that was a small part of their business. But when you sell direct, you only have two costs. You have customer acquisition cost, and then you have the cost of manufacturing the product. So your margins can be as high as 90% if you do it that way. And so that's been very interesting. And now you go through a year and a half of pandemic, or a year and a quarter with the pandemic, and the companies that have been really successful, the ones that did the great digital pivot, where they basically changed their retail distribution. They took it away. They made it smaller. They shut stores and they went direct to consumer. They licensed the platform on Shopify maybe, or did digital advertising on Facebook and figured out how to aggregate data from credit card companies with geo-locking Facebook ads. I mean, I've seen all of this stuff happen in our own portfolio. And those companies are wildly successful. They've had a phenomenal run. And this digital pivot is no different than going back to a behemoth like Nike, where I started talking about. they did in 5 months during the pandemic, which they thought would take 6 years, which is get their business 50% direct to consumer all around the world. And the margins are better. You're gathering data from your customer base now. You're able to tell what their preferences are, color, size, flavor, all that stuff, when they have birthdays, and you're communicating directly with them. Those are the companies that I'm far more interested in today. And if you're telling me, "Law, I'm just going to do retail distribution," I'm unlikely to invest. I want digital strategies, direct to consumer. I want to see you aggregate customer data. I want to see you target your advertising to reduce your customer acquisition costs. These are all the things that really matter today. And those are the strategies that are really getting investor interest. But there's one other element too, which this has been very interesting over the last year. Let's say, let me give you an example. I mean, this is just a crazy story. I was on a call yesterday with a very big box retailer in the charcoal industry. So I have a company called Prime 6. I'm gonna lift this up, all right? It's a charcoal company. What pollutes more than burning charcoal? I mean, talk about no sustainability. That's burning carbon, throwing it up into the air. Why would I ever invest in this? I only invest in sustainable companies because I know consumers want sustainability. It's not a marketing scam. It's I know where the demand is. But this company I have a big stake in. Why? Well, they figured out a way to disrupt the charcoal industry. Charcoal, you either get pure charcoal and you burn it, or you get briquettes. Briquettes are crushed, sometimes sawdust, and then they add a chemical to it to make it stick, and often they'll put a hydrocarbon in there so you can light it and light the briquette, and it burns. It's full of pollutants. These guys at Prime 6, they took hardwood sawdust from all the people that are milling hardwood all across America and found a way to just stick the hardwood together into a log that had no chemicals in it, all sustainable product. And when you burn this log, it burns at 1400 degrees consistently for 4 hours and leaves no ashes, no pollutants. And as a result, it burns very clean, very hot. And every time you buy a log, they plant a tree. I heard that story. I went, wow, that's a hell of a story. That's a sustainability story. It's a direct consumer story. And they started selling these logs like crazy. Yes, it's a Shark Tank company. And when it aired, they sold millions of dollars worth of product. But then all of a sudden, all the big box retailers started calling me saying all the consumers want this product because they want sustainability. They don't want to burn carbon. They don't want to taste that crappy taste you get with briquettes. Get it into retail. And now it's sort of a reverse of the old model. But the point is they established their business with a sustainability, a mission not to pollute, and a fantastic product. That's the kind of deal I'm looking for now, because those are the companies I can blow up to 50 to 100 million in sales, and they get acquired by, either even SPACs are buying some of my businesses these days. So I think it's really intriguing to see this shift towards direct to consumer and sustainability and mission. And that's very, very important for those of you that want to be entrepreneurs, to find those companies. Now, another area which is really intriguing me that I have started to put money to work in, and this is that old Gretzky story, don't be where the puck is, skate to where the puck is going. And we all love crypto, let's face it. I'm totally engaged. I've got a 3% weighting in Ether and in Bitcoin, and riding that wave. It's been fantastic. But I think DeFi is where the puck is going. And DeFi, what that means is being able to monetize your crypto, monetize your Ether, and monetize your stable coins, be able to get interest, loan them out. And right now, DeFi is really complicated. If you try and do it yourself, it's a nightmare. It's really tough. And I understand there's some great people out there that know how to do it. But I'm talking about a consumer version of DeFi that no one's done yet. That's what I'm working on. Something where you can just be a neophyte, basically link your wallet up to a platform where you can actually immediately monetize it and get tax statements and be compliant. That hasn't been done yet. So when I start thinking about deploying capital, I'm working on some teams on that. So, I love all the ways you can follow this whole crypto. Call it a craze, call it whatever you want, but it's real money because institutions are starting to put money to work in Bitcoin at least. And I think you're going to see a continued interest in that. And that kind of morphs me into another area. We saw some really what I would consider irresponsible moves by the government in New York last week by suggesting they'd pass a bill that would ban Bitcoin mining. I can't think of a worse idea. You're basically scaring capital out of that state. Bitcoin mining is capital intensive. It involves getting very advanced technology. It creates jobs, and it also takes electricity that is otherwise not being used. You know, lots of falls and hydroelectricity in New York, and puts it to work and creates value in Bitcoin and pays taxes doing that. And all of a sudden, they just single-handedly say, you know, we're just going to threaten with this bill. And of course, capital leaves the state immediately. I think we're going to be talking about that at the conference June 4th, June 5th, the Bitcoin conference in Miami. I'm certainly going to key down on that topic. I mean, that is just really bad. And it sends a signal to Bitcoin mining capital all around the world. Don't come to New York. And for that matter, maybe don't come to the US. And that's really, really bad, because right now, 64% of Bitcoin's mined in China and not on a sustainable basis. We should lead the world in taking our capital, investing it here stateside, and competing. And you know, building our infrastructure for Bitcoin mining here for the next 100 years. So I really find there's a lot of cross currents going on in crypto right now, a lot of debate. I think it's a very interesting space. So there's my 2 cents, Jason. I'll open it up for questions.
You mentioned the Bitcoin and Ethereum. You have like 3% of your assets in that. Is it more Ethereum or more Bitcoin? Or
it's half a percent Ethereum and 2.5% in Bitcoin. You know, I'll tell you right now, the way I look at it, and I'm just talking about institutional capital from my point of view. There's a tremendous amount of interest, but when it comes down to it, they want to own Bitcoin. And it's the gold standard. I think Ethereum is the silver, and everything else is a speculation. And I think there's a lot of cross currents, you know, a lot of different things going on. But right now, institutional buyers are trying to solve for owning Bitcoin and owning it in a way that they don't run afoul of their sustainability mandates. Because many of the larger institutions, as you know, have sustainability committees on top of their investment committees, so that they want to comply with, you know, the direction. You saw that there's, you know, the way it manifests itself. Look at something like CalPERS questioning whether they can own Chevron or Exxon or Schlumberger. I mean, that comes from the mandate around sustainability. So you're getting a lot of cross currents going on here. Same with Bitcoin. They'd like to know that it's mined sustainably, that hydrocarbons are not burned in the making the electricity that miners are using. And within the crypto community, and specifically the Bitcoin community, there's a lot of raging debate about this, because clearly the Chinese don't care and they still make Bitcoin. But that doesn't mean that, you know, American ingenuity can't solve for finding sustainable ways to do it, and in fact advance on what we do in creating green energy. That's the point.
Does that go to like the ethical coin and et cetera that, you know, out of this country people are trying to do?
You know, here's a speculation. It's really a debate. If it's true that, you know, you can't know where a coin, it is true, you don't know where a coin was mined, but you know when it was created. But if you knew with certainty the provenance of a coin, if you actually bought shares of a company that is keeping its coin on its balance sheet and only mined ethically and sustainably, that's a way you could own coin, by just owning their shares. And the more coin they amass on their balance sheet, the more you're going to trade with the volatility of the price of Bitcoin, which is what you want if you're an institution. So I think there's a real opportunity in the next couple of years to fund miners that are going to, you know, mine coin ethically and sustainably. And I think you're going to get a tremendous amount of capital going in that direction, because it solves 2 problems. You know the provenance of the coin you own, and you also know that it was mined ethically, and you can own part of the miner or a lot of the miner if you do it on a private basis. So when I talk to institutions about this is what interests them. They're saying, look, Bitcoins is the one we want to put a weighting on. Maybe it's 3 or 5%. It doesn't mean Ethereum won't get some of that, but right now the lion's share is definitely going to Bitcoin, and everybody knows that. And the rest are more speculative, volatile. But Bitcoin is finding its way to become a property within the institutional balance sheet. And I think 3% weighting. I have a 5% weighting in gold, but now a 3% weighting in basically Bitcoin. I'm okay with that. It makes sense to me.
Got it. Okay. And then what about a Kevin O'Leary NFT?
You know, that's a very interesting idea. And I have certainly talked with my team about it. I've got some great crypto people working with me now. They're mostly focused on DeFi. And you know, where to place my bets in the DeFi continuum, because I definitely think that's where the puck is going. But you know, an NFT is interesting. I think it's a highly speculative, volatile market, but I find it interesting that you can prove the provenance of any digital asset. It can't be copied or made fraudulent, and I think that could apply to music. It's an interesting area to look at. It's certainly something I wouldn't have considered 2 years ago, but I am looking at now. Haven't made a move in it yet, though, Jason. I'm just it's my first step was the Bitcoin thing. I started buying in 2017, but it was back then very disproved by the regulator. And clearly, what's happened in Canada and Switzerland and Germany, New Zealand, and France and England and all these countries opening up the regulatory environment to allow for things like ETFs and other ways to own. Some countries are accredited investor only, but the point is you can now, on a regulated basis, own Bitcoin.
Yeah, and so Kevin, is that part of the reason you changed your thesis on Bitcoin? Because like you said a few years ago, the government regulations, is that why you're pretty bullish Bitcoin, or what gives you the reason to be pretty bullish on Bitcoin and crypto in general?
Because the regulator is starting to loosen up, and it's clearly something that there may be regulations, but the point is they're contemplating them. It's an asset class that's here to stay. I work in a highly regulated environment. I have so many investments in fintech companies. You said some of the names earlier. These things are all regulated, and I never want to be non-compliant. It's one of the reasons I never invested in cannabis. It's not compliant yet on a federal basis, but I was able to invest in psychedelics because nobody's doing recreational psychedelics. They're doing medicines, and that makes sense.
Yeah, and JR spoke about MindMed yesterday. Unbelievable company, now listed on the NASDAQ. It's excitement around it and doing a lot of experiments to help with depression, anxiety, stuff that you wouldn't think was possible 10 years ago, but I hear it's making an impact and doing great.
No, it's one of the companies out there that's raising capital. I own others as well. The point is when you're investing in junior pharma, they're all junior pharma because it's a brand new nascent sector of pharma. And so these companies there weren't any trials going on even just 4 years ago. This is what's happening now. And so I tend to overweight the companies that have multiple molecules, multiple trials, as opposed to the ones that have just a single molecule, single trial, because it's less risky. And MindMed sort of falls into that category. They have, I think, something like 16 or 17 trials going on, which is a lot of diversity. That's my heaviest holding, my heaviest weighting in that sector. But I also own Compass, and when the other ones come out and they list, I'll own them too.
Yeah, no, that's amazing. And I know you talked about it in your presentation a little bit ago, but one of the listeners did ask us to ask you about this New York bill that that affects Bitcoin miners a little further. Why is it why is this a big thing we need to talk about or potentially worry about?
Because when the government destabilizes the regulatory environment, capital leaves. I was involved in financing a facility around hydroelectricity in New York, and we're in limbo now. We can't make a move. I mean, we don't know what the regulator is going to do until this whole thing goes through the process. So I think that's very harmful, very irresponsible. It's not based in any fact that makes sense to me. I'm highly critical of that move. I don't like it when the government goes against a brand new business. Bitcoin mining is relatively young. It's less than 20 years old, and we are starting to establish ourselves as world leaders in sustainable Bitcoin mining. And all of a sudden we get this. It's a sucker punch right out of the blue, and I think it really hurts the industry. And I think where we have to go, and I speak now as an investor in the industry, and I certainly talk to lots of CEOs in Bitcoin mining because I'm interested in, can I provide capital for expansion and get paid back in coin and on a royalty basis? I don't think the industry has done a particularly good job in representing itself to something like this. And I think we need to form some form of voice, whether that's a group of CEOs that take leadership positions in trying to negotiate with state officials and even federal officials if that's necessary. But most sectors have lobby groups. I don't think we need that in the same way in Bitcoin mining, but we need a voice. And so at least some kind of way of establishing a voice that says, here are the mandates by which we adhere to. And we believe that these are good for business, they're good for investors, they're good for the state. And just because we haven't done that yet, and it's been a big mistake. And if you don't speak up for yourself, you get New Yorked. That's what happens. You just get some random, regulator saying, all right, we'll just shut it down. And they effectively shut it down by making it unstable. You don't know what the policy is. So rather than have that happen, it's very important that we go to state, policymakers and say, hey, we're responsible corporate citizens, and we have a very important role in advancing technology and being competitive in the globally competitive market of Bitcoin mining.
So is it we have to like start lobbying these senators? Is that like what we have to? We have to like, you said like an organization, but how do we get through to them? Is it like us calling up congressmen? Like what do you suggest?
I suggest, look, I'm trying to be the catalyst for this. I don't know if I'll be successful or not, but I'm certainly having multiple conversations with the larger players in the space and saying, what are your ideas? Because I'm an investor. I want to deploy capital in a stable environment that isn't going to shift on me. I have plenty of money to put to work, and I don't want a situation where I don't know the outcome, as in I have in New York now. And I think everybody's concerned about what they saw. Everybody realizes that it came out of the blue. And so if we could gather maybe 6 or 8 CEOs that represent the lion's share of capital being raised, they could be a voice. And that is a good thing for the whole industry. You get lots of controversy within different CEOs about how to mine or what the best technology is or what their strategies are. That's all fine. But they have one common interest. It's called capital. It's a capital-intensive business. You have to raise capital. When you have uncertainty, your cost of capital goes up. It doesn't go down. It goes up. So by not addressing the New York issue, the cost of raising capital for all miners will go up. That's bad. So everybody has their interests, all right? And I'm just saying this is a common interest amongst all miners. If you're trying to raise capital so you can buy new technology or expand your operations, you want the lowest cost of capital you can get. And as of last week, the cost of capital has gone up. There's a lot more concern now that other states would do the same thing. And so I suggest that what we have to do is form some kind of group representing the industry that can speak to politicians, speak to policymakers, speak to investors about their plans to provide ethical and sustainable mining, which seems to be the concern of the government in New York in the first place. So, if they're really worried about it, let's address it.
Speaking of government, what do you think about Biden's first 100 days?
I think he's done a great job on what he promised in terms of vaccine inoculation and solving the logistics for vaccine. Most people that want one have either received one or both shots. And I think that's very, very important for getting the economy back on its feet. The tax proposals, I understand, are really bowing to the left-wing side of his party, which I'm sure he has to do to keep everybody consistently moving in the same direction. But it would take, if these policies were enacted as they've been suggested right now, it would make the United States the highest tax jurisdiction on the planet, which I just can't see being good for business. And, we're in the middle of the pack now on corporate taxes. I can't imagine going back to the highest taxes again. It just doesn't make sense. We still have 9 million people unemployed. That would be a very bad outcome. And I don't think it's going to happen. I think that's going to get caught up in a lot of debate, even within his own party. And so that's why the market's ignoring it. It's such an outlandish idea that I don't think it's going to actually ever come to pass.
Yeah, it's crazy. I mean, Biden, I heard him talk about how we're, it's a worldwide marketplace these days, but with the taxes that are proposed, companies are going to get up and leave. I mean, I know that's the conversation the real conversation happened in our company. It's crazy. And we want to employ more people, but when you see the tax structure that's proposed, it's scary. It's true. It's truly scary. And the other thing is, like, restaurants can't even hire people these days because they can just sit home on unemployment.
Yeah, that is an unusual situation. You can see a microcosm of what would happen if we raised taxes by simply looking what's happening to states like New York, Massachusetts, and California. I'm sitting here in Miami, and half of New York is working out of here now. They've made a decision to move because of taxes. There's almost a 17% difference. In fact, if those Biden tax packages, were put in place, and you lived in New York City and Manhattan specifically, you'd be one of the highest taxed persons on earth. It would just be an unbelievable exodus of people and capital. And so it just can't work that way. The difference between now and the 60s, when the rates were higher, And, you know, politicians often say, well, I remember when corporate taxes were 30+%, but that's when there wasn't a global competition. That's when there wasn't an internet. That's when there wasn't, you know, digital drift, as I call it. You can easily move your headquarters, and you would. And people are fungible. They can go anywhere they want now. They don't have to stay in New York to run their business. They can come down here and do it by Zoom, as you and I are talking right now. So the whole point is, at the end of the day, it's not the same as it was, and you can't just jack up taxes like that. But look, everybody can have their opinion. It's getting that policy passed is going to be very difficult, I think. And if the U.S. does become the highest tax jurisdiction, they'll simply not move to Florida. They'll move out of the United States, and they'll do the inversions again, as they were doing prior to the changes that were made by the last administration.
Yep, and I've been to Puerto Rico like twice in the last couple of months because we're considering that. I mean, it's another tax thing that they have proposed because they want to bring business to Puerto Rico. Absolutely crazy. One of the things, you're early on a lot of stuff. I mean, when you started O-Shares, there weren't ETFs like yours. Can you talk a little bit, just briefly, to the 50,000 listeners today about O-Shares?
Sure. You know, O-Shares, the whole idea behind that was I was trying to solve for my own long-term investing. I have trusts and operating businesses that need 6% distributions from the capital they have on their balance sheet. And so I don't want to own the S&P 500. I want to own the 100 or so companies in it that don't have the risk of cutting their dividends, or don't have the risk of being unprofitable, don't have a situation where, you know, federal policy is against them, like the hydrocarbon companies, the oil companies, that kind of thing. So I'm looking for companies that are high return on assets. And so an ETF and have less debt and are increasing their dividends. And so you use rules to mine that information. And that's basically what OUSA is. It's a subset of the S&P 500. And it's designed to try and mitigate risk in drawdowns. You know, if you own the S&P and the S&P goes down 38%, you're down 38%. I'm not saying that'll happen, but if it does, you'd rather own the stocks that have less volatility. And that's what OUSA tries to do, so that you don't participate in 100% of the drawdown. Maybe you participate in 60 or 66% of it, but you're preserving your capital. And the same for the Russell 2000. I don't own the Russell 2000 because the majority of the companies there have abysmal return on assets, and many aren't even profitable. But you can find, using the same rules, find me the companies that are profitable, do have cash flow, that have really high return on assets, and that's what OUSM is, another rules-based O-Shares ETF. So maybe 200 or 300 stocks out of the Russell 2000 that are worth owning, that again pay a portion of their distributions in the form of dividends, and that's what I use. And then for Europe, which is really interesting now, it's a zip code everybody's hated for a long time. There are 50 stocks in Europe, in Switzerland, in Europe, and in England that are really interesting because they're in many cases traded at a discount to their counterparts in the US. So like a Nestle or a Roche. I mean, those are companies, why not own them? I mean, they sell much of their product in the US anyways, and they're trading in some cases at significant discounts. So that's another ETF, OEUR. And then finally, you know, the one that did so well last year was OGIG, OGIG, and I think we're in the third or fourth inning there. All the companies that provide, it's the global internet giants that are encapsulated, including the FANGs, are in OGIG, but the FANGs are some of the slower growing companies now compared to what's going on in other countries, Asia, South America, Canada, and Europe. There's great internet giants there, and you'll find them all in OGIG. That's the O-Share story.
Okay. And I think one thing that listeners are asking me, but Kevin is very into balance and not doing risky things. So he bought Tesla, but then as it went up, he sold every month to keep the percentage at a certain allocation. The question I got asked, someone asked, is Kevin still bullish on Tesla? Because they said you were selling, but I know you sold because as the price went up, it was making too big of a portion of your portfolio. So what's your take on Tesla, though, either way, I guess?
Yeah, I mean, you know, when a name, a single stock becomes more than 5% of a very diversified portfolio, I'm going to sell it. I'm going to sell it down to 5%. Tesla was a rocket ship for me to the moon, as they say. I bought it at 235 pre-split, and it just did nothing except go up. So, you know, my strategy is to keep balance in portfolios. That's what I do. But I'm still very bullish on Tesla. You know, it's still a very interesting company. I consider it a data company, not a car company. and it continues to mine data by what it does and advanced battery technology, sure. But I'd say that for any stock, not just Tesla. You have to monitor if you let a stock become a huge portion of your portfolio, you're taking inordinate risk. You have to have diversification, in my view. And I have simple rules: 5% weighting in any one name, 20% in any one sector. So when technology gets too big, I sell that down too. And I try and keep a balance of sectors at 20 and 5. And when we have drawdowns, we have corrections, that protects you because you basically don't have all of your bets in one name or one sector.
Right. That's amazing. You say 20 and 5, so 20% in any one sector, 5% in any individual company?
Yeah, that's how it works. And it works very, very well. It has worked for decades for me. And so that requires some work each quarter. Obviously, I use O-shares ETFs for a lot of the equity side, but I do the same thing in bonds. I'm very careful that the bond portfolio, no one bond is worth more than 5%. You basically get, very close to index returns, but you also have a lot less volatility with that strategy. And if you care about volatility, and some people don't, I do, because I'm really trying to distribute 6% a year off these portfolios. This has worked for me for decades, and I continue to use it. It's a very, very simple strategy. But it just requires every quarter you go look at what's overweight 5 and sell it down. And then you can also take that capital and uplift some names to from 3 to 5%. Right now, Bitcoin's 3%. I might raise it up to 5. Who knows? I'll wait till the end of next quarter.
And you'll do this in your individual accounts as well, is what you're saying?
That's my operating company, yeah. But that's sort of. But I also have various trusts that do the same thing. The strategy works whether it's your individual account or your operating company or your balance sheet. It's the same thing. Diversity is a good thing. There's no question about it.
Wow, that is awesome. 20 and 5. The Dow is up, NASDAQ's down, and the past couple of weeks, and a lot of people are getting hurt because they're so into technology stocks, and not the Dow stocks.
Yeah, I mean, at any time sectors rotate, I don't think it's over for technology. I think these rotations come and go, but in the end, it's very hard to find the growth that these companies have in any other sector. Tech continues to shine because of its growth metrics.
Yeah, and some people like growth and innovation, but I get your point on that. Now, do you have a forecast what you think Bitcoin can get to?
I think it's impossible to forecast Bitcoin. The question is, does it have its correction this year down first? The intriguing thing for me in terms of forecasting Bitcoin is to listen to a good one with Larry Fink's letter about 6 weeks ago, when he said the majority of our giant institutional accounts do not ask us for Bitcoin. They're not involved. I think that's changing. Wow. I think they're starting to look at it in sort of the 1 to 3% weighting area, and they're trying to figure out, how do I own it? Do I own it directly, or do I own it through the balance sheet of a company that's keeping its mined coin on its balance sheet? And then, of course, because these are institutions that have sustainability mandates and ethics mandates, they have to make Bitcoin fit under those compliance logistics. And that's really about, not buying or supporting the burning of coal for mining Bitcoin. Now, whether you agree with that or not, it doesn't really matter. That's what they have to work with. It's not like it's an option. They have to deal with that every day because sustainability committees have set these mandates about, climate and everything else. So it's something the industry should really think about. It's there. It's not going away. And there's huge demand if somebody solves for that and can create coins that have provenance, that have been mined in an ethical and sustainable way. Because after all, as I said earlier, the reason New York caused the problems it's caused is exactly those issues. They heard from enough lawmakers, policymakers, and constituents that they are concerned about the sustainability of burning up that much electricity to make Bitcoin. I don't agree with them, but it doesn't matter. The policy has already destabilized investment in New York in Bitcoin mining.
So we just have to create it, or find someone that does create it, ethically mined, right?
Yeah.
I mean, I'm sure easier said than done, but we'll figure it out. But for the last few minutes, couple of personal questions. So you're probably one of the hardest workers that I personally know. I don't think there are two of you, but there could be. Like, what time do you, I know you go on the Peloton or something. What time do you get up in the morning? What time do you go to bed? Do you check your email actively? If you check your email, how fast are you responding? Give some people some advice on how you are able to manage everything, being the biggest shark in the world, and everyone wants your attention. How do you do it all? I would love to just get any details you can give, because I think it'll help the 50,000 listeners to the show today.
Yeah, well, I enjoy working. I mean, there's no question about it. You have to love what you do. I try and get up at 5:30, work out for an hour. You know, if I'm going to do early morning television, it's generally in that 7:30 to 8:30 hour. So I want to be, you know, finished working out and in a suit by then, and do the hit, because it's usually 8 or 9 minutes in the morning. It's a show like CNBC Squawk Box or something, or even working with you. It depends. Whatever it is, I want to be, you know, fresh and bushy-tailed, to say the least. I'm really into some of these protocols now about the food I eat and sort of how I exercise and all that. It's just about longevity. I'm trying to enjoy myself and the quality of life I have. And so it's really sort of a routine. But the advice I give people is, if you break up your day into 30-minute segments, which often is what people do, put some white space in there for yourself that you can just use up to, instead of booking, you know, meeting after Zoom meeting or whatever you're doing, put a couple hours of their white space to recharge or do something that's, you know, I like to play guitar or whatever, you know, get into photography, something that's alternate to just business. And that gives some balance to your life, and you can spend some time with your family. I'm very into that routine that way. But I do say one trick I learned, one hack if you want. Write down on a piece of paper or something you stick to your mirror and just say, what are the 3 things I got to achieve tomorrow? And do those first. It's a really corny hack, but it really, really works. So I don't really engage in anything until I've got those 3 things done.
Do you really stick to that?
Yeah, I do. I've been doing it for years. It's a really good metric. It could be something like go to the dentist or something, right? It's just something you got to get done. And I do 3 of those, and I find myself way more productive, way more productive.
And do you put it on your mirror, or do you have it on your iPhone? Like, what do you do?
No, I used to do it digitally, but I find that it's not as effective. You can ignore your phone blasting a beep at you. You can't ignore that thing stuck on the mirror. And so, you know, MC Squares is a product that it's one of my companies that makes sustainable sticky notes, and they stick on mirrors, and they have erasable, you know.
What's the name of that again?
MC Squares.
MC Squares. All right. Yeah. I gotta check that out. Oh yeah, that's sweet. Sustainable energy. Okay.
Yeah, so it's done very well. We've actually funded it with crowdfunding with you know, Start Engine, another one of my companies. And so, you know, we work together. But there's one sticking on my mirror right now. I've already written 2 things down for it tomorrow. It's really very corny, but it really, really works. Really works.
And speaking of Start Engine, I'm assuming Start Engine like propelled this year with like the government changing the funding limit. Is that right?
Yeah, it's up to 5 million now. So that really changes the game, because the traditional VC would say, well, forget about equity crowdfunding because you can only raise $1,070,000. Not anymore. You can compete with any you know, venture firm and raise $5 million your first round at terms that are you know, that make sense for you. I hate pref shares. I hate VCs that take a proprietary position on your balance sheet and misalign your interests with your shareholders. That sucks. So why not just use crowdfunding for the same amount of money and get something that completely aligns every shareholder together and even allows your customers to become shareholders? So that's a big shout out for Start Engine, but they're number 1 in equity crowdfunding in the US. They've got more investors than anybody else.
It's an unbelievable solution. I wish it was around when I started. It's an unbelievable solution to build a cap table with, you know, ambassadors, zealots. I mean, it's a no-brainer thing to do. No-brainer. I mean, just like no-brainer. I mean, it's Start Engine, guys, check it out. And you sometimes get to pitch to Kevin. I have some friends who won a pitch contest who are doing a sweet company, and what exposure you get. All right, well, Kevin, thank you for coming on the Benzinga Global Small Cap Conference today. What you're doing, like I asked Kevin Structure, you know, he said he gets up at 5:30 in the morning, he answers emails, has his 3 most important things, probably goes till 10 o'clock at night. He's in several companies, but I think one of the common elements is you find good leaders of these companies. So you don't have to be in the details every day, right?
Yeah, no, they run great companies, and it's funny that in the last few years, the majority of my returns have come from companies run by women, which has been fantastic. And it just shows you during volatile times like the pandemic years, they mitigate risk very well. So, you know, we tend to have a lot of companies with women CEOs. Prime 6 is one we talked about earlier. That's a a woman CEO, and she connected with the buyer, who's a woman too, that we were just running a huge deal through. So I really like to see that happen. That's great. We're obviously casting right now for a new season of Shark Tank, season 13. Bring your ideas. I'll see you in Hollywood, as I like to say. We're going to be shooting that in July. It's very exciting.
So what you're saying is more women should apply. I mean, because I know you've said that.
Yeah, I mean, I'll invest in a goat if I can get a return, but I'm saying that women have done a hell of a job for me, and I have a lot of them. They're more than 50% of my companies are now run by women CEOs because the outcomes have been phenomenal. You know, the glass ceiling in corporate America is broken by achievement and merit. You know, you can't make it political, but there's enough women now really blowing the doors away in terms of how they're operating that they'll make it for sure. I mean, you'd be foolish not to have a lot of women running various businesses within large corporations because they do it so well.
Yep, no, that's unbelievable. You have some of the most famous lines in Shark Tank history that people go around and say anywhere and everywhere. And like one of them is, "You're dead to me." If like someone just like ignores your offer, and I bring it up because I was somewhere this weekend and the line was used, and I loved it that it was used. And someone else, I heard it. I was at a restaurant and someone else said it, and they're like talking about you. These lines that you have are Mr. Wonderful. Is this something that you think of like a week before, or is it just like it came out of nowhere and then it just becomes a thing?
They just come out of nowhere, and I often think many of them are inspired by Barbara, who sits to my right, because the only reason that she gets to Shark Tank every year on time is I buy her a new broom. And I've been saying that for years, and every time it's the
it's amazing. It's amazing.
I was on YouTube the other day, and somebody, put together 12 years of those Kevinisms. He calls
I love
them.
it. I love it. I gotta.
Yeah, it's funny.
I gotta find that guy to do that. That's awesome. Thanks, Kevin, again for coming on. We had MindMed yesterday. Kevin has more companies. Check out Beanstalk, O Shares, and just the rest. Go Pitch Start Engine. The more women leaders who have companies. Go Pitch Shark Tank. The only way things happen is if you go out and do it. And Kevin talked about how he puts 3 things on his mirror. I honestly, when he said it just now and he was giving that advice, I honestly thought he was just saying it like, hey, this is nice advice. But you heard him just now say, like, I actually have 2 things on there for tomorrow. If you don't believe it, he's telling you right here. Like, this to me, like, is the power of doing these things. And look what this guy's accomplished. It doesn't just happen, oh, I'm sitting here in the Shark Tank seat. No, it's by doing things and making things happen. So thank you, Kevin, for coming on. We appreciate it. We look forward to talking to you soon.
Take care, my friend. Bye-bye.
You too. Bye-bye.
All right. Next up, we've got Arcimoto's Mark Fronmayer. Hey, Mark.
Neil, how are you, sir?
I'm good, man. How are you doing?
I'm great. I really enjoyed the Kevin O'Leary Life Pro Tips. That was fantastic.
Yeah, he's got a lot of advice for a lot of people. That is for sure. You are rocking the Yggdrasil tapestry. I'm always happy to see it. Such a great background selection. What do you got in store for us today?
Well, you should have a slide deck there, and we're going to start with just the overview video of Arcimoto, and then I'll run through some slides. And if I run through them fast enough, then we'll have a few minutes for a Q&A. How's that sound?
Sounds good. Just make sure to breathe.
Yes. All right. Arcimoto. We build rides. Light, electric, ultra-efficient rides that are outrageously fun to drive. Because getting this with this is nuts. We build Arcimotos for people and for delivery, and for people who help people. We're a public company because we have a public mission, and we invite you to join us. I'm Mark. In 2007, I went looking for something that didn't exist. Because then and now, we drive crazy big, multi-ton extractive rigs for all the simple trips. Times everyone, we pave over half the city, gridlocked, around a world on fire. I wanted a light footprint electric vehicle. Affordable, fun, and dialed for the everyday. I couldn't find it. And thus, Arcimoto, and a new platform for mobility. Twin electric motor, front-wheel drive with a burly battery and a powertrain that sips electrons. We launched production of our flagship product, the Fun Utility Vehicle, in 2019. And And from the response, we believe it lives up to the name.
This is really fun. Oh my God. It's woo! Oh my God, this is so fun.
Very cool. And wow, does it handle?
Everybody wants it when they see it, and they haven't even driven it yet. The real joy is when you get to drive it, and then you just get the feeling of what it's all about.
Hey Mark, what's up, buddy? Just want to let you know how much I am enjoying my amazing Arcimoto. It is an absolute blast. People chasing me down in the neighborhood to see it.
Let me guess, you want one?
I'm going to buy shares.
Right on. At the onset of the pandemic, we launched the Deliverator to bring the benefits of Arcimoto's platform to last mile delivery of essential food and goods. The Deliverator's spacious storage suits a wide variety of fleet uses. Its svelte form maneuvers through traffic with ease and parks in spaces no full-size vehicle can. Saving fleet operators precious time means money that flows directly to the bottom line. And we launched the Rapid Responder to help those on the front lines achieve their missions more quickly.
I think that the Arcimoto is the perfect vehicle to implement in our city. It's lighter, it's more efficient, it's quicker. There's the cost savings that are associated with it in terms of sustainability, maintenance. I see this as a daily deployed apparatus. How come the cops aren't using one of these?
Finally, we announced the Roadster, Arcimoto's premium entry into the established class of pure on-road fun machines. We sell direct. Arcimoto adopters place pre-orders and configure options on the website, and vehicles are delivered directly to our customers. The curious can enjoy the Arcimoto driving experience at our rental centers. Our rental first model turns what is normally a costly hurdle to brand awareness into a revenue stream. Every Arcimoto is built here at our factory in Oregon, the AMP, where we transform raw material through part cutting, forming, welding, machining, and final assembly, all under one roof. With the growing demand for alternative personal transportation around the world, highlighted by our thousands of FUV pre-orders, the seismic shift towards home delivery of food and goods, and over 50,000 fire stations in North America alone, we believe Arcimoto is poised for expansive growth. Meeting this demand through mass production is now our primary goal. To that end, we've entered into an agreement to purchase a new facility that will increase our manufacturing footprint more than 5-fold. And we've teamed with industry legends to refine our platform and product family for volume at a price that is affordable to the wide market. We aim to prove our model can scale and this venture can go global. Arcimoto is and always has been powered by a community of stakeholders with whom we share a vision of sustainable transportation, clean skies, and a future that's a whole lot more fun. We hope you'll join us.
So that's the 4-minute version of the Arcimoto story. I'm going to go into a little bit more detail. So the brand Arcimoto means future I drive. It's the brand identity for the next generation of drivers. And this image I find personally very powerful because it really highlights the disconnect between cars and how we actually use cars every day. And it's that overcapacity of cars, whether they're electric or not, that leads to congestion and the fact that we dedicate like half of our urban landscape to asphalt for moving and parking cars. And so if we are to meet the goals that we must meet in order to deal with the climate crisis that's right upon us, we need more than just the electrification of old ideas of transportation. And that's where we see the real opportunity in electric vehicles is in the gap between the bike and the car. And that's the gap that we have been going after since Arcimoto's founding in 2007. Since this is a track on disruptive innovation, a little refresher on disruption theory. The idea of a sort of canonical disruptor is a product or service that meets the utility threshold of a market, but does so at a much lower cost. And so when you think about the Arcimoto sort of platform one vision, It is to deliver a product that falls into the price range of a golf cart or a toy or a side-by-side ATV, but delivers on the utility needs of the vast majority of everyday trips. So instead of shooting for the price of a new car, we're shooting for the price of a used car, really where the bulk of the vehicle market is. One of our analysts calls this many shots or multiple shots on goal. It is, we've honed it's our 8th generation vehicle platform design, and it is both incredibly efficient and incredibly flexible for a wide range of everyday trips. And you can see in the video several of the different products that we've built that are sort of bespoke for different market verticals. Where all of this goes with Platform One is the concept of personal mass transit. So I really see Arcimoto as being at the confluence of every trend in the future of mobility. Lightweight, ultra efficient, electric vehicles connected and available at the touch of a button by either autonomous drive or remote operation. And it's that model of autonomy where you're really using the autonomous systems and the drive-by-wire systems to bring a vehicle to a driver. That's a much lower bar to cross than the sort of full level 5 autonomy robotaxi thing that many people say is still years and years away. We think that the marrying of readily available autonomous technology today has the opportunity to dramatically reduce the cost of operation of a shared vehicle network. And when that's paired with a vehicle platform that is already incredibly affordable, we think this provides the opportunity for a big, big win in transportation. This is kind of the big picture vision of our first platform, which is ultimately transforming parking lots into parks, reclaiming lane miles of asphalt, and making cities not suck anymore. We're also developing another platform. And this is because, again, Arcimoto is really all about the gap between the bike and the car. And so we see another opportunity for a whole new order of magnitude of improvement in terms of efficiency, cost, weight, materials with a whole new line of vehicles. And this is the reason why we acquired Tilting Motorworks at the beginning of this year. The e-bike marketplace has experienced massive year-over-year growth, like I want to say 140%, 2019 to 2020. And we see the opportunity to build a truly groundbreaking product in that micromobility space. So where Arcimoto's Platform 1 target is 1,000 pounds, we think the Arcimoto Platform 2 product is going to land yet another, almost an order of magnitude, lighter weight, lower cost, more efficient. And again, to solve the kinds of typical trips that we do on an everyday basis. So 2021, this year, is all about building the foundation for the next decade of Arcimoto's growth. I'm going to run through our top level goals and then open it up to Q&A. So this year we plan to articulate our full Platform 1 product family, all of the different variants of our Platform 1 family. We plan to introduce our first Platform 2 product, so stay tuned. We believe that there are a number of different shared Arcimoto business models that are worth exploring. And this runs from vehicle sharing programs to destination rentals. And so opening up rental centers in key destinations is going to be another major push this year. We just had our soft opening of our San Diego center last Friday, and we'll be starting up rentals from that center imminently. Another goal is to demonstrate the autonomously driven Arcimoto, and this is a program that is actively in the works presently, and we're very excited about it. We're presently only selling Arcimotos to customers in 4 states: Washington, Oregon, California, and Florida. So we plan to expand our footprint of sales during the course of this year and into 2022. And then another major goal for the year is the acquisition of scale production financing. We're targeting the Advanced Technology Vehicle Manufacturing Loan Program We're very encouraged by what the Biden administration has said about its targets for carbon emission reduction, growing employment here in the United States to tackle these problems. We planned, as I mentioned in the video, we have actually now purchased a new facility for expansion of production, and it is going to be a significant project to turn that into a next generation Arcimoto manufacturing plant. We call this the ramped Arcimoto manufacturing plant. We will be doing some small amount of production work out of this facility in this year, and then we are targeting Q4 of 2022 for the real start of production off of the assembly line in the ramp facility. And this is going to be we're looking at this as our prototype for global scale. So we're building the microprocessor core, if you will, of mass production that we intend to replicate ultimately all over the world. We are producing vehicles now in our current facility. So the AMP is up and running. We've delivered now more than a couple of hundred vehicles as of the end of Q1 to customers. We plan to deliver 500 customers vehicles this year. And in addition to that, I mean, really probably the most important thing that we are doing this year from a production standpoint is getting vehicles out for demonstration and rental purposes into the market to drive the experience of the brand, awareness of the brand, and ultimately fill the sales pipeline that fills that mass production facility in 2023 and beyond. And the key goal is to get butts in seats. This is true of electric vehicles generally. This is any electric car company. The real goal is to get somebody in the driver's seat to experience just what a great experience the electric vehicle is. And what we have found is that the experience of the Arcimoto is really compelling for people. It is often surprising. People express surprise, saying things like, "I've never had this much fun in a vehicle. This was much more than I thought it was going to be." And so we think that direct experience of the product is really important. It's one of the advantages I think that we have actually having a production vehicle on the road now, is that we can actually get people into seats. Now, we've been basically off the road for almost the whole duration of the pandemic. Now that the team is vaccinated, we are feeling much more comfortable getting out on tour. We're going to be running simultaneous tours on the East and West Coasts. And then, of course, we're opening facilities that will be doing continuous rentals and demonstrations throughout our initial target markets. So that's the big Arcimoto story. And with that, I'm going to go ahead and stop the share, and we can open it up for questions.
All right, we have a lively conversation going on in chat, guys. What questions? We've got FUV here. What types of questions do we have here? The number one question, let's go ahead and get it out of the way for those that are not participating in chat. Can you take one of these on the highway?
Yes. Yeah, the Arcimoto it's a motorcycle class vehicle. Three-wheelers are motorcycles, and it can go on all the roads. Top speed is 75 miles an hour. 0 to fun immediately, and infinite miles per gallon.
Beautifully stated. And then, yeah, legitimate stats. And then, what about flooding or heavy rain?
So if you go to arcimoto.com/all-weather, there's a video of Flubbing in the rain. We're here in Eugene, Oregon, is where we're headquartered, where we get, I think, 160 days of rain a year or something crazy like that. And it is surprising how well even the open configuration of the Arcimoto keeps you dry in the rain. That said, there are areas, when it's coming in sideways, you want to have some kind of a shelled enclosure. And we've got our half doors are through the production testing process, and those will be available, I think, in Q3. And then we have full side enclosures that are available as well. The open model really is part of that being in the world that really makes the ride experience so compelling. so that you can see exactly where you are on the road. You can see your wheels. You're sort of like a part of the world when you're driving an Arcimoto. But we think, certainly as we approach, sort of true mass production, it's going to be really important to be able to serve as many climate regions as we possibly can. So that's in the plans.
Beautiful. And speaking of production, when will that new assembly plant become operational?
So we're targeting Q4 of 2022, basically end of next year, and that we've assembled really a rock star team to tackle the scale planning for the company. Principally Monroe and Associates, but then we brought in a number of other folks to help with other key pieces of the project.
Okay, and Platform 2, when will that be revealed?
We have not announced a date of that reveal. Today's a good day
to do it.
What's that? But we're doing it this. We will show it this year.
Okay.
And again, that is a longer range. I don't expect to see production version of that product until, earliest would be late 2022.
Okay. Okay. And then global sales. What does the roadmap look like for that?
Well, we just hired. We expanded our exec team by 2 this year. One is with the acquisition of Tilting Motor Works. Bob Mile, the founder, became our chief tilting officer and is really driving the Platform 2 equation. And then we brought on Dilip Sundaram, who was a senior executive at Mahindra, overseeing a number of different really key programs for their global processes. And he is tasked with really building out. We get inquiries and pre-orders literally from all over the planet, and people saying, this vehicle would be perfect in India, in Ghana, in Europe, in South America. And it is true in the sense that the vehicle usage patterns all over the world, and particularly in places that are dense, crowded, small roads, that's what the Arcimoto platform is designed to rock. So what Dilip is putting together is, where are the big opportunities? Where are the low bars for getting into market? What are the right partnerships in order to initially, export vehicles? And ultimately, where are the places that we want to build Arcimoto product family vehicles all over the planet?
Beautiful. And when are you sending that model we talked about to the Benzinga headquarters in Detroit?
That will be coming soon. We got to get you in the driver's seat.
Okay, excellent. Thank you so much, Mark. You have been fantastic. Any final remarks for our retail investors and institutional investors here today?
Well, I think we're in a really interesting time in the electric vehicle, the electric vehicle market growth. I would just encourage folks to really think about, what is the next time you jump in your car by yourself. Think about all the empty seats that you're carrying around. I mean, if you had a balance scale, I'm on a good day, 200 pounds. A car is 20 times my weight, and it's really crazy that we all use those things by ourselves or with just one other person for all the simple trips. And that's what Arcimoto is really all about. Is not just electrification is necessary but not sufficient to solve the real problem. It's time to really rethink the patterns of mobility, and the shift to electric drive and the shift to autonomy. That's the perfect time to do it.
Beautiful. All right. Thank you so much for being with us today, Mark.
Thanks, Neil.
All right, guys. That is FUV. Check him out. Ticker FUV. Got to get me in one of those. Make sure you tweet at him and tell him to send a model out to the Benzinga headquarters in Detroit, Michigan, with a cute little bow on it. And next up, we've got Namara Medical. If I'm not mistaken. Yes, that's correct. Dr. Faz Chowdhury. How are we doing, Faz?
Very well, thank you. How are you?
I'm doing wonderfully. Thank you for asking. So for the folks that are not familiar with your firm, could you please tell us a little bit about your company and what you guys do?
Oh, yes. We've essentially developed the world's first non-invasive daily wear glucose sensor. So it's a wearable patch, you apply it on your arm, and every few minutes you get your glucose profile on your mobile phone. And of course, this is a game changer, both in the field of metabolic health, obesity, weight management, and of course, importantly, diabetes management.
Very interesting. And do you have a presentation for us today?
I do, yes.
I'm very excited to see this. This sounds very unique and disruptive.
Super. So I dive straight in.
Okay, so you should be able to drag your presentation onto the current screen that you have shared. Yep, almost there. You had it on the screen, and then you just got to go into presentation mode.
Okay.
Beautiful.
Super. Okay, well, thank you very much for that introduction.
Thank
you. Right, so first of all, just to mention that I will be making some forward-looking statements. So by way of introduction, as I just mentioned earlier, we've developed what is the world's first daily wearable non-invasive continuous glucose monitor, or CGM. And this is a Class 2B CE mark approved medical device. So far, we've launched this product which we've branded Sugar Beet. And we've also launched another program, called Beat Diabetes, with a view to managing diabetes, either to prevent diabetes or manage type 2 diabetes or help reverse type 2 diabetes. In addition, we plan to launch this year a mass market direct-to-consumer metabolic health application. And I shall be speaking about each of these in more detail. So to start with, what's the problem that we're trying to solve here? So obesity and diabetes, these are collectively two of the key drivers of the chronic disease epidemic that we face today. You have over 500 million, well, almost 500 million people around the world with diabetes. And that's a combination of type 1 and type 2. And approximately 90% of those are people with type 2 diabetes, i.e. a condition that is primarily dictated by lifestyle, diet, etc. And so the total addressable market is a substantial market. Our aim as a company, having developed the platform technology, we took the active decision not to go out there and just sell sensors and just be another device company that just sells sensors into the space. In order to add what we believe will be substantial shareholder value, we've decided to package it together with digital applications and other things in order to help either prevent, manage, or reverse type 2 diabetes. That's our objective. So our solution in terms of how we intend to do that is basically, first of all, to empower users with knowledge. And that knowledge is essentially derived from our device and our sensor. So you get your daily profiles, and based on that, you get guidance, you get insights into the extent of control over sugar levels. And, you know, I always use this analogy that using finger prick testing, which is what the bulk of people have been doing, is rather like, you know, watching, looking at the share price of any particular company at a specific point in time of the day and trying to decipher from that what happened before, what happened after. The point is, you don't know anything about what happened before, and you cannot predict what will happen after. So it's the same with your blood sugar level. Just having point-in-time measurement is relatively benign. What you really need is a full profile over the course of the day. And the idea here is that you now have a way of doing this in a very affordable and flexible way, i.e. it's daily use. You don't have to stick a sensor in your arm, and you don't have to keep it there for multiple days. Engagement, and by that what we mean is we have created digital programs and a digital ecosystem with a view to keeping the user engaged for the long term. This is not about a short-term fix it for a few weeks and then leave people to their devices. And the outcome we expect in all of this are obviously a reduction in various things that metrics by which we measure disease progression in diabetes, like HbA1c, blood cholesterol, blood pressure, and sustainable weight loss. The idea is to get sustainable results over the long term. And the approach, as I mentioned earlier, that we've taken is threefold. One is real-time glucose monitoring on a daily basis. Second is a program called Beat Diabetes, which we have launched in the US so far. And this is digital program for managing diabetes with a view to either attaining substantial control over diabetes or reversing diabetes. And this is supported by our technology platform for glucose profiling. And thirdly, the metabolic health program that I also mentioned that we will be launching towards the end of the year. So items number 1, the CGM and the Beat Diabetes, these we have launched. And the mass market consumer metabolic health program is in beta testing, and we plan to launch that this year. And just to mention again, in terms of the market size, unfortunately, I mean, it's a vast market. It affects a large number of people, and currently there are, if you combine just UK, Germany, and US, you have almost 50 million people that have diabetes. And in the US alone, currently, almost 28,000 people are diagnosed with diabetes every single week. So as a result of that, the impact on healthcare is phenomenal. And on average, what you find is that approximately a healthcare provider or insurer will spend on average 2.5 to 3 times more on a person that has diabetes than somebody who doesn't have diabetes. So of course you can imagine the cost burden is also quite substantial to both health insurers and the economy and employers alike. And what we believe is that we have a highly cost-effective program, both in terms of the device and the digital application, that could well be a game changer in terms of both providing something that is now affordable and that can be deployed to the masses, but also by virtue of the flexibility of not having to stick a sensor in your arm and just keep something on the surface of your arm for up to a day at a time, or 12 to 14 hours at a time, that could well bode very well with the users, who then don't have to be lumbered with the device for multiple days on the trot. So I will go now very briefly into each of the products, the SugarBeat CGM, the Beat Diabetes Program, and the Consumer Metabolic Health Program. So SugarBeat, as you see there, that transmitter is worn on the arm. The sensor sits on the surface of the skin. We do not insert a sensor inside the skin. That is the key differentiator between our device and competitor devices. And with the competitor devices, you have a filament that is about 1 centimeter long that's inserted in the skin using a rather large needle. And that stays on the body, on the arm, for between 10 and 14 days. In our case, the device sits on the surface of the skin. The sensor is a bit like a Band-Aid. It sits on the surface, and you peel it off and you throw it away at the end of each day. And as I mentioned, this is a CE-approved Class 2B medical device. So you apply the sensor on the arm, you see the glucose fluctuations over the course of the day, and the objective is that that knowledge will empower you to make the appropriate decisions and to help physicians and carers to help you make those decisions to be able to better manage your condition. And one of the key benefits regarding looking at your profile as opposed to just HbA1c is that, if I move to here, is that you could have exactly the same HbA1c, yet completely different glucose profiles over the course of the day. And what is becoming now the gold standard of monitoring this condition or measuring the condition is actually to look at the time in range, i.e. what extent of time over the course of the day do you spend within a narrow band, because that is far more important than just a HbA1c value, for example. And the more fluctuations you have, the worse the long-term prognosis is, and that's why it is so important. And of course, this then allows you to do that, and it gives you that insight as to what is really happening inside your body. In terms of where we are with sales on SugarBeat, we recently announced that we have we worked for many months with our UK licensee, and as part of the soft launch, which was extremely successful, they have now placed orders for 200,000 sensors, and then 100,000 approximately per month on a rolling forecast basis for the next 2 years. And those are the initial estimates, and we expect that potentially to be a lot more than that. And so that's in full swing. And then the other thing I would mention is that even in the UK, our UK licensee has taken the approach not to just go and sell sensors, but to sell it as part of a diabetes management program, which is provided on a subscription basis. In Germany, we are discussing now partnerships and collaborations with some partners that we've identified that we believe would be the ideal partners moving forward. And we also submitted for reimbursement to the GBA. The good news is that they've come back and said the GBA do not need to do a full review, and it can go straight to the National Association of Statutory Health Insurance Funds, which means that it will make the process a lot quicker. And we expect that to be 3 to 6 months. And so whilst we are finalizing our collaboration plans, we hope to get reimbursement in place. And of course, as soon as then an agreement is signed, we intend to start selling into Germany, which is, of course, the single largest market in Europe. In the Middle East, we have had a partnership with a company called TP MENA, which is backed by an $8 billion group in Saudi Arabia. And the registration process there is in full swing, and we expect that registration to be completed in due course. And on completion, we will then start selling devices into that territory as well. Briefly on Beat Diabetes, we launched this program in the US, and we have two aspects to it. One is our device, which will do glucose profiling to indicate how lifestyle factors are affecting your glucose levels. That is being combined with a clinical program we in-licensed that was originally developed at the Joslin Institute for Joslin Diabetes Center, which is, of course, one of the leading centers of diabetes research in the world. And we've combined the two to what we think bring to the market is a compelling product for the both management and potential reversal and stabilization of type 2 diabetes. And in terms of the glucose profiling I mentioned, the objective behind that is based on sound clinical evidence that has been demonstrated in the past, whereby they've shown clearly that by doing glucose profiling, by just doing 7 finger pricks a day, 3 to 4 days at the end of each month, has provided enough data to provide guidance to patients to then make improvements for the subsequent month and so on and so forth. And that's really the principle on which we're basing it. So the key message there is that we are not reinventing the wheel. If anything, what we're doing here is we are automating, making easier, making scalable a process that is already well demonstrated for the management of type 2 diabetes. And the current status is that we've already commenced a pilot in the US, and we expect up to 200 participants. And that pilot we plan to run for up to 2 years. And the idea is to gather feedback and data and to basically support our marketing development with insurers and employers as we move forward. And of course, we anticipate multiple additional parallel pilots in the near term. So metabolic health, finally, the last thing I wanted to talk about. We've intentionally decided to develop a product for metabolic health. Why? Because if you add it up in terms of the obesity market, weight loss market, pre-diabetes and diabetes, you've essentially got almost 1 in 2 people that are potential customers for this product. And of course, we are empowered because we have the device technology that allows us to sell a service like this to the market. And there'll be more about that in due course. As I say, we're in beta testing, and we do plan to launch this year. In terms of future products, we have continuous lactate monitoring, a sensor we've developed, and we are doing studies on that before we look at launch dates for that. And then there's temperature monitoring and also alcohol monitoring, cortisol monitoring, potential drug monitoring. And these are future pipeline product opportunities that we will be looking at actively. In terms of the team, we have been building a world-class team now that we are at that inflection point of generating revenues. And so far, our senior level appointments include people with experience from companies including Dexcom, LifeScan, Roche, AbbVie, and Eli Lilly. And of course, we are being very selective in terms of the individuals that we bring on board. And the idea is that to build those teams to be able to support both our direct-to-consumer launches as well as to support our partners and licensees around the world. So in summary, our UK launch is in full swing. With census ordered and projections given. We expect a partnership with a partner in Germany and other EU territories in due course. We're targeting broader adoption of the Beat Diabetes program I mentioned that is being launched in the US. And we expect broader adoption by insurers and employers, and we're engaging in those discussions as I speak. And by the end of the year, we expect certainly to have some significant parties on the board, at least doing pilots on our program. And the device I mentioned is a CE Mark Class 2B approved product. We also filed a PMA in the USA, and that is in review. So we expect to provide updates as well on that in due course. And of course, the metabolic health program. So over the course of the months, and certainly before the end of the year, the market can expect to see what we consider to be a compelling proposition for the B2C market with a one-of-a-kind sensor which really provides a significant USP for us when we get into that market. And from a financial perspective, we are fortunate to be in a very strong position with over $31 million on the balance sheet as it stands. And we've always had a very low cash burn rate, and currently it is still less than $2 million per quarter. That's all I have to say. So I shall revert back to any questions that there may be.
Wonderful presentation, Fuz. Thank you. So we do have a couple questions. Given your current cash on hand, do you anticipate a dilutive cash raise of any type this fiscal year to meet current delivery forecasts?
Well, as I mentioned, our balance sheet is very strong. Our cash burn rate is very low. Combine that with the fact that we are now essentially going to be reporting revenues in due course. So we do not therefore anticipate the need for any dilutive fundraise whatsoever. And even going back, even if I go back over the last year, bear in mind the bulk of our fundraising, despite the opportunities that were presented to us for dilutive fundraisers, significant dilutive fundraisers, we did not take the cash. We took clean debt. And there was no dilution. And at this point in time, I can assure you we have no intention of taking dilutive fundraising.
Beautiful. All right, and then this will be our last question. When do, and if you can answer, that's great. When do you expect a response from the U.S. FDA and approval as guidance was for?
We're in discussions. The review is happening. When I look at the Abbott Libre, Abbott is a very large company, and the amount of time it took, I guess it's right now we don't have a clear indication of timing. But as the discussions progress, I do hope to be able to be in a position in the coming months to be able to inform the market of exactly where we are and what we anticipate that approval timing to be. So I would rather not make a premature guess at this stage.
Fair. So given that our audience is comprises retail investors and institutional investors, what is one thing that they should keep in mind when they think about your company?
There has been a lot written about non-invasive monitoring. The one thing people forget is that technology moves on. And through incremental advances in technology, we are able to then develop new products, new applications. And this is essentially what has happened. And so there's always been speculation about, well, what's the feasibility? Well, we've proven it. We've now validated it. We now have a product, the first of its kind, out there. We're now selling it. We have purchase orders. And so what you can see now is that leading on from this UK launch, there will be other territories that we will be launching into gradually, steadily, and we will be generating revenues. Not only that, we have a product that the likes of very large companies out there with tens of millions of user bases would certainly like to get their hands on the device for metabolic health applications. Yet, the USP is the device. We can easily wrap around the digital application around it, and that's precisely what we've done, rather than dilute the value to us as a company. So therefore, as investors, they can expect to see some quite exciting things over the course of this year, I would say.
Yep, I can hear the sound of hundreds of investor imaginations being stimulated by that statement. Thank you so much, Vaz, for being with us today.
My pleasure. Thank you very much.
Thank you. All right, guys. Next up, we have Biotricity. We have Waqas Al Sadiq, the CEO, chairman, and founder of Biotricity. How's it going?
Not too bad. How are you doing?
I'm doing wonderfully. Thank you for being with us today, man. For the folks that are not familiar with Biotricity, could you please give us an introduction?
Absolutely. So, Biotricity, we're a remote patient monitoring company. We're focused on real-time cardiac diagnostics. We really saw a gap in the marketplace where, connected devices and the idea of monitoring is actually passive recording in healthcare, where you take devices, you put them on patients, you record data, and then 2 weeks later you get a report. And we felt the future was real-time monitoring. And so we built a real-time monitoring platform, applied it in cardiac because it's the #1 problem in the world. And, we have a pipeline of products to basically go deeper into the space and have an award-winning product that is growing quite rapidly in the marketplace today.
Great introduction. Do you have a presentation for us today?
Absolutely.
All right, fantastic. I'll get out of your way, sir.
No problem. And just to kick things off, I just want to thank everybody for being here and attending. As customary, a quick forward-looking statement to just talk about, the conversation that's going to be taking place, and some of the things that I'm talking about are future oriented statements, and there are elements of subjective judgment and analysis that may or may not prove to be correct. And with that said, we're very excited right now at Biotricity. We think it's an exciting time to be looking at the company. We're certainly very excited about 2021 and 2022. And as I kind of alluded to is in the premise of the company and how Biotricity got started, because I think that's an important element to really understand the fabric of a company and where it came from. And we saw this gap in the marketplace where passive monitoring is what's the standard. And we talk about monitoring, but really it's passive recording. And what that means is data is put on a patient, but it's downloaded and reported on after a couple of weeks. And so that's great, but for high-risk patients, it doesn't work, right? Because high-risk patients, you really need to respond immediately. And COVID certainly amplified this this issue and showed us that when we're going to self-isolation, when we're getting patients out, we really need to focus on providing data in a quick and in a fast fashion. And so our device has built-in cellular technology. It's a one-piece solution. It's worn around your neck, underneath your shirt, and it's used for arrhythmia monitoring. And when it detects an emergency, because it's a smart device, it transmits it to a call center. The call center reviews the data and deals with emergency response. Now that product is being used by 1,100 cardiologists across 23 states. I know it says 700 cardiologists, but we've grown since then. We did $1 million in our last quarter, but we're already, which was a run rate of 4 million. And now at the end of last quarter, we were already at a run rate of 7 million. We have close to 100% retention rate and 100% reorder rate, which means we have very, very big stickiness with our customers. And they're staying with us over a period of time. We started the product in April of 2019. We got clearance earlier, but 2018 was spent figuring out insurance, launched the product in 2019. And since then, we have been growing month over month and have had 23 months of consecutive growth, except for 1 month related to COVID. And we've got multiple FDA submissions in the pipeline, and we are very excited about the future. And to kind of talk about the future and talk about why we are looking at the cardiac market. So cardiac market is the #1 killer. 30 million people at risk in the United States, 17 million people have diagnosis. And the issue is, and again, accelerated by COVID, is that physicians need an integrated approach within their practice. They need to be able to diagnose and prescribe monitoring equipment to patients that have multiple diseases, and they need to be able to do it from their office, as opposed to sending the patient across the street or to some third party to do the lab or to do the diagnosis. And the reason for that is because you lose track of the patient, right? And you have to do the follow-up. And so if you can hook up the patient, if you can send them on the way and then bring them back, it improves physician liability, reduces patient risk, and improves the speed to diagnosis. And so our future and our roadmap and what we're doing at Biotricity is really about understanding the patient life cycle. And so today we are in the world of diagnosis, right? We're helping diagnose. But after a patient gets diagnosed, they get a prescription or they get an interventional procedure, and then they go into management and continuous follow-up and coaching. And so our product roadmap and what we want to do at Biotricity is really to touch more and more of these circles as we go on. And the advantage of that is, we already have an ecosystem platform, as I mentioned, 1,100 cardiologists across 23 states, but we're only touching a fraction of that population because not everybody needs diagnostics on a monthly basis. So how do you touch those patients more often? Well, you have to provide solutions that address other needs that those patients are having. And that does two things. It helps you go deeper within your network, but also increases your total addressable market. And so, what does that do from our perspective in our product roadmap, which I will talk to shortly. The BioFlux is $1 billion market. That's our product right now. When we bring in our next product, which is the BioTray, hopefully later this year, that's a $3 billion market. Our TAM increases by $2 billion. Then we go into disease management. That increases our total addressable market to $30 billion. And then you keep on increasing this TAM with another product solution, and we end up with a $50 billion market. And so, whereas we had one product addressing, one market, we then have 5 products that are exponentially growing our total addressable market. And so that's what we are super excited about at Biotricity. And we think that 2021 for us this year is an exciting year because we are executing on this product roadmap, and we are focused on bringing some of these products to market. And so if you talk about today, right? So today, 100% of our revenue is the bioflux, which is about 5%, right, of the patient population. So, what does that mean? Let me kind of quantify that. We have 1,100 cardiologists, each approximately see 2,000 patients. So you got 2.2 million patients, but we're seeing a small, tiny fraction of them because not all of them need diagnosis every month. It's diagnostics is once a year kind of thing, right? You diagnose the patient, and then you check their diagnosis the following year or 6 months later to see if something has changed for the baseline. So what we will see is that Biotricity is going to really move into more of a more touch points, right? So the next product, BioTray, which is going to hopefully come out later this year, it's going to have a 10% usage. This is for low risk patients. Then we've got chronic cardiac, which is around the whole disease management program with remote medicine, remote delivery, collection of data from the patient, additional touch points. That is a much higher volume product, lower revenue for sure. But what will end up happening is that since there's a lot more touch points there and there's a lot more addressable population because you're touching more patients in between diagnostics, you'll see this shift in revenue. And that is what is exciting for us, this transformation that we're on the cusp of by executing on our product roadmap. And so the question is, why remote monitoring? Why are you guys doing this? Why is this important? Well, in one aspect, COVID has certainly shown, the importance of real-time monitoring and non-passive solutions. And this is why global remote patient monitoring is exponentially growing. CMS has already come out and said, hey, real-time monitoring is the future. And one of the biggest problems is this lack of cross-compatibility. And this is why when we originally launched the BioFlux, this idea of compatibility, right? Where, cardiac devices don't communicate with diabetic devices. There's no integration. There's no sharing of data. Sleep apnea is siloed out. And so we really focused on creating interoperability because we know that a cardiac patient does develop other diseases, and so eventually they may need or have a requirement for access to other data, and so we can bring that into our ecosystem. And so today, what is our product? What are we doing with the BioFlux? We talked a little bit about it. So we have a real-time monitor, as I mentioned. It's hung around your neck. It's got 3 little points. It collects your data. But what it's really doing is it's actively monitoring the patient. It's an intelligent device. So you put the device on. If it detects an anomaly, it alerts the call center. So for high-risk patients, you're talking about patients that if they were on a Holter product, they would not survive. And so this is a solution that is helping them and getting them into the hospital and speeding up diagnosis. And our business model is a technology as a service model, which is a very critical component of Biotricity because we focus on this SaaS model. We don't want to do the procedural work. We want to let the physician do it because that's their expertise. And so whereas the traditional approach in the space is send the patient across the street, get the test, and then come back to me, where the doctor makes $25, here the doctor hooks up the patient, diagnoses the patient, bills insurance directly, and instead of making $25, they make $500, and we make between $250 to $300 on per use. And so the patient comes in, gets a device, goes home, comes back, gives the device back, doctor cleans it up, puts it onto the next patient, and every time it's used, we generate a revenue, as does the doctor from their diagnostics and their clinical work. And so that model not only is economical and valuable to the physician, it also creates a technology as a service model for us, which is very unique in the healthcare space. And why is MCT important? Why is it critical? As I talk about, high-risk patients, you got patients that have large pauses or emergency situations. Passive devices just don't work, and that's why you can't have long-term monitoring. And most of these issues are intermittent, so long-term monitoring is important. But then again, it creates higher risk because if you don't have a connected device and you send a patient out for a week, they can potentially have a heart attack and not make it. And that becomes a big problem, and that's why real-time monitoring is the future. So, kind of simplifying and kind of distilling down, what is the BioFlux today? It's a device, it's a third-party monitoring center, and it's all the data available to you, on your tablet, phone, laptop, wherever you need it. And all insurance reimbursable under existing CPT codes. And so if you take the competitive market in the landscape, there's really 5 players in the space. And I would say even less if you talk about it, because the reality is that Preventus Solutions, which just got acquired, don't actually have their own device. They're using a TZ Medical Scott Care device. So there are 5 brands, meaning Preventus, InfoBionics, BioTel, us, and TZ Medical Scott Care, but there's only 4 people who actually own technology in this space, which is real-time monitoring, not to be confused with Holter monitoring or passive recording. And I'm going to oversimplify this slide, but it's basically we are cheaper, better, faster. We're the smallest, most accurate device in the market. We have the most channels, and we've consolidated the device into one piece instead of giving the patient a device plus a cell phone so they have multiple things to keep track of. And most importantly, outside of a disruptive business model, the cheaper, better, the disruptive technology model, cheaper, better, faster, we have a disruptive business model, which is an in-sourced business model, which allows the physician to bill directly with insurance. It gives a recurring recurring revenue for the physician, and it allows us to have a technology as a service model with high margin for Biotricity. And again, the model is the reusable device. Doctor puts it on patient A, brings it back, cleans it up, puts it on patient B, and he or she does this once a month for 2 years, because the lifetime is 2 years. So the device generates us, $7,000 in revenue on a cost of goods of $383. And so our footprint today, 1,100 cardiologists across 23 states, over 300 different sites. We are super excited about this. This is growing. And because we have 100% reorder rate and nearly 100% retention rate, we're not losing customers. So every month we grow. So, the largest month in company history was December of 2020 until January of this year, until February, until March, until April. And now May will be bigger because we sold in April and we opened up many new centers in April and hospitals. And May will be, so May will automatically be bigger because those sites will start turning on. And so talk a little bit about our future products. We talked a lot about BioFlux, what we're excited about. We have this product, BioTrade, which is really a Holter product. So the idea of going deeper into the accounts for lower risk monitoring. This is a simpler device. We're waiting for our 510K clearance on it. We are super confident with our process with the FDA. We've cleared multiple devices, and this device is a much simpler device than the BioFlux. It's essentially a simplified version of the BioFlux for a market that is low risk and doesn't require real-time capabilities. So this will be upcoming this year, and this will increase our total addressable market from 1 billion to 3 billion. Then we've got this telemedicine that we've integrated with our system, and the idea here is, again, to be able to enable direct shipping of the BioFlux into the homes of individuals. This we accelerated because of the pandemic to make that available to patients so that they did not have to go in. And this, again, creates an interconnectivity between the patient so that there can be engagement remotely, and again, allows another touch point into our ecosystem. And then we've got the application, the BioFlux app, which is coming out, which is really around disease management. And everything that we do at Biotricity is aligned to CPT codes, right? We provide technology as a service to the physician where they have a business model and a revenue because it aligns with the existing CPT code. So a doctor can adopt a technology that we provide, as a company, and they immediately have a path to bill for it and collect revenue for it. So that's a very important thing, because one of the biggest issues and hurdles in healthcare is how do you commercialize? And to kind of talk about a little bit about, the market competition, what's going on, because I think a lot of people ask us about, where we are, right? We're small, we're growing. We've done triple-digit growth since last year to this year. We'll do triple-digit growth this year. We'll do triple-digit growth next year, right? But we are also very beginning. So people talk about a company like BioTelemetry, which was acquired for $2.8 billion recently. But BioTelemetry started in 1994. They launched their first real-time product for 2002. So they've been around for 2 decades. They spent hundreds of millions of dollars, right? We've spent, a fraction of that cost. So we're very early in our life cycle. You know, it's kind of like a toddler compared to a university graduate. Yet we are growing way faster, and we can accelerate that growth compared to some of these bigger guys. So I think investors have a real opportunity where they're like, okay, Biotricity, you know, today is going to have triple-digit growth in 2021, triple-digit growth in 2022, but we can also grow even faster than that. And so it won't take us as much time to achieve those big values. And I think that is a very exciting aspect of what we are doing today. You know, another company we talked about, Preventive Solutions. It got acquired for 1.2 billion and did 158 million in revenue. And again, they launched their product in 2012. So again, been around for a decade. You know, we've launched our product in 2019. We've been around for 2 years, and yet again, the same thing. We're growing faster than Preventis is. So it will take us a lot less time to get to evaluation, to comparative valuation. So I think that's a fantastic opportunity for investors and a fantastic opportunity for the company to shine and show its effectiveness. And then I think a good comparison to who we are is really the Livongo, right? Livongo got acquired for $18 billion. And Livongo was very interesting because Livongo started as a diabetes glucometer company, and then they went into diabetes management and really about focusing on more touch points with the patients. And then they ended up getting, you know, this approach of in-between visits. And that's really what Biotricity is doing. If you look at our product roadmap, what are we doing? We're doing diagnostics, then we're doing lower end diagnostics. So we started at the most complex space, right? High risk patients, and then going into disease management, just like Livongo went into disease management. And I think that is the exciting thing, where if someone is trying to compare or look at us, they really should be looking at the Livongos of the world or the Teladocs of the world, as opposed to a traditional cardiac diagnostic company. And so I think that aspect of our company is missed by the markets, obviously, from my perspective, because, you know, we're all, you know, it's just the nature of being a smaller growing organization. But I think that's also is the big opportunity. And so, you know, the last other product that we have, which is really going into prevention and is a consumer-oriented product, which is the BioHeart. Again, very simplified version of the BioFlex, but for personal engagement and personal usage, for lifestyle management, for people who don't need a diagnosis but are concerned with their cardiac issues, so they can, you know, purchase this. And this is something that we're going to launch this year. Pre-orders are already available, and we're super excited about this product because it's, again, another touch point. And, you know, to kind of summarize about the team and what's, you know, I always talk about the team and we talk about team, and I'm going to talk about this at a high level, because really Biotricity's team is really broken up into three kind of groups, right? We have sales. Everybody comes from the startup experience. Everybody has experience in launching multiple products. And so that really lends itself well for our space. Operations, people who have gone through scale, driven companies from 5 million in revenue to 250 million in revenue. And management, again, around engineering and products and being able to launch products, multiple products over 30 countries. And the takeaway here is we have brought on people that have not only done something recently and done it before, but they've done it multiple times before. And they have specifically gone through the process of scaling companies. And that's, you know, very exciting and a testament to the team and the growth that we've been able to do, which is, you know, triple-digit growth through a pandemic is a testament to that. And our board, you know, similar kind of thing. We've attracted people from different walks of life with different experience, as well as our advisory board, from people who have operated, from people who have come from the financial industry, all to kind of coalesce and create this, you know, this group mind think that brings in a variety of expertise, all designed to accelerate and scale an organization. And with that, I will turn it over for questions.
Well, I think we're actually just about at time. We actually don't have time for questions today, Wakas. Thank you so much for that presentation. The company is Biotricity. You've been fantastic, man. Thanks for being with us.
Thank you. Thank you for taking the time. And next time for questions.
Yeah, well, next time we'll have time for questions. Have a great weekend, man. All right, guys, that's Biotricity. Let's get that ticker back up on the screen, please. BTCY. BTCY. All right, guys, next up, we have got Solar Integrated Roofing Corp. CEO David Massey. David, how's it going, man?
Hey, it's going great. Thanks so much. Happy to be here.
Wonderful to have you. we are at that time of the day where we're crunched for time. So I'm going to get myself out of the way and let you do your thing.
Okay, sounds great. Excuse me. I'm going to cover kind of the history, products we carry, and our where we are now and where we think we'll be. If you take a look at this home, this is kind of the new modern home that we think is coming. We feel like we're a roofing, solar, and EV charging company. We have 3 different revenue streams, and we feel like that's kind of the solid part of our business, because in a lot of areas when you get a lot of rain, it's impossible to do solar and EV charging, but our roofing division is very, very busy answering calls and generating revenue. So this house itself has solar panels on the roof, energy efficient roof, and has EV charging in the garage. And we feel like in the next 10 years, every home is going to look like this. And our goal is to acquire companies throughout the U.S., get good partnerships with them, and be able to complete that for as many homes as we can. This is a safe harbor statement. I won't really touch on that. It just lets you know there might be some forward-looking statements and some of the numbers I give you. This is our corporate overview. You know, we have a lot of history and we have a lot of experience. You know, our model is a roll-up model. Give you an idea of the first 3 roll-ups we did. First was my original company, which has been in business 32 years. And then we acquired a company, Montrose Roofing, that's been in business 20. Then we got McKay Roofing, been in business 40. Then we got Millhall and Solar Electric's been in business 30, 35. So we have a lot of good partners and a lot of good experience. That was a basis of us getting started and getting into the industry. These numbers you're looking at are a little bit dated. Give me an idea. Showing revenue, fiscal year in 2020, 9.1. Excuse me, the calendar year revenue 9.1. Our 2021 revenue should end up, our fiscal year is February 28th. Our fiscal year should end up being about $18 million as of February 28th, 2021. What we're excited about is since then, we've been able to double in size. We're currently right at a $45 to $50 million run rate in the 3 different divisions, which is obviously solar and roofing are the strongest revenue streams, and EV charging is, we just opened up the division last fall, and we acquired Plimco, which are doing a great job. They're seeing a lot of increased inquiries about doing proposals and doing some government work. So our goal is to have kind of an equal share of revenue get balanced out over the next 18 months. And so our revenue stream is broken up over the 3 categories. As far as the market opportunity, the roofing industry is about a $50 billion industry. The solar industry is a $40 billion industry. Our current administration is committed to installing 500,000 EV charging systems in the United States between now and 2030. So it's really the hottest sector, the hottest market. We're working diligently on getting the key partners in the key areas to make sure that's very much a part of us. Because if you think about what makes a charging station most effective is having solar on the roof that's charging the charging station to obviously cut down the cost when you have an electric car and the cost of fuel and energy going up. That's ideal. And oftentimes the roof itself is aged and dated and is not capable of taking a new solar system that's going to last 25 years. And so, you know, all 3 revenues could happen on one project, and that's always our goal. Give you an idea, in the solar industry, there's a lot of different ways it can be done. There's sales and marketing companies, there's install companies. We do both. We have a sales team, we have a marketing team, we have an install team that's managed by our president, Brian Mulholland. So we encompass everything in the entire process, from design, permits, install, sales process, and the entire process. So our business model is we buy roofing companies, preferably at a low valuation, add the solar piece to them, double the revenue, and hopefully double or triple the valuation of the roofing company. And they go hand in hand. And the key of it is there's still a nice 26% tax rate. And if you're doing roofing and solar at the same time, and the roof has to be replaced at the time of solar, you can actually combine the two services together, make it one project, and maximize the tax credit on the entire project, which makes it very, very attractive for buyers that are looking at roofs and knowing that energy costs are going up and electric vehicles are coming. Battery storage solutions. Millhold Solar Electric is a Tesla battery certified dealer. He is our only, he's a Brian Millhold, and he's our solar brains and storage brains and charging brains of the business. And we're finding that with the changes in the way electric companies handle the fires here in California, that we have a lot of blackouts on the windy days. So storage has become a more popular piece that we're adding to our solar systems to add the revenue and just do the complete energy savings on the single house. Excuse me. Excuse me. Electric vehicle charging solutions. As I mentioned earlier, it's the hottest industry that there is. We're very excited about Plemco, an acquisition that we did in Orange County early this year. The owners of Plemco have a lot of experience. They've been in this field for about 8 years. They're a GSA, government approved contractor, so they get invited to bid all the government work, and obviously the government's really putting a lot of focus on building the EV network throughout the United States, and we feel like we have an opportunity to really capture a very large piece of that. Roofing service is a very key component of what we do. It's kind of where we started. And we started as roofing companies, and we merged into a solar roofing company, and now we're a solar EV company. But it's a key component. I mean, you can't put a solar system on a bad roof. So you'll find a lot of our bigger competitors only do solar, and they can't deal with the roof piece, so they have to sub that piece out. So we feel like that gives us a large competitive edge to put a high quality, energy efficient roof on with a solar system and then possibly an EV system. Our roofing and solar marketplace is nationwide. We have offices in Southern California, San Diego, Orange County. We have offices in South Carolina, Oklahoma, North Carolina, and Arkansas. So we're getting a pretty good sized footprint. We're working with several other opportunities now to get acquired, and our goal is in the next 60 days, double in size again. And I think we're very capable of doing that. This is kind of the process. We're putting the roof and solar on at the same time. As I mentioned earlier, we do all the work ourselves. We're fully licensed. We have a C46 solar license, the C39 roofing license. We have an electrical license, and we have a general contractor's license. We do light remodels, light woodwork as part of the job, so we can take care of our customers all at one time when they have needs, when we're work on their house. We can take care of several different projects of different sizes and different ranges with all our different licenses. As I mentioned earlier, we're in Southern California. That's where we started. We recently acquired Cornerstone Construction out of South Carolina that moved us to the East Coast. We're really, really hot on Texas now. I think we got some good opportunities in Texas to get in Texas, and Texas is a hot solar and roofing market, and and they're storm driven, and the Texas area, the southeast get a lot of storms, and that market is just amazing about the kind of revenue that can be created. And so we feel like that as we're in these storm markets, we can very easily add solar to the piece and double the revenues of these different roofing companies. The management team, as I mentioned earlier, is a very, very strong management team. I'm obviously the CEO. I've been I've owned and operated my own business since 1990. Secure Roof was the name of my business. It got acquired by SRC, and that's how we got started. Brian Milholland is our president, and he, as I mentioned earlier, he has over 30 years experience. He is our solar side, electrical side genius. I'm more the roofing side, and he also handles EV as well. Excellent skills, great teamwork. I mean, something I have to say is, as this has been a constant learning experience, and it's been very, very exciting to build and get to the place that we are. We've developed such a great team. Seems like every time we do an acquisition, we get 2 or 3 just key people that fill in some key spots for us. It's making it easier to grow all the time. Jennifer B is just a little dated slide. She is no longer with us. We're currently looking for a full-time CFO. We're looking for a high-quality CFO because we're looking to uplist to the QB here very, very quickly and get the audits done and be fully SEC reporting by February of next year. The key takeaways of our business is, we really feel like we have the perfect model. I mean, I realize that roofing isn't as sexy as solar and EV, but it's a revenue driver, and it gives us the opportunity to work 365 days a year, where we can actually, when bad weather and other companies aren't working, we're actually, we're working harder than ever because we have a very, very solid foundation in the roofing industry. And if you take a look at this revenue stream, those numbers look pretty small, but it looks like just in the month of May, we'll do about 3 million. Month of June, we'll probably do closer to 5, and probably month of July, we'll do closer to 7. So we're growing at a very, very rapid rate. We have a large pipeline of acquisitions that are teed up that we're working very diligently with. We think they'll be part of the family very soon. Nice thing about it, we have the money in the bank to make those things happen, so we don't have to sell any shares to raise the money. And that's always a concern of the shareholders. We're trying to get the acquisitions and increase the value of the company at the same time. That is the completion of the slide presentation. I'm happy to take any questions if we have time.
Yeah, I think we have time for 2 questions. So the number one is what's the ticker, guys? That's SIRC. That's scrolling across the bottom of your screen. So I have a question. So you're doing roofing, you're installing solar panels. I'm sure that you see a new world, maybe 5-10 years from now, where a lot more Americans have solar vehicles and they're charging them at home and they're using a solar roof to displace the cost of pulling from the grid. With that said, how is your company adapting to that world, and how are you doing it differently than perhaps some of your peers or competitors?
We're not really adapting to that world because we're in that world. That's what we do, and that's what we specialize in. It's being increasingly more popular to add an EV charging system to a solar and roof job. And I think, again, the big advantage that we have is we do all 3 items. We can take care of your roof, we can take care of your solar, we can do an EV charging, we can do a solar patio. We can, we have a lot of different skill sets. Unlike some of the specialty companies that only do EV charging or only do roofing or only do solar, we feel like we have the right 3 revenue streams to be a complete company.
Fantastic. All right, David, thank you so much for being here with us today. And
My pleasure. We enjoyed it. Thanks so much.
All right, guys, that was Solar Integrated Roofing Corp. The ticker was scrolling across the screen, still is SIRC. Next up, we have Vivos Therapeutics. We have Kirk Huntsman, the CEO. Kirk, how's it going?
Going great, thanks.
What can you tell folks about your company and what it does?
Well, so let me get this presentation up here. Can you see that?
Yeah, and you're using a Mac, it looks like. Yeah, so you want to hit the presentation down on the very bottom right of your window.
Okay, let me do
right
that.
there.
There you go. All right. Thank you, everybody, and thank you for having us. Vivos is a company that is poised to really make a huge difference in the sleep and breathing wellness market, specifically addressing the needs of patients with obstructive sleep apnea. So let's kind of just go through this and get the cautionary notes out of the way. A lot of people are surprised to hear that there are over 1 billion people on this planet with obstructive sleep apnea, and that 80% or more of those people are undiagnosed and untreated. And you know, we used to think that sleep apnea was no big deal, but now we know that sleep apnea is comorbid with all those things you see on the right there. We're talking about cardiovascular disease, we're talking about chronic fatigue, hypertension, bruxism, crowded teeth, chronic headaches, aggressive behaviors, Alzheimer's disease, dementia. This condition of obstructive sleep apnea is absolutely deadly, and it's pervasive. And so Vivos is uniquely poised here. But the fact that there's so many people out there beg these questions. Why are there so many people suffering from OSA, and why are so few receiving treatment? If 80% of the people don't even know they have it and they're undiagnosed and untreated, what's going wrong here? And we believe there's two main barriers. And the first is that the doctors don't know who has it. People sleep through their sleep apnea. And when they do show up finally at their physician's office and say, I've got daytime drowsiness, I have no energy, I'm having all these other issues, hypertension, the physicians then, it used to be that they had to write a script to go have the patient go to an in-lab overnight sleep test. Well, now we've introduced a brand new technology to address that. But the second issue is that modern medicine hasn't been able to fix this condition. And so, let's face it, treatment options for sleep apnea are horrible. They're unappealing, they're costly, they're often ineffective, because who wants to wear a CPAP? Nobody wants to wear that thing, and it's only worn by people who have no other better options. So along comes Vivos with two really important breakthrough technologies. In the upper right-hand corner, you see a breakthrough technology that is our diagnostic product. We call it Vivos Score. In the lower left-hand corner, we have our oral appliance therapy that is actually presented through the dental offices, and I'll explain what that does here in a minute. So we are a medical technology focused on the commercialization of an innovative diagnostic and therapy solutions for patients with sleep-disordered breathing, including mild to moderate OSA. So let's talk about our diagnostic product for a moment. It's called Vivos Score, and it's a simple ring that goes on your finger that is suited for both. It's approved, FDA cleared for both children and adults. And what it does is it hooks up to your cell phone, and you just put the ring on your finger. It automatically syncs up via Bluetooth. You go to sleep, you wake up the next morning, you take the ring off, and the doctor, within 10 minutes, the doctor has a full overnight sleep test. The important thing being that it's the accuracy on this new technology is very, very close to being the same as a full-on polysomnogram, the in-lab overnight sleep test. So here we have a home sleep test approved for children and adults with about a 95% cost reduction over the in-lab polysomnograms, and we're bringing that to market throughout North America and eventually elsewhere. But we're under a license for that. We work with a company out of Colorado right near us called Sleep Image. They've licensed us for that. We have an exclusive license for that, the distribution. What you're seeing on the screen now is our therapeutic product. So once we identify patients that have this condition, the question is, what do we do with it? And how are we advancing the state of the art? Well, these oral appliances that you see on the screen in front of you, this is not some sort of medieval torture deal. This is actually a very comfortable oral appliance that's worn in the mouth in the evening hours and overnight. And within a matter of months, a patient can realize a change in their dentition, their anatomy, the positioning of their jaws, and it opens things up. I'm going to show you here in a moment. Let me tell you what sleep apnea basically is. First of all, an apnea is when your airway closes down. That's an apnea, and you can't breathe. And so the number of times that happens through the course of a night's sleep, the number of times that happens an hour, gives the clinician something called the apnea-hypopnea index. Now I'm giving you the sort of the layman's view on this thing. It's a little more complicated than this, but it's effectively counting up the number of times that your airway collapses. Severe sleep apnea over 30, mild to moderate, which is where our indications of use are from the FDA. But our doctors tend to treat the full spectrum. Let's look at what we do here. So we have a patient here, a 30-year-old male on the left-hand side. These images are actually three-dimensional images. We're showing you a two-dimensional frontal view, but these are actually three-dimensional images where we can actually identify and isolate the colorized area there on the left is all the red and yellow and blue. That's actually an airway that's prone to collapse. It's severe sleep apnea. You'll notice that after wearing our appliances for 14 months, again, with no appliance in the mouth, his airway is gone and the volume has doubled and the area has tripled. And so this case, actually, this guy finished treatment back in 2018 and he's still walking around here in 2021 with the airway on the right. No further intervention, nothing. So here's another 73-year-old male patient, 17 months in treatment. You can kind of see the same technology at play here that has taken and more than doubled the volume of his airway, the capacity of it. And you'll just see that this is a huge difference in the ability and the capacity of that airway to process things. You can show you here, this is his airway isolated out of that image. And you can see here again that with no appliance in the mouth, his airway is much larger, much more, much less prone to being able to be collapsed. In 17 published studies, we showed a mean airway AHI reduction of 67%. That's almost unheard of with no intervention in place. So typically what you see in tests is you see all these different modalities, and the CPAP, for example, they test the patient without the CPAP, and then they test the patient with the CPAP. And they say, well, this is how far we've reduced it. At Vivos, we test the patient before we start treatment. Then we can test them mid-treatment, but after treatment with no appliance in the mouth, they're done. They're 12 to 24 months in and out of treatment, and they then have an airway that is open and no further need for intervention in most cases. And we have these other modalities that you see on the screen here. They're either surgical, which is a risky and more radical approach, or they require lifetime nightly use. So you have to haul your CPAP machine around with you on vacations, on business trips, etc. Not with Vivos. We actually, you're in treatment, you're out of treatment, you're done, and your insurance company's paid part of the freight, and you're ready to roll. Our company has a revenue model that basically has a services sector to it, or services bucket, let's say, where we actually have training fees that the doctors pay us to be trained in this. They average, we call them VIPs, that's Vivos Integrated Provider, about $28,000 to $30,000 per provider to get trained. And then we actually, those guys, once they get trained, they start doing cases. We get $1,600 to $1,800 a case. We have about 85% margins on our training and about 75% margins on our appliances. So we're roughly an 80% gross margin business. We also get recurring support revenue fees that add to our overall bucket there. So just to give you an idea for the economics, the dentist will charge between $8,000 and $10,000 for a case. Again, about half of that's going to be paid for by insurance. The patients will be charged at $9,000, about half of that being covered by the insurance, as I said. And then the doctor will have overhead of around $3,000 and a net take-home margin of about $6,000. This is very comparable economics, by the way, to what dentists are used to with something like Invisalign, the Invisalign cases. And in fact, we modeled our go-to-market strategy, and our model pricing model was modeled right after the Invisalign people at Align Technologies. Again, the CPT codes for insurance reimbursements, we get pretty broad coverage across the country in the US with very, very few. There's a couple of insurance payers that don't cover our products, but almost every other payer pays on us. We're talking United, most of the Blues, Anthem, Aetna, all of them cover our products here. So what have we done here? We've actually taken and put through the dental profession, we've put an opportunity for them to screen their patients with our Vivo Score products, begin a dialogue about their airway, and then have a solution that is where they work collaboratively with the medical profession towards a treatment plan that involves our therapeutic products, and that happens in the dental office. We have Aero 2 is our commercial grade software platform for managing airway patients in the dental office. Extremely easy to use and very effective, and facilitates a lot of production. We have an airway intelligence service, which actually helps the doctors with every case to diagnose, treatment plan, give them a sense of what to do, how to do it. We have the medical billing services through our billing intelligence service. We have our Institute for Sleep Medicine, and that institute is active at training, mentoring, providing backstops for the doctors if they get a case that they need help with. Our insomnia clinics, now we've opened up, we're about to open our third one. We've opened 2 in California, one in Del Mar and one in Modesto. These are owned by physicians, and then they are given over to they contract with the dentist. MyoCorrect is the oral myofascial therapy that we just recently announced and acquired. It adds a whole new revenue stream to us. Our company has been growing rapidly, and we have been adding products and services along the way. We think we have some strong competitive strengths. There's nobody out there that has a technology like what we have. There's nobody that can do what we do. There are other dental appliances on the market, but they're strictly a mechanical advancement of the lower jaw. It's called mandibular advancement. Nobody allows for what we allow for, which is the remodeling or the repositioning rather of the tissues in the dental cavity, in the oral cavity. So our dentists work within the scope of their profession, their license, to assist as part of the clinical team that's going to address the patient's condition and overall health. And with all of the FDA clearances, all the research that we have, all the things that we've accomplished, it's very difficult for somebody that's going to catch up to us. When the world begins to realize what we have, the technology that we're actually able to do things, what we're able to do rather, I think we're going to see some real growth. You can see on our historical numbers here, from a gross revenue standpoint, we went in 2018 revenues of 3.8 million to 11.4. So we were growing very, very rapidly. COVID, last year, 3 or 4 months of shutdown in the dental profession, and then a slow climb back out sort of left us with a 15% growth pattern. But we've seen some real pickup in Q1. We have an earnings call on Monday where we'll announce what happened in Q1. We'll announce some things, give some ideas on how things are going here in Q2. But let's just say that we have an incredible bounce back that's going on. We've raised a little over $50 million in the last 6 months with our IPO, and then just last week we completed a follow-on offering. So we're in great shape from a cash standpoint. We're in great shape from a marketing standpoint. We're getting leads, we're getting calls and leads all around the world on our Vivo Score announcements. So we feel really good about where we are in the stream of things and what our future holds.
Hey, Kirk, this is Neil. We are at time. So final remarks, please.
Yeah. So I got a great team here. This is our leadership team. Our board of directors is absolutely, top drawer with the people we have on here, industry professionals, government, contact people that have all kinds of experience and background. We're beginning a trial at Stanford. The future just looks very bright for us in a very large market with a unique and value-added service. So we see a lot of good times ahead for Vivos.
Wonderful, Kirk. Thank you so much for being here with us at the Small Cap Conference.
You bet.
All right, guys, that's Vivos, ticker V. What was it? VVOS. Yes, I nailed it. VVOS. Good ticker because it sounds like the name of the company. That's how you do tickers. All right, next up, we've got Worksport. Worksport, baby. Steven Rossi coming on the screen. Worksport. Steven, how's it going, man?
Pretty good. Up here in Canada, sun shining. We're feeling pretty good. Happy to be in front of the Benzinga audience again.
Now, I want to know what's behind you. Is that actual wood, or is that a background, a fake background?
It's a Worksport mystery.
It's a Worksport mystery? Well, I like that branded logo on the wood. It's rustic and it matches. I feel like it matches you, and I like it.
Yeah, I appreciate it. We feel it fits really good.
That's everything I see I like so far. I want to hear about the company.
Sure. Yeah. Happy to present again. And I'm just going to kick it right off. So, hello to everyone again. Thanks for tuning in, I guess, on my presentation. For those who know me, hello again. For those that don't, my name is Stephen Rossi, and I founded Worksport in 2011 with a passion for making products better, simpler, and beautiful. I started this company to bring innovation to a market that simply lacks innovation. Worksport started as a producer of tonneau covers for pickup trucks. Much like Johnson & Johnson started making baby powder before becoming what it is today. To put it into reference, pickup trucks are the #1 selling vehicle in North America, and covers like ours are the first purchased item for these trucks. Trucks are now getting exciting, right? The Tesla Cybertruck, the Hummer EV, the Rivian RT1, the Lordstown Endurance. We're just not in a small market anymore, and we're in an extremely enviable position. Let me explain why. Worksport launches products from the ground up. That means we start from concept, move to prototyping, testing, and user group evaluation. Consider us an R&D think tank in the automotive space. We heavily focus on intellectual property assets, which is arguably one of the most important aspects of our business. We now have an IP portfolio of about 27 IP assets, including utility patents and trademarks, ranging from China to the USA to globally, and a lot more down the pipeline on the IP side. These IP assets represent countless numbers of development hours and is one of the core competitive strengths. We also own all of our own designs, tooling, processes, facilities, equipment, and that gives us a massive competitive advantage and positions us to continue to be the market disruptor through innovation. First, let's talk stock. Our ticker symbol is WKSP. We're traded on the OTCQB market. The stock's traded anywhere between 35 cents in the past few weeks, and its 52-week range has been 5 cents to 85 cents. We have 165 million shares outstanding, and our market cap somewhere around $47 million. Of special note, in my opinion, is the lack of long-term debt that we currently have. That provides us with a great deal of financial flexibility as we look to finance our growth going forward. We'll talk about that a little bit more in the future. We believe that the key to growing a brand in manufacturing is offering a full line of products. This means ensuring that today's customers can have all their needs satisfied by Worksport and anticipating their future needs, all while keeping them in the Worksport ecosystem. Worksport already offers a full line of innovative truck bed covers for every major make and model truck in North America. We're working towards expanding even further with new, never-before-seen products and applications for the broader, expanding global pickup truck market. Unlike most, we don't rely on outsourced overseas manufacturing or white label buying. That's when a company buys a factory's catalog item under their brand, kind of like what Walmart does. We manufacture our own products directly in our own factories operated by us in China. This means that we are in total control from design to production to quality. We're also setting up our first North American manufacturing facility. This is going to be home to our most innovative and elite products, and we'll be getting the keys the first week of June. This is going to be the state-of-the-art facility, and we're super excited about this growth. We work very hard on maintaining innovations. Before we began in this market, previous leaders sold the same models with no changes for 20 years or even more. Trucks have changed. We're innovation stales. We can thrive. Our forthcoming solar renewable energy products are innovations that we're very excited about entering, and we're entering a whole new market. We'll get into that in just a minute. We participate in a very broad market, which taps into virtually limitless revenue channels. We put these kind of revenue streams or channels into buckets. Our first bucket is our conventional truck bed covers. There's two major markets. Both are huge and growing. We sell our design products directly to other manufacturers. This is called OEM manufacturing. We also sell premium products under our brand, the Worksport brand, through channels like business to consumer direct, e-commerce marketplaces like Amazon and Walmart and eBay, or through business to business to any of the 60,000 automotive businesses in the USA. This is called the SEM, or specialty equipment market. These markets are huge and growing. There are over 60 million pickup trucks on the roads today in the USA. The average spend for a truck cover, our conventional, more boring lineup, is $600. That represents a $36 billion gross market. But wait, it gets a lot better. I said we're innovators, right? Disruptors, and that's where things really get interesting for Worksport. We've been working hard on our hybrid energy systems for 5 years. A market disruptor we've named the TerraV system. This new product lineup vastly opens us up to the global consumer markets. That includes tonneau cover markets, the pickup truck specialty equipment market, the OEM markets, the EV markets, and the battery storage system markets. We're able to realize revenues from OEM, private label, consumer direct, military, and disaster relief channels, to only name a few. The cumulative size of those markets is forecasted to be in excess of $24 billion in just the next few years. With our new products, only a modest 5% market share, that could amount to $1.5 billion in top-line revenues for Worksport. We said it in 2015 that it was not a question of if, but when our beloved pickup trucks would become electrified. Now, we have literally dozens of EV pickup truck nameplates coming. With the EV rush comes the challenges from the stress on an already overdrawn electrical grid. To range and plug anxiety, Worksport is pioneering this market and launching its TerraV system, a system that has been in development since 2015 with a series of utility patents and divisional patents. The TerraV system vastly broadens Worksport's market size, scope, future, and opportunity. It is the first of its kind, and I like to describe it as a mobile solar power generation system. And it consists of 3 monetizable major systems. The first is the cover, the most advanced folding truck bed system the world has ever seen. We believe it's leaps and bounds ahead of anything else and is designed to go anywhere. Worksport's ingenuity paired with an aha moment resulted in us outfitting our most advanced truck bed system with solar panels that will be able to generate mobile power off-grid. The second innovation is our battery system called the TerraV's Core. The TerraV's Core battery system will store and deploy power from the solar cover in up to 4 batteries, each having a huge 1.5 kilowatt hour capacity. The Core battery system will power almost anything. The third market is we'll also launch universal microgrid kits to make power possible anywhere around the world and for any applications like trailers, RVs, campers, sheds, and homes to pop-up systems for events and emergency relief, disaster relief. A universal offering of the TerraV's Core and battery system paired together with a universal rail system. But the TerraV's Core has many ingenious features, such as the ability to be charged from multiple sources. You'll be able to charge it off-grid with your TerraV's cover, but you'll also be able to charge it by any wall outlet or 12-volt power source. Once the battery is fully depleted, just swap it out with a new one. That's our modular system. We also have a very interesting feature that we've patented in our system called hot swapping. That's why it's available for medical applications, so that as the battery's dying and you have a delicate medical device connected to it, you can remove the depleted battery and replace it with a charged battery without the unit dying for about 15 to 30 seconds. And this is where our system really starts to stand apart from anything else that has ever been done before. So let's recap. The TerraV is a huge breakthrough because it opens up 3 huge markets. It can be a passive, low-voltage charging system to tomorrow's EVs trucks, providing up to 30% of the power needed for the average commuter with 0 emissions or carbon footprint completely from the sun. We also have offerings for many EV trucks as possible, including the Rivian, the Lordstown, the Tesla, and the Atlas XT as they become more available. We've already forged OEM partnerships with 2 EV nameplates, one of which is in talks with Nissan. To date, we've identified possibly as much as $70 million in foreseeable TerraV's OEM sales within its initial launch. And we've only just kind of begun. As Worksport gets closer to launching the TerraV, we see OEM demand increasing. We'll obviously put TerraV units in front of buyers at all major EV manufacturers in the very near future. With the onset and adoption of EVs comes tomorrow's problem. Where's the power going to come from? The TerraV endeavors to be the answer. With Worksport having $45 million in market valuation, we believe this positions Worksport as among the most investable companies in the market with a very bright future. But as discussed before, the TerraV will also be available to install in today's conventional trucks that are gas or diesel. With the TerraV installed, it will turn any truck into a mobile micro power grid. For the weekend warrior, do-it-yourselfer, contractor, photographer, and first responders, the TerraV will make getting off-grid that much more possible and convenient. You just don't have to worry about where the closest plug is. Worksport has successfully tested various products to market over the years, selling millions of dollars of product as a result. This allows us to analyze the market's appetite for our products when we launch them or before we launch them. We had near profitability in 2019 from just simple pre-launch market testing. That shows just how successful Worksport is poised to be. With North America's pickup truck sales outpacing all other vehicle segments 2-to-1, our market size will only increase along with the barrier to entry, putting Worksport in an increasingly enviable position. Worksport will continue to grow its market share by focusing on private label business as a stable and profitable revenue channel. We will launch full line of premium products at different prices and different designs from the private label business to direct to consumers this year. The margin increase from business to consumer is 50%. It's not an increase, but our gross margin can range in excess of 50% once we go consumer direct. In some instances, even 100%. And with the economies of scale and those prevailing as we grow, margins will increase, of course. Once we got a strong market presence, we'll backfill our revenue channels via B2B attribution partnerships, bolstering future growth. The Teravis will start as a consumer direct product, which is poised to be on the cornerstone of our anticipated explosive revenue growth. We will have pre-production Teravis core systems in our hands in less than 60 days. The Teravis solar cover is in late stage design and testing. Both are slated for soft launch later this year with a full global market launch in 2022. To recap, unlike most consumer goods, the Teravis system is not just a single sale unit, but a system where customers continue to purchase accessories from us to fit their evolving lifestyle, from more batteries to tool bags and storage chests, providing an exponentially increasing revenue model unlike brands before us. As customers' needs increase, they can easily purchase more batteries or accessories for the truck or system. Our modular system approach will result in repeat customers purchasing, dramatically increasing our revenue channels. The core battery system is appealing to the global market, not just truck owners. We're super excited about a universal microgrid system as well. We aim to launch these universal microgrid systems later on this year in a pre-launch setting and then full-scale launch next year with the Teravis core as well. Looking ahead to when EV trucks begin to travel our roads, the Teravis system will become synonymous with those truck models as the must-have accessory that will not only bring innovative utility to the truck beds, but as a source for off-grid charge energy without range or plug anxiety. Plainly put, the Teravis will be tomorrow's must-have accessory for millions. All of this while Worksport's team and management work hard on even more innovation. We're presently on the cusp of even more breakthrough products that will be announced in the very near future. So let's recap some of the financial strengths of the company. In February 2021, Worksport closed an oversubscribed Reg A offering, raising $4 million. To date, Worksport received $2.9 million from warrants as an overflow as a derivative from the Reg A, and we raised another $3 million in a non-brokered private placement. I actually think that's closer to $4 million now. And we currently have about $10 million in cash, and we have, again, zero long-term debt, no long-term debt. Worksport will deploy its cash in executing our business plan, including significant investment in inventory, manufacturing capability, research and development, and marketing and branding. The remainder of the funds will be deployed for our upcoming forward-thinking projects. That is all I have to say about that. If there's any questions, happy to answer them.
Wow. Incredible product, super innovative business model. We do have some questions for you, Stephen.
Sure.
The number one, I think, has to do with that innovative aspect. How are you protecting that innovation? Do you have a patent? How are you stopping other EV manufacturers from making the same thing?
I remember many moons ago, I've been in business since I was 18 for myself, and I've never looked back, and I've had a lot of mentors, my father being one of them. And I remember very clearly put, the statement was clear. You don't have to be the best always, but you should be the first. So we thought about this in 2014, and that was kind of unheard of. It was insane to think of a solar tonneau cover in 2014, especially one that folds and connects amongst its folding panels. So we filed a PCT or a series of PCTs that are on a global scale patent that you can start drawing down in certain countries. And then you can also divide those patents. What divisionals are is, as opposed to it being a solar cover with folding panels, you can divide one patent to speak specifically to the solar cover and specifically to the interconnectivity of panels. So we've been forging a multitude of divisional patents from our parent. And we will protect our intellectual property with vigor. We have an outstanding intellectual property team, both in-house and the legal side. So as things get close to what we're trying to do, we'll definitely be protecting our rights with vigor.
Wow. All right. Now, what about the European market? Any plans to get out there?
So the core. So we're going to make the core with the standard U.S. plug, as well as all foreign plugs in major markets. So the core microgrid system for sure. Now, areas like, for example, the continent of Africa, some of Australia, Spain, and some of the less populated areas, pickup trucks are just thriving, and even in Asia. So we plan on deploying the Teravis as a truck accessory, as well as a universal microgrid, or just the battery pack. So imagine the core battery system. Well, we're going to launch the core pretty soon, so people are going to be able to see what it really looks like. Imagine a small box that's 25 pounds or 30 pounds that you could put in a cupboard, and when the power goes out, what happened in Texas, or what happens every year after hurricanes or natural disasters, you pop it out, you plug in your internet, your fridge, your TV, just to keep yourself occupied, and it's there when you need it. Plug it in to a solar panel to recharge any of the batteries, and away you go. So it's not a North American centric product. It's a global product, like even a colleague of mine in Bogota, Colombia. The power grid in certain areas is not stable. This could help mitigate a lot of those issues.
Absolutely incredible. And what partnerships are you hoping as an organization that you have not secured yet to get for that distribution that you think will be a big catalyst for growth?
So we're obviously it's obvious that the solar cover as a product is going to end up, we're going to build it for an RT1. We're familiar with the Lordstown and how the geometry is similar to the General Motors Silverado and Sierra. So we're going to build, prototypes for the forthcoming EVs and get them out there in front of the EV buyers, like the F-150 or the Hummer or the Lordstown. In terms of the core system, obvious distribution partners, we've been in talks with fairly large, retail outlets, and some of those names could be, but may not be, like Costco or a Walmart or a Home Depot in terms of big box retail. But we plan on just to maintain our market, like to avoid price erosion and to avoid over distribution and to really maximize profits. We're going to self-distribute. And if we could self-distribute going business to consumer, we maintain, all of those areas of margin, and we grow the Worksport name. But we've had lots of interest from private label entities. So we're a little weaker perhaps in foreign markets until we get strong there. We may hand off the distribution. But what we're most excited for, the first pecking order for us is Ford, Lordstown, Rivian, Tesla. Just getting the product in front of there and seeing what the appetite is.
And what is your current production capacity, and how is it going to grow over the years to come?
We're going to start with only about 250 capacity, 250 units of the core and 250 units of the Teravis solar cover itself. We're going to 250 units per day, and then that could scale. So we want to start small because it's such a high priced item. We want to make sure that we're fixing any bugs. We are doing that now, but you never know. Once it gets out to the broader market, but we plan on being able to scale up to about 4,000 units per week.
Okay. And then in terms of customer acquisition or retailer acquisition, could you just speak to your marketing strategy?
So we're business to consumer on at least for sure the Teravis core and the Teravis systems. There's going to be a business to consumer with OEM in the outskirts where Ford or Rivian may be interested, for example. But our idea is just to really focus a lot of human resource and capital expense on marketing, which builds a brand. And when you build your brand and you establish yourself as a thriving, that's why in the presentation I said backfilling. Once you've built your brand and there's an avid market, distribution comes to you and you could name your price. Whereas when we go to distribution initially, we're almost hat in hand, and they say, well, I want a 30% discount and I want a 2% rebate. But once you've built, your brand, distribution's calling you saying, we'll just take a 5% margin. We need this product. So we're always going to position Worksport in the most strengthful position, the strongest position in market. And that's going to be marketing, building our brand, and building our sales business to consumer, which really increases margin. So it's just a triple win, and then backfill business to business.
And I can see the brand being very strong. The presentation is very clear that you're treating your brand like in a very high quality way. For the folks that are retail investors, for the folks that are institutional investors, what are the things that they should be thinking about beyond just the idea of solar energy? What is the thing that they should be thinking about your company? So when they pitch it to their boss, like, hey, I want to put X amount of money into this, what's the one thing that you think is going to sell folks on this?
Well, what I want to note on that is we issued a press release stating that, of course, we've applied because of the successful financing. We've applied to list on a senior exchange, the NASDAQ capital markets, which makes us a lot more investable, we believe. We feel that if that were to happen, although there's no assurances of us being able to list, we're in a good position. But we expect that it could happen sooner than later. But outside of the NASDAQ listing, which isn't what you necessarily asked, is that I have to say this in not sounding cocky, but the Travers product was something that we conceptualized 7 years ago, and it's something that's only wowing people now. So you have to think, what have we thought about like what's being kind of held back in the R&D archives over the past 7 years? If what we're presenting to the world today that's blowing people's minds coast to coast, or at least globally, is 7 years old, you should just start to wonder, what does Worksport have in the archives? What's it really working on behind closed doors? And we're going to focus heavily on renewable green energy. And stay tuned for that. But it excites me every day what the future looks like. And it's renewable energy deployment. And we just feel that the grid, although we're a tier 1 country, USA and Canada, the grid's just going to be overdrawn as we electrify everything. So we're going to be looking at non-parasitic ways of deploying power, and that could be not limited to just solar.
Deeply intriguing. Stephen, Rosie, Worksport, thank you very much for being with us today.
Thanks for having me, everyone.
All right, guys. Up next, we have Synaptogenics. With us for that session is going to be Dan Elkin, MD, President and Chief Scientific Officer. Daniel, how are you?
I'm fine. Good afternoon, Neil.
Thank you. Could you tell us a little bit about your company and get us going?
Sure. Let's begin with the recognition of what one of the major problems today in the 21st century around the world, and that is neurodegeneration. And that's because the epidemiology of the world population is shifting toward the aging population. In the aging population, we already have in the United States alone 6.2 million people who have Alzheimer's disease. In addition, worldwide, we have 50 million people having this disease. By the mid-century, we're going to have 80 million people and 15 million in our country alone. So this is what I would call an insidious epidemic, and it's one of the major frontiers that is confronting the medical establishment in the world today. Yet today, there is no FDA-approved drug that actually treats Alzheimer's disease, the underlying disease, nor is there an FDA-approved diagnostic, despite billions of dollars being invested, and despite hopes that have been raised that a drug might actually treat the underlying disease. There is no such drug. The best we have are drugs that are like Band-Aids. They ameliorate symptoms. They don't actually treat the underlying disease. They may slow down a bit the degeneration results, but they don't slow the degeneration itself. So cognitive decline may slow down 20 or 30%, and that's what we may have heard in the last few years. What is Alzheimer's disease? Alzheimer's disease, by definition of my home institute, which was Neurologic Institute of NIH, where I was a program director for 30 years, is dementia in life, cognitive dysfunction in life, and amyloid plaques and neurofibrillary tangles at autopsy. Those are the pathologic hallmarks. The problem is that when you look at cognitive dysfunction and you try to relate it to those pathologic hallmarks, they're very, very poorly correlated. If we go to the next slide, we can see that not only Alzheimer's disease, but several other syndromes with different causes, different etiologies, also involve the loss of the brain synapses and wiring. The wiring of the brain is degenerating. That includes the nerve cells themselves, which are dying, the synaptic connections themselves, and the long wiring processes that link the neurons. So there are a number of neurodegenerative diseases, including Alzheimer's disease, most importantly, but others, such as Fragile X syndrome, Parkinson's disease, stroke, traumatic brain injury. The approach that we take is neuroregenerative. We believe that this is the first time that any company, any major approach has involved regeneration of the wiring. 15 years ago, when we were working at NIH and then at the Rockefeller Neuroscience Institute, where Senator Rockefeller and his family invited me to form a new institute for applying some of what we had learned at NIH. In those years, no one would have expected that you could actually regenerate the wiring that was being destroyed in these different diseases that cause neurodegeneration. But in fact, that's what we found in our studies of many different models of neurodegeneration. We found that we could restore the wiring. In the next slide, we see what are the essential elements of that wiring, the synapses, the connections between brain cells. And it turns out that while amyloid plaques and tangles are not closely correlated with the cognitive dysfunction that the patient has, the dementia that the patients have, the loss of these connections, of which there are trillions in the brain, that loss is closely correlated with the cognitive decline. And that is what has to be addressed. It's the elephant in the room that the industry has not been able to address and is only now beginning. We believe, following our path that we started more than a decade ago. Not many companies, but a couple are trying to follow suit, even with the same mechanistic pathway, to restore wiring. What does that wiring look like? In the next slide, you can actually see wiring in a dish, so to speak. On the left-hand side, you see synaptic wiring, connections between neurons and the neurons themselves that have been degenerated by, for example, soluble amyloid pre-plaque toxic proteins. On the right side, you see the same networks now treated with our lead compound called bryostatin, which is not a statin, but is one of a platform of compounds that orchestrates synaptic growth factors. These synaptic growth factors, such as BDNF, NGF, HGF, IGF, are all orchestrated by PKC epsilon, a particular isozyme that's in the pathway naturally in the brain, linked to a major gene, ApoE4, that's naturally occurring and naturally controlling the genesis of new synapses. This is what it looks like when you treat the degenerating networks with bryostatin or any one of our other platform compounds. You regenerate that wiring. And it doesn't have to be exactly the same wiring. It can be parallel paths that can take over the cognitive function. But this is the fundamental picture of the way we are approaching this disease, and which we believe we will see other companies following this model. And we're starting to see that now. But this is the model we have found is most relevant, and it's directly related to memory storage mechanisms that we identified at the NIH a number of years ago. It's that PKC epsilon synaptic growth pathway that generates new synaptic connections that we can see with 100,000 times magnification using the electron microscope. It's that mechanistic approach that also actually includes preventing amyloid plaques and tau that we believe is responsible for cognitive benefits that we have started to see are clinically meaningful in our early clinical trials. In the next slide, we see a patient who had severe Alzheimer's disease. He was at a mini-mental score of about 2 or 3, and that's indicated by the green circles on the left. When we gave bryostatin, which are those little arrows at the bottom of the panel on the right, with those little arrows indicating doses of bryostatin, we increased that mini-mental score from 3 to about 12. And as long as the target, which is our biomarker, PKC epsilon, was elevated, those are the blue circles, you can see the patient was doing well. not only with mini mental status exam, but with ADL severe, a clinically useful measurement of how the patient was doing. We, of course, recorded that this patient, while we were observing him over a period of several months, was going from a state of looking at the ceiling and hallucinating to a state where he could choose his food, converse with others, start to swim, engage in a number of activities, and not hallucinating. So he made clinically meaningful improvements with this treatment. So this is a biomarker following the effect of bryostatin on this patient. And we had other compassionate use patients that showed equally dramatic benefits. From this type of approach, we then went to pilot clinical trials, which are illustrated in the next slide. If we can go to the next slide. If you look over on the left-hand side at 0, that's where the patient's baseline values of something called severe impairment battery, which is the metric of choice for advanced patients. And I should emphasize that synaptogenics, in its pursuit of its neuroregenerative approach, has been looking at advanced Alzheimer's disease. The industry has almost eliminated looking at advanced Alzheimer's disease because they have been so singularly unsuccessful in having any impact on advanced patients. Our patients, on the other hand, have had that impact. And what we see is improvement. So we go from 0 to 3, eventually to 5 and 6 as the treatment continues. And even 30 days after all treatment doses have ceased, which is that dashed line, that fiduciary toward the middle, the patient is still benefiting. So there's a persistent benefit. And this is in the absence of what's called an NMDA channel blocker called Namenda or memantine, because it turns out that our drug actually controls the NMDA receptor and works through it on activity-dependent synaptic growth. For this reason, we don't include patients who have had baseline memantine therapy on board. The controls are the light green and the dark blue, as you see below. And so there isn't any question that there's a major improvement. And I want to contrast that improvement with the slowing of maybe 25 or 30% of the rate of decline that is seen with drugs such as Namenda or the latest Biogen and latest Lilly. These are not improvement over baseline. They're slowing of decline. We believe this is the first clinically meaningful improvement ever seen with drugs that persists for 30 days afterwards. This is the kind of data that has generated a promise for treating long-term patients. So that's why we are now engaged in a 6-month trial, NIH supported, the same approach with now double the number of doses, going after a sustained and even more marked improvement over baseline. In the next slide, we can summarize some of the key findings of our clinical trials to date. First of all, the drug is entirely safe. It's virtually clean. It doesn't, and the dosing protocols that we use, it doesn't have any side effects. We had the benefit of repurposing the drug because originally it was used as an anti-tumorigenic drug in higher doses for 1,600 patients and proved to be well tolerated. We're using considerably lower doses, and it's not just well tolerated, it's totally safe. In addition to this cognitive improvement over baseline, we've seen that this effect persists, and the drug effect increases as the number of drug doses increases. Again, I don't think this has ever been shown with other approaches. This is what's called a trend analysis that demonstrates that the benefit of the patient, this cognitive improvement, is a direct function of the doses that have been given, the dose level. Next slide summarizes a bit further that we don't use Namenda because it's an exclusion criterion, since our drug actually works through the PKC epsilon pathway on synaptic growth factors and also on the NMDA receptors. So blocking the NMDA receptors is not good for the effect of our drug. We have grant support that's currently going over during our trial. It's going over the 6 months. And we are now using patients who are advanced, again, advanced, somewhat contrary to what the industry has been forced to do, such as, for example, in the Biogen trial, where they're looking at very early Alzheimer's disease or even mild cognitive impairment. But we're still using advanced patients, but not the most advanced, not the most severe patients. In the next slide, we can get an idea of the pipeline that we are using. The first is we call PUFA derivatives. These are bryostatin-like compounds that we developed ourselves. We have composition of matter protection for those drugs, and they have equipotent and very specific efficacies as bryostatin, and we have, therefore, second and third generation compounds waiting online. These are the indications that we've demonstrated preclinical evidence, extensive preclinical evidence for this regenerative approach, where we actually see the synapses coming back, and then along with the synapses coming back, the cognitive functions being restored to normal. And these are some of the diseases that we hope to go after. The two that we hope to go after the soonest are Fragile X / autism mental retardation and attention deficit disorder with Fragile X, and multiple sclerosis. Again, extensive preclinical models, not only in our own laboratory, but in other laboratories as well. Our most advanced pipeline member is Alzheimer's disease, which is currently in a full phase 2 trial. In the next slide, we can compare what other companies in this competitive landscape might be doing. Although our market capitalization is really quite low compared to some of these other companies, such as Athira or Cassava. Our safety data, we believe, is very extensive. The specificity of how the drug works, the mechanism of action, inducing synaptogenesis and anti-apoptosis, means prevention of neuronal death, we think is uniquely served in our model, indirectly served in others who are using some of the same pathways. And the clinical confirmation that we've seen improvement, not just a slowing of decline, has been demonstrated with conventionally wisdom recognized metrics of cognitive deterioration, namely the severe impairment battery. On this basis, we believe that we have essentially pioneered a field that we're now going into with potentially de-risking the situation by having in the background other compounds as well and other indications that we hope to start on soon. The next slide, just introduce our CEO, distinguished neurologist, Dr. Tuckman, who advises us carefully on designing the clinical trials. Myself, having experience not only in NIH and also as the founding scientific director of the Rockefeller Neuroscience Institute, but also leading teams of multidisciplinary scientists working on this neuroregenerative approach. And the last slide, as a summary, to recap, we're a clinical stage biotech company. We're leveraging bryostatin, not a statin, but a relatively specific, isozyme-specific, and synaptic growth, anti-apoptosis specific compound, as well as other platform compounds. It should be recognized that these synaptic growth factors are deficient in the Alzheimer brain, such as BDNF. And so is the PKC epsilon, which regulates it. But that deficiency can be restored, as we demonstrated with our preclinical models. And it's that deficiency, we think, that is ordinarily not present in early childhood years when the wiring is being formed. What has been a breakthrough, we believe, that not only we, but we expect others to follow in our footsteps, will lead to a regenerative approach to the loss of brain wiring in a variety of neurodegenerative diseases, Alzheimer's disease being a leading one, but Parkinson's, Fragile X, stroke being other causes as well. We think that this could have a major impact as we go into the 21st century with the insidious epidemic of neurodegeneration.
Astounding. Absolutely astounding, Daniel. Thank you for walking us through that. I just wanted to really quick get one question in before we transition, as we are over on time. So if you don't mind, just one question.
Please.
Do you anticipate starting trials on additional indications this year? And if so, will they be using the synthetic version?
Two good questions. Yes, we do anticipate starting additional indication trials this year. Obviously, we have to be cautious in investing our funds. We are fully funded, although we would love to expand our bandwidth with partnerships and relationships. So that would accelerate our beginning those trials, but that's our intention. And you mentioned a very important factor, that is that we have now exclusive license to a synthetic form of this drug that Stanford University produced and now has exclusively licensed to Synaptogenics, so that we're well positioned ultimately to not only use the natural form which the Cancer Institute has provided, but now the synthetic form, which we believe is totally equivalent and which will give us unlimited access to our drug as we expand our indications.
Absolutely fantastic. Final question. How much are you curling on that bar in the background?
Pardon? I didn't hear that.
How much are you curling on that bar in the background? Just your workout equipment.
Every day.
That's absolutely fantastic, guys. Inspiring. I love the market for this. I understand the need. I'm sure our viewers do as well. Thank you so much, guys, for being here with us today. Synaptogen.
Thank you, Neil, for your interest and attention.
All right, guys, that is Synaptogen. Check them out. Not the first time. This resonates quite a lot with some stuff I've been reading over the past few years. The problem of Alzheimer's, cognitive decline. Seems like a very promising candidate there, and we haven't had many of those. So I know that I will be adding that to my watch list. Guys, up next, Cooler Technology Group. We've got Michael Moe in the house. Michael, how are you doing?
Hi, Neil. Hey, I'm doing great. How are you?
I'm doing wonderful. I'm super glad to have you here today, man.
Great. Thank you. Thank you. Great to be here.
Good. Glad to hear that you're doing well. Would you mind, for the uninitiated, giving us a brief introduction to your organization?
Yes. Yes. So I would like to first of all thank everybody. Can you see my screen by any chance?
Not yet. Not yet.
Okay.
So I'm going to add it now, and then so now people can see our little conversation in the background, a little behind the scenes. So what you want to do is drag your presentation over to that screen.
Can you see it?
So right now I see StreamYard. So I see that. I see what like your logged in experience for the stream. So you want to either click to the different tab or drag your presentation over onto that window.
Okay. Let me see. If I share screen, so can you see it now?
Now I see us. Oh, there it is. There it is. Okay. And just go into presentation mode. Beautifully done, Michael. Thank you.
There it is. Thank you. All right, Neil. Hey, thank you so much. Yeah, so thanks for everybody for being here on a Friday afternoon before a long weekend for some folks that leaving for a holiday next week. So I know it's past 5 p.m. on the East Coast time. Since if you're on the East Coast, since you're not at the happy hour, but with us at the Cooler presentation, I figure you must be like me. You're more on the nerdier side into the technology. So I took the liberty and I will present a little bit of a nerdier version of our investor presentation today, which is in addition to the business slides. I will show a few slides on the demonstration of our product and our technology. And I'll promise you there'll be fireworks in the presentation. And quick introduction about about Cooler. We come from over a 30-year heritage of developing carbon fiber-based thermal management solutions for space and defense applications. Our products are trusted by NASA to be used on the Mars Rover 2020 program, on the International Space Stations, and the numerous different aerospace and defense applications. Our mission is to take these space-proven technology and apply them to the world of lithium-ion batteries and electronics to keep them cooler, lighter, and safer. Our customers include the likes of Lockheed Martin, Airbus, Raytheon, and other commercial customers. Our technology target multiple billion-dollar markets, which we'll talk about, and our management team have decades of experience in technology product development, marketing, and public company finances. Quick introduction about the Cooler management team. My name is Michael Mo. I'm the co-founder and CEO of the company. I've been in the semiconductor and the technology industry for over 25 years. We're very pleased to announce that Keith Cochran, who has recently joined Cooler as our president and chief operating officer, he has spent 24 successful years at Jabil. Most recently served as the senior vice president of global business unit, responsible for their $3.7 billion smartphone manufacturing business in Asia. And he comes from a rich background in business operations, supply chain management, and manufacturing automation. Here's an overview of our products and technology. Our core technology is a carbon fiber matrix material that's very lightweight and conduct heat more efficiently than other materials. On the battery safety side, we have our Hydra Thermal Runaway Shield TRS product that's used on the International Space Station to store astronauts' laptop batteries, and the Microsoft Surface Pro safe without risk of fire and explosion on board. We also have the Lyra ISC. That's a technology that NASA invented to test for battery safety for space applications. And we became the exclusive licensee and commercialization partner for them since 2018. Now we're serving EV customers, electric aviation customers, and energy storage customers with this product. We also have our heritage thermal management solutions, such as the ERA. That's a technology that's on board the Mars Rover 2020 to keep the Sherlock instrument operating ideal conditions on Mars. As excited as we are about the space missions and programs, that's our heritage, we're more excited about the opportunities to apply these technologies into multiple billion-dollar markets, such as energy storage, EV, and 5G cloud computing infrastructures. To give you an overview, the global lithium-ion battery market will hit about $100 billion by 2024. We believe battery safety is a critical aspect to enable this $100 billion market. Lithium-ion battery recycling industry will grow to about $18 billion by 2030, and transportation safety is a critical component of that. EV market obviously is going to, it's forecast to grow very robustly from 3.3 million vehicles in 2019 to about 30 million vehicles by 2030. And needless to say, to keep those batteries safe will be very, very important. And the global thermal management market and device market will reach over $16 billion by 2024, driving by the proliferation of cloud computing, AI, and upcoming 5G deployment, where more data, faster network, and smaller devices are driving ever more increasing needs for better thermal management. Here's give you a glimpse of some of the products that we built. This is a product that we built for NASA that's on board International Space Station to store the astronauts' laptop in there, laptop batteries, as well as their the tablets in there. It's on there since November of 2019, and last year we shipped more of these onto the ISS for the Microsoft Surface Pro. To give you a demonstration, I'm pretty sure some of you have seen the danger of lithium-ion battery. Here, to give you an idea about how lithium-ion battery thermal runaway works, we have 4 21700 cells. We trigger one of the cells, went to thermal runaway, and then it propagates to all the neighbor 3 cells. So these are very small cells, but you can see how much energy it packs. So when you have these events happening in your energy storage products or EVs, especially on board International Space Station, this is a catastrophic event. Here's our thermal runaway shield product that's wrapped around 120 of those cells that you just saw. And we trigger 3 of those cells into thermal runaway. into 2 of the corner cells and 1 in the middle. So with our TRS protection, you won't see any fire, you won't see any explosion, and you won't see any propagation of the catastrophic event into the other cells. All you see those smoke coming out, our technology wraps all that stuff and protect both the neighboring cells and the environment from fire, explosion, and the ejecta that comes out of the cells. Here's another demonstration of the battery going to thermal runaway in a NASA high voltage battery pack. This is just one 18650 cell. You can see the force and the high heat can go through a aluminum enclosure. We've been working with NASA Marshall Space Center in developing our technology, putting our technology into future CubeSat batteries, small satellite batteries. In this case, we're showing a 16-cell battery pack that's with our technology with inside to protect the batteries in between each other and also from the battery to the enclosure. So we'll drill a nail through the battery. You see a lot of smoke coming out. That's the trigger cell going to thermal runaway. But you don't see any fire, you don't see any explosion, and you don't see anything coming out of the battery pack. So that meets the NASA safety requirement. Afterwards, you can see the battery pack. You have the trigger cell on top, but all the rest of the cells, they are fully operational, still intact, with our materials in between, and the enclosures are not breached. So our growth strategy is to collaborate and innovate with government agencies such as NASA, U.S. Air Force, Department of Energy to develop cutting-edge technology. Then we work with government and regulatory bodies such as the UN, FAA, DOT to bring awareness of our technology to be included in the future regulatory roadmaps. And then we apply these technology to commercial mass markets such as the energy storage, EV, and 5G computing. We take a multi-pronged approach to serve our customers in different markets. Most of our engagements start with engineering, design, and testing services. Once we develop a customized solution for the customer, we offer the product for sale or as IP licensing for high-volume customers. This allowed the customer to the flexibility of integrate our products into their supply chain and to make it more scalable and potentially lower costs for everybody. It's important for our shareholders to know that KULR's business model continue to evolve from being a component supplier to now providing more design and testing integrated service to our customers. And the next phase of our evolution is to provide total system solutions to address market needs. To scale up as a system provider to be more quickly, efficiently enter these markets such as EV energy storage and hypersonic vehicle thermal systems. KULR will actively seek partners for joint venture, technology licensing, and other strategic partnership models. The goal is to leverage our thermal design expertise and a portfolio of IP to create market-leading products, which KULR will take to market directly to capture more value for our shareholders. Some of the customer and the partner relationships, we supply technology to FAA, Federal Aviation Administration, to test for the battery safety for in-flight applications. The most exciting thing for us on that front for 2020 and 21 is our involvement with the Mars rover Perseverance that was launched last July and landed on February 18th on the Red Planet. We also work with NASA Marshall Space Center on 3D printing battery systems for manned and robotic space applications. On the commercial side, we've announced a number of commercial customer engagements as listed here. The near-term commercialization opportunity for KULR is to bring our TRS technology to energy storage, electric transportation, and battery transportation market. On the energy storage side, we announced our partnership with Volta Energy since 2020 for grid and enterprise energy storage products. We've been working very closely with them to testing for new safety regulations. We're very excited about this project, and we see great opportunity for it to ramp in volume second half of 2021 and all the way into 2022 and 2023. We recently announced that KULR became the official thermal management and battery safety technology partner for Andretti Technologies, which is the advanced technology arm of Andretti Autosport, founded by Michael Andretti. As part of the alliance, KULR will establish a thermal management testing and design platform for high-performance battery solutions with the highest safety rating, specifically designed for the Andretti's global racing enterprise. We'll also focus on co-developing and co-marketing battery safety and high-performance thermal management technology to serve the motorsports world, and then later on transition to the mass market EV applications. We'll be taking a page out of the playbook from industry leaders such as Tesla, Lucid Motors, where they start out with high-performance platforms like the Roadster and the Formula E platform, and we'll do the same with our partnership with the Andretti's. Start with the highest amp platform performance and populate to mass market applications. Here's a quick glimpse into our product development roadmap on the battery side. We recently announced our smart battery product for drone markets a few weeks ago. This is the first step for our overall strategy of targeting adjacent markets complementary to our existing battery safety and thermal management product. We intend to expand into additional e-mobility markets in coming quarters and years. And actually, the next frontier is to utilize our carbon fiber technology for fast charging, lighter, and safer batteries. We're exploring the configuration of these carbon fiber structure as part of a new battery, whether it's improvement on existing chemistry or solid-state chemistries. We start getting into the battery business, and actually inside the cell business, with the ISC license from NASA and NREL. We'd really like to see our carbon fiber technology to play an important role in the development of the future of the battery. We believe that KULR provides a compelling opportunity for investors. We've been trading on the OTCQB market since 2018 under the symbol KULR. Our goal for 2021 is to uplist to a senior national exchange. And we've been taking aggressive steps to achieve that. That include, we completed an $8 million registered direct deal at the end of 2020, which gave us a balance sheet to scale up our operations. We appointed new independent directors to meet uplisting requirements. And more importantly, we've been investing all part of our business to position KULR for fast growth for 2021 and beyond. Our space-proven technology, battery technology, is critical platform play for multiple billion-dollar high-growth markets. We have a robust and growing patent portfolio that's both developed internally and also through exclusive licensing arrangements. Our business model evolution is to transition from a component supplier to an integrated design and testing supplier, all the way to a total solution provider to capture more value for our shareholders. We exited 2020 with a almost 300% year-over-year growth in Q4, and we just announced that our Q1 revenue growth will be like 400% year-over-year. We're making significant investments in all areas of our business, from operation to sales to R&D to marketing. We look forward to a strong growth 2021 and hopefully on a senior exchange soon to attract more investor shareholders to join our mission to make the world's battery in electronics cooler, lighter, and safer. Thank you so much.
Watching you present is like poetry. I think the last time that you did one of our events, I said it was the best presentation ever. You were not kidding. There were fireworks this time. So cool, Michael. Everything that you're doing. The ticker is KULR. Guys, this is, as someone said, we've got someone here saying this is mandatory technology. Everyone here understands the need for this and what you guys are doing, and your existing partnerships are absolutely incredible. Real quick question, we got a couple here, but could you speak a little bit to the competitive landscape?
Sure, yeah. It is, we are serving new markets. Kind of our growth strategy, maybe worth repeating, is that we develop cutting edge technologies and then we apply to new markets. So on the battery safety side, I think that we're competing a lot with internal development from a lot of the big customers themselves. We take a holistic system approach. So we're constantly looking at new applications. We're being approached by new customers trying to solve new problems that doesn't exist in the past. So the competition is actually time and also competing with their internal resources to how to solve these problems. So yeah, that's really it.
Excellent. And any final remarks for our retail and institutional investor audience here today that you would like to leave us with?
Well, I mean, again, thank you so much for spending time with me on Friday. We'll continue to execute. We are building our team. Keith and new members, Tony, joining us, and we're expanding to a new facility that's 4x our previous facility. So we look forward to be uplisted on the senior exchange soon, and hopefully everybody can enjoy us for the growth and the success to come. Thank you so much.
Awesome stuff, Michael. Thank you so much for being with us, and have a great weekend, my friend.
Great. Thank you so much.
Guys, Cooler Technology, ticker KULR. My favorite tickers sound like the name of the company. Statistically, I'm not making this up. There's data to show this. Those perform better on average. All right. Tickers that sound like the thing that they do or the company that they are perform better. So big shout out to whoever picked the ticker. That's all I got to say about that. Guys, if you participated in our little quiz thing that we did through the day, our Slido, you were entered for a chance to win a lifetime subscription to Benzinga Pro, among other things. I'm going to list off some winners right now. Our winner for the Benzinga Options Newsletter subscription, lifetime, Chadwick Chan. Chadwick Chan, if you're here, come on the stage. All right, and while Chadwick is making his way up to the stage, our Benzinga Breakouts newsletter, our swing trading newsletter, lifetime subscription winner is Blue Roofer 99. Blue Roofer, come on up. Yeah, let's fucking go. And last but certainly not least, the winner of the lifetime subscription to Benzinga Pro, the best damn stock market and cryptocurrency now due diligence tool in the universe, Loco Nomad 2. Congratulations, Loco Nomad. You did it. You might have to settle down, hunker down, and play some Benzinga Pro. Play some Benzinga Pro. Yeah, you can play. It's like a video game. Stock market's basically a video game. All right, guys. Thank you for sticking with us for this May edition of the Benzinga Small Cap Conference. Hopefully you were able to find those little nuggets that I talked about. Discoveries of new companies, understanding of spaces, new landscapes that are going to be, as I'm going to take it from someone in chat, the battlegrounds of tomorrow. Because you know what? Here's this is coming from me. This is coming from Neil. FANG is kind of doing this. New technologies got to be doing this. All right. So this is the time to get on the ground floor for the really cool stuff that we're going to be talking about 5 years from now. And I hope that you guys got a little taste of it. So yeah, thank you for sticking around and the education. We had Brad Weber, my favorite options trader here, talking about. He kind of got in my head a little bit. It was like an options trading therapy session. I loved it. So hopefully it was beneficial for you guys. Hit that like button, hit the subscribe, hit the little bell. Why? Because that keeps our channel going so that we can keep providing this stuff to you for free. So at any rate, thank you for sticking around. I'm Neil Hamilton. This has been the May edition of the Benzinga Global Small Cap Conference. Have a good weekend. And as always, happy trading.
oh, oh.